in metros while also adding more to its menu. Now, this comes on the back of the success that Zepto has seen for its food offering. 30,000 orders per day. And CEO Adit Palicha says that a separate app has a significant consumer top-of-the-mind advantage, and he sees the economics work for a standalone app. Now, Swiggy is no stranger to this space either. In October, it launched Bolt, a 10-minute food delivery offering from restaurants within a 2-kilometer radius, and consumers are lapping it up. Within 2 months of launch, Bolt already accounts for 5% of all food deliveries. But it is important to note there's a slight difference in how each of them is doing this. Now, Zepto and Blinkit's 10-minute food delivery offering will offer snacks, beverages, meals that are prepared in their kitchens. And Zepto sources some of its ready-to-eat meals from local vendors. But on the other hand, Swiggy is offering 10-minute food delivery through its restaurant partners, and this is on its core delivery app, where it partners with restaurants to deliver dishes that require minimal to no preparation time, and this is strictly within a 2-kilometer radius. So here it is, the next big growth frontier for food delivery apps, which is food in 10 minutes.
Many reasons have been given for why banks have been finding a shortage of stable deposits. But here's one factor which is less discussed: the way in which Centre funds the states for centrally sponsored schemes. Until last year, an account was created scheme-wise in the bank for each state. The Centre and states put their share of the money for a scheme in that account, and when there was sufficient money, the bank, under instruction from states and Centre, released the funds to the beneficiaries. But since 2023, the central government has created a portal with RBI called the SNA Sparsh. SNA stands for Single Nodal Agency. Now the funds for centrally sponsored schemes don't go to the PSU bank accounts of the states from the Centre. Instead, it goes to the account created in the SNA Sparsh portal. The accounts are scheme-wise and state-wise. As and when demands are made for payment by a beneficiary or an implementation authority, the central and the state officers okay the amount, and the beneficiary is paid through the eKuber platform of the Reserve Bank of India. The advantage for the Centre is it makes just-in-time payments, and funds don't lie idle in the bank account of the states, like they used to earlier when funds for CSS schemes were transferred mechanically every quarter or month-wise. But the unexpected collateral problems for some parties are as follows. One, the states used to park the central funds in treasury bills, T-bills.
Thanks for staying tuned into Power Breakfast on CNBC-TV18. But in a somber news coming in this morning, tabla maestro Ustad Zakir Hussain passed away at the hospital in San Francisco at the age of 73. According to his family, he died due to complications arising due to progressive illness of the respiratory system. Reportedly, the 73-year-old musician who took the tabla to the global stage had been hospitalized for the last 2 weeks and was later taken to the ICU as his condition worsened. Ustad Zakir Hussain's career spanned over 5 decades, during which he was revered as both a national treasure in India and admired worldwide. The percussionist and one of India's most celebrated classical musicians received the Padma Shri in 1988, the Padma Bhushan in 2002 and Padma Vibhushan in 2023. Okay. And with that, it's a wrap on this edition of Power Breakfast on CNBC-TV18. Thank you so much for tuning in. Up next, Bazaar Morning Call.
Cool, 5-6% interest. The other casualty are banks, especially public sector banks, who are used to having this float in their current account. But now, some of the funds transfer is through the RBI portal, and hence banks have been seeing a slowdown in their deposits. The unspent money is seen in the central government's government cash balances. These were as high as 4 lakh crore up until October this year. Of course, the cash balances is not just the money assigned to the centrally sponsored schemes. It includes other tax money not spent by the government. But these cash balances have come down to nearly 40,000 crores in December. The central government is planning to move more schemes to this SNA portal. 10 states have already moved to the SNA portal in FY24, that's last year. Another 8 have moved this year. And by next year, almost all states will have moved to this portal. Again, not all schemes of these states have moved. Some ministries have worked faster than others. Short point, for the banks, it means less and less idle, stable deposits of state governments in their current account. Understandably, they are protesting. But the central government is clear. It will not backtrack on its just-in-time cash management, which is an efficient way of doing things. They point out that out of a total kitty of 20 trillion rupees or so in the current accounts of banks, the decline because of this government's transfer changes is only about 1 or 2 trillion rupees. And therefore, it should not be blamed too much for the illiquidity in the banking system.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
one of the best-known musicians out of India in a generation, over a generation, Zakir Hussain, no more, left us after health complications in the US. The family is now confirmed to CNBC-TV18 that he has indeed passed. I mean, really sad news coming in. Of course, there were reports and all kinds of things from last night, but I think this morning officially the family is now confirmed that he is no more. So that is the news which is coming in, and I think we're starting on a very somber note. Really one of the legends, living legends, as far as not just the tabla, but I mean actually, all musical instruments, collaborations with musicians around the world, and someone who really took Indian classical music to the world in more ways than one. So just an amazing musician of our times. I mean, I had personally the privilege of watching him here in Mumbai not very long back, and he was performing. I mean, just electrifying. If you guys have seen him play live, or of course otherwise as well. Nigel, Reema, morning.
Hi, I remember that Bar Taj ad, right? Of Zakir Hussain. It's an irreparable void that he's left in in the industry, and everyone, right, who's grown up listening to him.
Well, that's right, and he gave soul to the tabla. He took India to classical music to the globe as well, and will be missed. Condolences to the family and to the entire fraternity. It's a big loss towards the end of 2024.
And young as well, right?
Yes.
Just 73.
Yes.
73. So, I mean, that's the somber news, as I said, that we are sort of starting the day with. Now, more on that later, but we got the market to sort of talk about, address, and so let's start there and tell you what you need to know. Remember, the market here this Monday morning is coming after a manic Friday. Friday was, just quite something. We had a big sell-off and then a big recovery as well. But let's just start with, from the first point that you need to know. The big talking point this week is the 25 basis point cut, which is priced in by markets as far as the FOMC is concerned. It's almost fully priced in. The decision will be out on Wednesday. The market here, as always, will react to Asia, will react to it on Thursday morning. That's point number one. It's all largely, as I said, in the price, but the change can come as far as projections, Fed projections are concerned, as far as the economic growth, inflation, unemployment rate, etc. is concerned. And there is scope for significant changes to those projections. Guess what's happened to the 10-year yield? It went up 24 basis points last week. The last Friday's change was 7 basis points, and Friday to Friday, we've seen a 24 basis point move. It's the biggest weekly rise since October of 2023. So what's happening, of course, is that the dovish Fed is hurting bonds. But at the same time, at some point in time, we don't know when. I mean, it doesn't matter till it starts to matter. Yields get to a point where they start to actually hurt stocks as well. We're not probably there yet, but we'll have to watch this very, very carefully. Remember, US 10-year real yields are already above that sort of, traditionally what is seen as a danger zone, 2% levels. We're already above that at this point in time. At the same time, equity markets are doing very well. The S&P on Friday was unchanged. NASDAQ was higher. The Russell was slightly lower. But the implied volatility in the S&P is nearly at 2024 lows. I mean, stock markets are cruising along nicely, but at the same time, yields are also moving up as well. The other factor, of course, is the dollar. We got a one-week reprieve for the dollar. We fell from almost 107 levels to 106, and we're back at almost about 107 odd levels or so, just under it as far as that is concerned. Now, just to sort of tie up the levels here, the Nifty Bank fell to their respective 20-day moving averages and then saw very strong buying, which completely reversed and then added a lot more to a Friday session. And it was a classic case. I mean, actually, if you just look at the daily charts, almost exactly a touch at the 20-day. And then from there, a significant bounce is what we really saw. And I think that's the reason why I think maybe there is more here, at least on the upside. There is seasonality, etc. as well. And you don't want to stand in the way of strong sort of seasonality, which is essentially positive for this time of the year for equity markets around the world. So can we build on what we saw? I mean, the sell-off did not last, but the bounce was significant. So the levels then come into focus. The support first, it comes in around the 24,400 levels on the downside. But more importantly, on the upside, I mean, we need to take out 24,770 and 24,850 levels. So that's a zone to take out. And then we should eventually head, and it's not very far away, to 125 levels, which is nothing but the 61.8% retracement of the entire fall from the all-time highs to the recent lows. Nifty Bank, same thing. We held the key averages, which is the 20-day moving average, and then we saw a very sharp bounce back. Immediate resistance for the Nifty Bank stands at 53,888 to 54,467. This is the zone that the Nifty Bank needs to head to. And the near-term support basically comes in at about 53,350. I would say the skew should be positive as we start this week for a number of reasons that I already outlined. The GIFT Nifty will come up on your screen. It should give you an indication of how we're likely to start. Okay, that's interesting. We're around 50, but that does give you a sort of, it does give you an optionality. You're not starting 50 higher, 100 points higher, and then you're left chasing. At some point, you maybe start to get a bit of a buy on dips kind of price action. Najul.
Well, that's right. You know, it appears the markets have gone back into that buy on dips mode, and it appears that it wants to test higher levels as well. In Friday's trading session, it was a classical case, right? We went down to around the 20 DMA. We conquered that. In fact, then we took out the 50 DMA as well. So the Nifty, the lows on Friday, it coincides with the 20 as well as the 50 DMA. And we managed to close above both those levels on a closing basis. What's heartening to see is the flows. The FIs are back and they're showing us the money now. After 2 consecutive months of selling, the flows so far have been quite good. It'll be a little higher than this because even in Friday's trading session, they pumped in close to around 2,000 crores. So the FI flows have turned around. A few factors have played out. The state elections have gone in favor. You have a couple of large trades as well that's taken place. And the MSCI rebal as well. That's something that could have played out. And we know that the domestic flows have been good. So the SIP contribution, well, that continues at around 25,000 crores odd. So liquidity has turned positive both on the FIs as well as the domestic funds, which is good news for the markets. What happened on Friday? Well, the cash market buying was there from the FIs. And if you look at the future space, well, there was a bit of short covering that played out both on the Nifty as well as in the Nifty Bank. And that perfectly ties in what the FIs did. So they covered some short positions, they added some long positions. Overall, they continue to remain net short with close to around 59% of their positions on the short side. But in fact, we did see a bit of a short covering bounce that did play out, which aided that up move. So in terms of levels, the downside, I've been mentioning this level of from 24,400. That's important. Friday the 13th didn't really play out for the bears because we did see a good bounce of those levels. So going by the options data, you had a couple of strikes that were active. 24,400 is important on the downside. And going by the options data itself, since the 24,800 call has been fairly active, that level of around 24,950 to around 25,000, that will become a bit of a resistance mark in the near term. It's a stock-specific market, so I'm looking at 3 stocks out here. One is Page Industries. The stock moved higher in Friday's trading session, and it's bounced nicely. In the month of November, it went to those highs, and then, in fact, it corrected a little bit. But that dip has got bought into, and this move came on very, very high volumes. Just a note on Page Industries, though the stock is moving very, very well, it's still 10% away from the highs that we saw in October 2022. So keep an eye out on that one. The move came on high volumes. There could be some shorts in the system as well. So Page Industries is one. The other one is KPR Mills. That stock made a fresh 52-week high. You like to be with stocks that are making fresh highs. And there was a good amount of delivery-based buying. So I'll keep an eye out on that one. And finally, some of these stocks, there is that restricted sale of shares since they recently listed. Well, the one that I'm looking at is Travenues Tech. That one, in fact, you'll have a large proportion of the book that was locked in, or large part of the shareholding that was locked in, that becomes eligible for sale. And since it's a rather large sum, I'll keep an eye out on this one as well. So 3 stocks, Page, KPR Mills, as well as Travenues Tech.
Okay, thank you very much for that. By the way, data is coming out of China where the November retail sales have missed street expectations. They've gone up by 3%, lower than expectations of 4.6%, and much lower than the October number of 5.8%. Shanghai is the one we're talking about, where the economic data continues to remain very disappointing. Even last week, the Chinese markets were under pressure for the entire week, as that big stimulus bazooka is still not coming. And now experts are pointing out that the next trigger in terms of potential stimulus perhaps will come only in March when the NPC meets again. That's the picture across Asia. Hang Seng right now is just flat with a negative bias. Taiwan is the one which is up nearly about 0.8%. Let's get to the equity views then. Chetan Seth of Nomura says, Asia ex-Japan equities, they've got a cautious stance going into 2025 and H1 of 2025 given the looming headwinds from US trade and policy uncertainty. Monetary policies that are now less supportive than hitherto with likely fewer Fed rate cuts ahead. a stronger US dollar and China's restraint on fiscal stimulus. He says these are the risks that will present a ceiling for Asia ex-Japan stock in the early part of 2025. He adds the main focus of the markets this week will be the December FOMC meet, where the markets widely expect a 25 basis points rate cut. And thus, they think the dot plot will be a particular focus for the markets.
All right. So that's some interesting opinion. Let's get some more. Rajiv Agarwal is now joining us. He's managing partner and fund manager at Doordarshan India Fund. Rajiv, good morning. Good to have you with us here on CNBC as always. So what's top of mind this time of the year, except thinking about holidays and going away and end of the year and thinking about the new one? It's been an incredible year, right? At almost 30% for US stocks, and even Europe, I was looking. It was looking like it's gone to the dogs, but the DAX this year now is up 22%, which is not bad. So it's quietly in a stealth way come up very nicely. And of course, here in India, we've had a good year once again. So your thoughts, Rajiv?
Yeah, I think the overall markets have done very well across the world, Prashant. And I think we are seeing that across various indices that you referred to. I think top of mind clearly is the FOMC meeting that is coming up this week. And in fact, there are a lot of other meetings across various central banks in the coming week. Clearly, FOMC, I think the verdict from most of the analysts is out there that the Fed will cut rate by 25 basis points. But really, it becomes much more interesting as we get into January and how Donald Trump policy measures start playing out for the economy and how the Fed will react subsequent to that. I think that will be much more interesting. On the India front, I can talk about the India front, but I will see if you have any specific question here.
Okay, so what's the outlook for India? We were just listening to the Nomura view from Chetan Seth, and he's talking about headwinds for generally Asia ex-Japan, at least in the first half of the year, due to policy uncertainty, fiscal restraint by China, the fact that the monetary policy may not be as loose as what was previously expected a few months back. And then you've got a stronger dollar to contend with. Would you concur broadly for the emerging markets and including markets like India, the first half of the year could be headwinded?
I think first half of the year next year will be challenging more in terms of how US policy measures will impact these economies. The one thing that we have already started seeing is the US dollar being very strong because the flows have come out of the emerging markets and moved to US. I mean, in fact, last week, 39 out of the 41 countries, there was an outflow from those countries, and it was primarily going into US. So I think there is a possibility that as Trump measures comes in, there will be possibly the movement of flow from these emerging markets and developed markets into the US. But as that settles down, I think it will be much more stock specific and market specific is what we're expecting.
Hi, Rajiv. Good morning and good to see you. Ben, you've generally liked the banking as well as NBFC space. You mentioned a few, some of those housing finance companies, the gold finance company, Manappuram, which has bounced back. Are you a little bit worried about the commentary that we're getting with regard to asset quality, with regard to the offtake that we've seen that has slowed down a little bit? That's the loan growth. And of late, what have you added? Manappuram saw a sharp correction, but you've been quite positive on that, and it's bounced back very, very well.
Yeah, sure. So I think we actually continue to be bullish on the banking and finance space. We think that is a space which has, from a valuation perspective, there's still a lot of value out there because the prices in our mind have actually corrected much more than what the inherent value of those companies are. Speaking specifically about Manappuram, and we own that particular stock, we think that Manappuram has done well in terms of the stock price. But right now, the big concern that is there for that particular stock is when do they come out of the regulatory constraint they have been put on, which is the Ashirwad subsidy. I think the gold loans are doing well. And they also have the other secured book, which is growing well, which is a housing finance as well as a vehicle finance. So I think the secured portion of their book is growing very well, but it is much more of an issue on the MFI side. And then coming to the MFI side, I think we have definitely seen quite a bit of asset quality issues on the MFI and the unsecured book, be it the credit card, the personal loan, and the MFI. And I do think those are the areas that we need to be watchful for. My expectation is that the economy, which we had a little bit of a surprise in Q2, will start performing. And as that performs, and as the agriculture and the crop output is good, some of the issues that we are seeing gradually gets settled over the next few quarters.
Okay, well, Rajiv, thank you very much for joining us. It's a pleasure having you here and hearing your thoughts as always. Appreciate it. Well, that's Rajiv from Doordarshi India Fund with this perspective. Let's quickly tell you what's lined up here as far as interactions are concerned. At 8:35, we'll be joined by the management of Astra Microwave. We'll talk about the Cabinet Committee of Security, which has approved 2 orders worth 21,000 odd crores. 9 a.m., we'll have Balaji Subramaniam of IIFL Securities. Telecom is in focus. 9:20, you'll hear from the UBS team, Gautam Chachoria and Tanvi Gupta Jain will be with us. And 9:35, Cholamandalam Investment Finance, one of the top NBFCs, on their outlook for the H2. Sami Hotels and Nikhil Sharma of Radisson's will be joining us at 9:50 to talk about what else but the trends in the hospitality space. And of course, at 10:15, you've got Indianomics with Lata, and we've got the management of Quest Corp, Azim Premji University, and the Center for Development Studies who are joining Lata for that discussion.
Into a short break. On the other side, we'll focus on the top 10 stocks that we're tracking for you. For the time being, we run it through the list. We're looking at Dixon, JK Paper, Oro Pharma, Sudarshan Chemicals, HBL Power Systems, Godrej Agrovet, Afcons, Aeroflex Industries, and Borosil Renewables. All of them will be reacting to positive news flow, while we have Seagull India that will be reacting to negative news flow. Slip into that break, come back, get into further detail on all of these names.
Welcome back. You're watching Bazaar Morning Call. Friday, we had this tremendous intraday rally. The Nifty recovered 600 points from the day's low to close up in the green, and it helped us log our fourth weekly gain. The last week, the gains were not much because it was only a Friday up move, but fourth consecutive weekly gain, and this has happened for the first time since July. This morning, the GIFT Nifty is suggesting a slightly weaker start, 56 points lower at the open. But it's time now to talk about the stocks that you need to keep on your radar this morning. It's time for CNBC-TV18's list of top stocks for the day. And first up, it's Upasana on Dixon Tech and JK Paper. Upasana.
Good morning. First up, let me start with Dixon Tech. Now, Dixon and Vivo India has entered into a binding term sheet for a proposed joint venture to undertake OEM business of electronic devices, including smartphones, is what the company has said. Now, Dixon will hold 51% of the share capital, while Vivo India will hold around 49% in the proposed joint venture entity. Now, this facility will undertake part of Vivo's OEM orders of smartphones in India and will also engage in OEM business of various other electronic products as well. Now, moving forward to JK Papers, the company has announced a scheme of arrangement to consolidate its business operations. As a part of the scheme, the three subsidiaries of the company, that is Horizon Pack, Securi Packs Packaging and JKPL Utility Packaging Solution, will be merged into JK Paper to create a consolidated paper and packaging company. Now, separately, the board has also approved acquisition of 60% of the stake in Radheshyam Wellpack, and it has said that the balance 40% will be acquired within a period of 2 years. Now, Radheshyam Wellpack is engaged in the business of manufacturing of corrugated boxes, sheets and other packaging related work products. Hence, even this stock will remain in focus today.
Thanks a lot for that, Upasana. Let's hop across to Vinny here. She's here to tell us about some more stocks and news. Hi, Vinny. Morning.
Good morning. So focusing first with one of the pharma companies, where Aurobindo Pharma, we're expecting some bit of a green move here because they've actually, it's one of its arm. Curatech has gotten a European body's nod for one of its biosimilar drugs. Now, this is a positive opinion that they've received over there. Why is it positive for Aurobindo Pharma, even though it's small? Because this indicates the company's dedication and focus towards biosimilars, as well as in terms of the ability to monetize on the biosimilar front, where they've been focusing and making investments in the last few years. So that is why a positive for Aurobindo Pharma. Sudarshan Chemical is the next stock where we are focusing on. We're expecting a positive move here as well. The board has approved a preferential issue of around 18.7 lakh shares, which is at a price of around 1,043 rupees per share. Total worth of this is 195 crores, and this is to non-promoters, so keep an eye on that. HPL Power, that's also in focus. They've received an order of around 1,522 crores. This is for one of the Kavach equipment locomotives. So on that front, we could see some positive move for HPL Power. And lastly, Godrej Agrovet also in focus. The Gujarat government has allocated land in Barodara, Surat as well as Tapi to the company. And this is for palm oil cultivation expansion. So on the back of that, keep an eye out on all these stocks, expecting green here.
All right, Vinny, thank you very much for that. More stocks with news flow. Vivek is here with that list. Vivek, morning.
Well, good morning. Quite a few stocks on the radar. First on the list is Aeroflex Industries. The board has gone ahead and approved a fundraising proposal. Company is looking to raise close to 400 crore via the QIP route. The other stock on the radar is Afcons Infra. Now, the company has received the letter of award for a project worth a little over 1,000 crore. This is from the MP Metro Rail Corporation. Remember, order inflow as far as H1 was concerned was close to 8,925 crore rupees. The company's order book close to 38,000 crore rupees at the end of Q2. Now, when you're talking about Borosil Renewables along expected lines, there is a board meeting that the company is holding on December 18th. The company is looking to do a fundraise, and the fundraise could be either via an equity share issue, warrants or a preferential issue. And lastly, Seagull India, I expect some read on this particular name. State Highways Authorities of Jharkhand has cancelled a 207 crore worth project that the company had earlier won or had emerged as the winning bidder. Now, this particular order has been cancelled due to administrative reasons as per the cited clause in the request for proposal. So expect some read as far as Seagull is concerned.
Okay, thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Dixon Tech, JK Paper, Aurobindo Pharma, Sudarshan Chemical, HPL Power Systems, Godrej Agrovet, Afcons Infra, Aeroflex Industries and Borosil's Renewable. While the only stock with negative news flow today is Seagull India. We will slip into a very short break. On that note, on the other side, we'll connect with Prakash Diwan for some fundamental stock talk. We'll also invite the management of Astra Micro to talk about the big order inflows in the defense sector. Remember, the Cabinet Committee of Security approved 2 orders for 21,000 crore rupees recently.
Welcome back. Well, we've listed down all the top stocks that we're tracking for you. Let's get into some more fundamental analysis. Then we have Prakash Diwan who joins us on the show. Good morning, Prakash. Hope you had a good weekend. Well, let's focus on one of the top stocks, Dixon Technologies. And everyone wonders how expensive is expensive. But I think the way the street looks at it is, if a company is going to grow well and there's a good amount of potential and a sector tailwind as well, they don't mind paying top dollar. And that's perfectly reflected in the stock price of Dixon Technologies. Now, yesterday they announced about this tie-up with Vivo for mobiles, which I understand that the average selling price per part to Vivo will actually, in fact, be better than what they currently get. That's a probability. What's your view on the stock? Because it's no longer cheap.
Good morning, Nigel. Thank you. I think you're right. There is no way you can justify these valuations to make fresh entries. It's like a fast train, non-stop train passing by. You're standing on the platform. You just have to wish the passengers good luck, and you miss it. There's no. You'll have to wait for the next one. The thing with the visibility of earnings that Dixon has been able to manage in terms of its order book, notwithstanding this particular arrangement with Vivo, is so strong that very few people who own the stock would want to exit. Right, and there's a fair smattering of institutional holding there, and you can see the structure. The cap table is very clearly skewed towards institutions holding it and retaining it. So it's going to be extremely difficult to anticipate a sell-off, which could bring valuations down, unless there's a market sell-off which is so wide that even Dixon won't be spared. But barring that, it's going to be extremely difficult to buy into this stock, on valuation which could be reasonable. So if you have it, keep enjoying that, holding it and making sure that you ride at least the next 3 years visibility of earnings, which is there through the contracts, is very clearly going to be very rewarding. So quite positive on it, but as I said, extremely difficult for somebody to buy into now.
Prakash, hi. So on Friday, everyone was talking about Bharti. It was the top gainer. Jeffrey said, even ICICI Securities, they're all calling it one of the top picks for 2025. But the mover in the telecom space has actually been Bharti Hexacom. It listed earlier this week. The issue price was 570, and now it's knocking on the doors of 1500. It's a 2x return on Bharti Hexacom. So where do you stand on Bharti Hexacom? Is there still upside triggers left for 2025?
Good morning, Rima. So I do agree, and you actually were right in calling this out way back when it got listed in terms of how the business was so strong. What's working in favor of Hexacom is the simplicity of its business model. There's linearity in that. There are no ifs and buts or overhangs that you have to be worried about as much as in the parent stock. The parent stock has a lot of triggers which may not fire off on time in terms of your anticipation. But let me tell you, Bharti, the way they've kind of positioned themselves to take on this expansion that's underway on 5G in some of the markets and then monetize it, they'll probably be up there leading that ARPU move up. And I think they will benefit. So I would still buy Bharti Airtel rather than Hexacom, where Hexacom's done well, not taking that away. But from here on, it would probably start kind of consolidating. There's really not much of fireworks in store.
Okay. Bharti will start consolidating. By the way, Prakash, hi, morning. What's your view on the entire insurance space? I mean, we've been, of course, reporting on it. And our colleague Yash has been reporting all the changes, lots of interest. I mean, and interest one way or the other. I mean, those who already own it want to know whether this is all happening. So what should they do about it? And there is a Jeffrey's note on Max Financial, the name change which has now been effected. But all of that is now, it's good. I mean, it's a positive note, but it also shows, especially for Max, I mean, the deal which was done in a way because of the bank assurance partnership, which which the regulator now wants to clamp down on. They're going to come out with regulations, a consultation paper, etc., to reduce dependency on parent bank and bank assurance as a channel. So just your thoughts there, Prakash. Which way would it go?
Yeah, good morning, Prashant. That's an interesting theme that you picked up. And let me, go straight to this report that you alluded to. Axis, the bank does about 45% of, business for Max. And the regulators probably wanting to move this to 25 over a period of time. And if that timeline is not very short, I don't think there will be a challenge. Max has always been very strong on the quality of its agency network. They've had bank assurance that gave them the volumes, but the quality of business, especially on term products, I can personally vouch for, have been extremely strong in terms of the flow from the agency network. They have few agents, but very high quality, large agents. So it's not going to be difficult for them to de-risk themselves from this bank assurance dependence. And the second trigger, which they could very well benefit more than others in terms of this thing, because they don't have a general insurance business, non-life insurance business, unlike an ICICI and HDFC, which have two arms any which ways. So the integrated insurance platform that could get allowed will actually be a very big upside for them. So I think, and from a valuation perspective, also they're not expensive in my view relative to some of the other names. So I always like the approach to go for a basket, but in case of Max, it still has its salience intact. And of course, GST exemption and all that are additional things, but I'm not relying on that. On the core organic business growth, it definitely is strongly poised.
All right. Just one more quick question, Prakash. A couple of companies have won order wins. Whether you look at HPL Power, Afcons, RITES. Any of these three you like? All three of them had some news flow in terms of order wins over the weekend.
So, the most underrated out from this list is Afcons. I think it came with an IPO, got listed in times which were not very exuberant, which is good for investors. But if you see the quality of orders that they keep getting, the kind of execution skills that they have, I think this company will get re-rated at some point in time. It's just a matter of the float getting adjusted, the price discovery getting into an equilibrium state. RITES, of course, is on a, it's been chugging along. It's interesting to see the kind of nature of orders that they're getting are more complex now and beyond just, simple orders executed for the railways. HBL, I think, is priced in quite well. There was anticipation after Connex got the order that HBL and Medha would also follow suit, and that's happened. So from that perspective, I don't think there'll be too much of fireworks there. But Afcons, yes, out of the three names that you mentioned, I definitely believe would benefit more from a longer term perspective and from this immediate short term on this back of this 1,000 crore order.
Okay, all right. Prakash, request you to stay with us. We'll want to know what's your picks in the defense sector as well. For the time being, let's focus on that space itself. The sector has witnessed big order inflows lately. The Cabinet Committee of Security has approved orders worth around 21,800 crore rupees. To discuss what this means in terms of order inflows and what's the outlook for the next fiscal, well, we're joined by Mr. Atim Kabra, the Director of Business Development and Strategy at Astra Microwave. Hi, Mr. Kabra. Good morning. Always good to see you, Ben. Well, give us a few details. I'm looking at an ICICI Securities number. They're saying that this could potentially be an opportunity for BEL, particularly on radar and EW systems, which in turn will trickle down to Astra. Do you agree? And what could the opportunity size be?
See, these 12, good morning. Good to be back here.
Good to see you as always.
Absolutely. Thank you. The Su-30 order upgrade, as that note itself mentions, has come in within 15 months. And that's quite significant and shows the intent of the government and the compressed timeframes in which the entire process is happening now. And that is very, very significant. Now, Su-30 upgrade is going to happen. MiG-29s are there. And of course, the Tejas rollout is happening. I think the capability set of the industry, especially in the radars and EW segment, has been very clearly brought out. And these are the things which are leading to the kind of order flows which we are seeing. It can only accelerate is what I can tell you.
Morning, Prashant here, and good to see you, Atim. This is the Sukhoi, right?
Yes.
Su-30.
Yes.
Okay. And could you tell us
84 more numbers are expected. These were 12 engines which were put through at this time.
So what is being done for the Sukhoi here in terms of indigenization? What is this order for exactly?
The order which was released was for 12 units. That was engines. Okay. And now we are talking of the existing portfolio of Su-30. They are going to go in for an upgrade.
Okay.
So mainly in radars and EW segment, those planes are being updated for the times. And a lot of it, I believe more than 60% is going to be indigenized components out there, which is a very significant opportunity for the domestic industry.
Okay. For specifically Astra Micro.
Yeah, Astra will be playing a role out there.
Sure.
Playing both these parts. Yeah.
Right. So this 21,000 plus the upgrade, could you give us a sense of what the total value of work could be and what could come Astra's way?
Astra is hoping to get a role both in the radars as well as the EW segment. So, it's very difficult to put a number onto that, right? But as you know, see, these are building blocks now which will come in size on a continuous basis. So if you recall what we had said last time we spoke, we said the story is just about beginning, right? Wherein the product portfolio has now reached a stage where we can replace the original systems. And most of it is being indigenized. Okay. So these are just the beginning blocks which have started taking place for a multi-decadal opportunity for the entire defense sector.
This 60% indigenization component, that's official, right? Or it's just an expectation right now?
That's expected. That's expected.
It's expected.
Yeah.
Okay. So are you on track then to meet your order book target of 1,200 to 1,300 crore for this year and a revenue guidance of 1,000 to 1,100? Or can you exceed it?
No. We hope to always exceed it, but we are on track for 1,200 crores plus. You've just seen the recent order which was announced, which came in on the ARC. See, guys, Astra comes embedded with Astra Rafael Comsys. And that itself is a business in SDRs, which can be massive. It can overtake Astra. So when you look at Astra, you have to look at the components which constitute Astra. The growth element which we discussed last time and which I was told when you talk about the business outlook, the new segments which are opening up dramatically, for example, space, where we have within India a capability which exists in the form of very competent companies like Anant, like Azista, Tatas, etc. Where collaborations are there. So what do we try and do differently? We will try and create the entire satellite as a made in India, indigenous, with payloads which are completely indigenous. And, with constellations of satellites happening, EOIs are already out from Government of India in space, etc. We are talking of some mega opportunities which can dwarf the traditional business, which is going to be the backbone and mainstay. But satellite in itself, you're looking at software-defined radios, and these are significant opportunities which can create multiple Astras in themselves. And that's what excites us, and that's where we are focusing a lot.
Mr. Kabra, if you could just help us out with the number on profitability. Your market capitalization is close to around 8,000 crores. I think the stock had run up very, very strong till the middle of 2024, and then it cooled off from that, I think, that 1,050 odd mark, very, very roughly. The street is very optimistic on the prospects, and you're also sounding very bullish. Last year, the profit number was just 120 crores. Say in the next 3 years, what do you think this profit number could look like? Because otherwise it becomes hard to justify 7,500 to 8,000 crores of market capitalization. So a rough estimate that you would have in mind.
I am not an expert on the markets, but having said that, I don't think market looks at a year or a year and a half as an opportunity, right? They look at a fairly significant time frame, and I guess they discount the prospects back. So, and I think that is what is being reflected in the relatively high valuations which people speak about in the segment. But if you look at a sector which is as fundamental as infrastructure, which has more than 3% of the GDP, which is allocated for us, wherein a huge amount of domestic inflow is, order book is coming in. You're talking of, huge building blocks which are being put in place. And I guess that is being discounted upfront at this point in time. Stocks do consolidate. I think it's the delivery which matters. We will deliver what we have said is a very, very strong expectation.
That's why I want to know what is your 3-year projection, sir. As you said, the market is not looking at the near term, and stock prices will do their own thing. But in terms of profitability from around 120 crores, do you think the net profit could be in the vicinity of 400, 500 crores, say by 2028? Going by your order book, going by the kind of visibility you get, and going by the center's focus on defense, do you think it can be in that vicinity 400-500 crores or?
I'll be surprised if we don't reach that kind of a number. So,
thank you.
The domestic component is increasing, right? The deemed exports are decreasing. So it's a relatively higher margin business. And all these orders are getting into production now, right? So as production happens, scale comes in. As scale comes in, right, your impact on your bottom line is very, very significant. And I think that is what you will see.
Appreciate you joining in, Mr. Kabra. Thanks a lot for giving us those details. And as you said, it appears the longer runway looks quite good. And you're sounding quite optimistic as well on the prospects of the business. Well, let's go back to Prakash. Prakash, a company that did around 120 crores of profitability, they'll be surprised if they're not at 400-500 crores in the next 3 years or so. Your view on Astra, and also if you could help us out with what's your top bet in the defense space?
So Nigel, on Astra, it definitely sounds quite exciting. And we hope and pray that there's no miscarriage as the execution takes off. But this is going to be a very critical phase. From an order book of 2,100 crores last quarter to incrementally 3,600 or 3,400 crores for the next couple of years means that they could have revenue, trajectory which could go into the 1,200, 1,500 crores a year at some point in time. And that does translate into good profits. But the problem with this segment is that order flows can be very lumpy. The execution can probably be much longer than what you expect. So otherwise, there's absolutely nothing wrong, but it's just the anticipation has built in too much of valuation. So the comfort is slightly lower in most companies. I'm not specifically talking about Astra, but and answering your second part of the question, to be honest, the only company that I feel very resilient, find resilient and very dependable on execution in this space is L&T. Now, you don't normally take L&T's name in the same breath as HAL or a GRSC or all of these fancy names. But from a valuation, comfort, execution, track record, and the optionality of other things balancing out anything that goes wrong or slows down on defense execution is absolutely very comfortable. So look at L&T from a different perspective. And I think it will probably surprise people on how much defense starts contributing to its overall profit pool rather than just the top line.
Okay, we'll slip into a very short break. Stay on, Prakash. On the other side, we'll also connect with Mitesh and Sudarshan for some technical trading ideas.
आज महिला सशक्तिकरण की दिशा में भारत एक और मजबूत कदम उठा रहा है। साथियों, अब यहां देश की बहनों बेटियों को रोजगार देने वाली बीमा सखी योजना की शुरुआत की गई है। बेटियों को अभी यहां बीमा सखी के प्रमाण पत्र दिए गए हैं।
Our next category, the Lifetime Achievement Award that pays tribute to an exceptional journey of purpose and progress. The award celebrates an individual whose work has changed the way we think, act and build for the future. And the winner for the Lifetime Achievement Award 2024 is
1966, one visionary set out to ensure that every child could enjoy a healthy childhood at an affordable price. This vision gave birth to the Serum Institute of India, a company.
Okay, welcome back. We got Mitesh and Sudarshan with us to take us through what they would like you to do. 10 minutes to go for the pre-open session. Gentlemen, good morning. Great to have both of you here. Appreciate your time. Sudarshan, you go first. What would you recommend viewers do? I mean, Friday, I missed Friday's session. I was not in town, but it was a manic sell-off, then a frantic recovery. Do you think, I mean, the general skew is going to be on the positive side? Because we did, in terms of recovery, what we did by close on Friday. Go on.
Yeah, good morning. It is on the positive side. For the last 10 or 15 days, I have been saying the markets are going up. Stay long because you can't predict when a breakout will come from a trading range. And that's exactly what happened. We had a big breakout on Thursday and then on Friday. And the idea is that the volatility will persist. Have you noticed something? On Friday, Sensex was having a weekly expiry and we had massive volatility. Prior week, the Nifty on Thursday was having a weekly expiry and we had massive volatility. So the suggestion to retail traders is avoid doing expiry trades because this volatility on weekly expiries is likely to persist. That's an aside. For the Nifty, the trend is up. If you look for a dip, wait for a dip, and if you get a dip, go and buy it.
And what would be the appropriate dip level to go ahead and buy, Sudarshan?
It's very difficult to say that, Rima, because the markets can open 100-point lower and then go another 100 or 200 points. But even then, I'll give a very rough idea that somewhere around 24,600 would be a decent level to enter.
4,700. Mitesh, come in on the index trade for the morning.
Good morning. So, on Friday, when we were below 400, 350 zone, I was worried. But then the miraculous recovery happened and we closed much higher from those levels. So I think the first level to watch on the upside is about 24,800, 820. And in that sense, we are not very far away from that. So again, as Sudarshan also mentioned, I think the idea is to buy on declines. And for me, I think any trade closer to about 24,700, 680 zone, that's my buying range. And then I'll keep a stop below 24,620. And 24,800, 820 is the first target. In case we clear that, then I'm even looking at a test of 25,150. So the stance is positive, but given the fact that we are close to the supply pivot of 24,800, 820, best to buy on declines.
Okay, no, got that. Mitesh, morning. What would you do in terms of specific stocks?
Good morning, Prashant. On the stock side, I have more of buy calls. Delivery is a buy. If you get a 2-3 point dip, even better. So around 388, buy with a stop at 379 for targets of 408. ICICI Bank is a buy if it clears 1350 odd level. So buy about 1350 is close to 1344. So 5, 6, 7 points higher. Buy about 1350 with a stop at 1334 for a target of 1395. And a buy on REC with a stop at 549 for targets of 572. One sell call, that's Oil India. Keep a stop at 462.5 for targets of 437.
Sudarshan, what would your stock calls be for Monday morning?
Yeah, first, I had suggested 24,600 as a support, not 700. And second, this is for Prashant. I just saw, and the color of his jacket is very attractive and pleasing. Now for the trades. All right. Britannia is a buying opportunity, and consider buying with a stop under 47.70. Coromandel is a buy. Stop under 1740. Havells has already been in an uptrend. So now it's a consolidation after an uptrend, imminent breakout. We are all assuming that the breakouts for all the stocks will be on the upside because the trend is up. Havells is a buy with a stop under 1700. And Lal PathLab is the only intraday short. The stock has been underperforming. So consider going intraday short with a stop above 3050.
Long Britannia, Coromandel, Havells, and intraday short on Lal PathLabs. Sudarshan, thank you very much. Mitesh, thank you very much for joining us. And we'll speak again soon. So 5 minutes to go for the pre-open session to kick off. We'll take a break. We're going to be back again with Balaji Subramanian of IIFL Securities. We discuss the trends in the telecom space. That's coming up.
redefined vaccinations worldwide. Dr. Cyrus Poonawala's journey began with the launch of the first therapeutic anti-tetanus serum and grew into the world's largest vaccine manufacturer, producing over 1.3 billion doses. Today, Serum's vaccines reach 65% of the world's children. Through global collaborations and innovative vaccines like those for COVID-19, Dr. Poonawala has cemented India's leadership in affordable public health solutions. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Lifetime Achievement Award to Dr. Cyrus Poonawala.
Well, many congratulations to Dr. Cyrus Poonawala, and a big round of applause for him, ladies and gentlemen. The founder of Serum Institute of India, Dr. Poonawala, has been a cornerstone of vaccine innovation for more than 5 decades, making affordable vaccines accessible worldwide, protecting millions from diseases. Let's put our hands together for Dr. Poonawala.
Honorable Srinath, my friend Piyush, and our Chief Minister, Mr. Fadnavis. I first of all like to acknowledge with thanks the jury for having selected me for this coveted honor, and also CNBC for supporting such a great honor to me, though I have received many honors as you've seen in the past, but to me this honor is equally important, if not more important. I won't take a lot of your time, but there was one important aspect which I think the audience, some of them know, but most don't know, that right from the beginning when I started Serum Institute with a capital of 5 lakhs, of which half was borrowed, and it helped me to grow a vaccine company, which is today, of course, the world's largest vaccine company, in spite, and that's what I want to emphasize, that I've supplied most of the vaccines, if not all, at half or quarter of the market ruling price, in which hundreds of millions of dollars of profits were sacrificed, and I continue to do it at a... And when I was asked about it in the press, I said, apart from my staff who have supported me in this sacrifice, the biggest loser is my son here, only son, because it's cost him at least $3 to $5 billion of cash profit.
Okay, you're watching CNBC TV18 Bazaar Morning Call from the CNBC TV18 Motilal Oswal studio. Prakash Diwan is still with us on the show. Prakash, any other stocks that you would like to recommend for us towards the last 2 weeks of December? Santa picks?
So I would rather enjoy Christmas from a different perspective than buying stocks. But, you know, from one of the stocks in the news today, Rima, we had JK Paper that I think you guys discussed. My sense is, you know, if you look at this, not just because of the fact that it's coming to the news, but this consolidation was planned for quite some time. There's a lot of family issues that the group is trying to sort out in most of the companies. This consolidation will actually make a lot of sense for them to improve their margins here on, you know, because of economies of scale and, you know, overlaps being reduced and all that. And with all of that, at 7,800 odd crores, it's available at under 10p on a trailing basis. Of course, the entire sector is about 18-20 times, so it's not that, you know, this is, you know, something which is discounted too much, but it's half of the sector averages. And my sense is the kind of sales and profit growth that you have coming from this business is fairly commendable. So it will get re-rated as the sector gets to kind of be re-looked by people. But take a look. It's in the news as well for the right reasons. This should probably be a good long-term pick as well.
I'm not sure if that's paper. And in that same vein, I heard someone talk about tea stocks. And I don't know if something is happening, but but we'll figure out. This is just sort of a connection from the price action. Delivery, I think, was mentioned as a trade earlier. I just looked at the stock. It's been an absolute disaster of a name if you own this for over a while since listing. But it's moved up 20% quietly from the lows, 330 to 390 as of Friday's close. Anything changing at the margin? This was at one point seen like an e-commerce proxy, like a Blue Dart or something. I mean, any thoughts here?
So, Prashant, if you actually, what you're talking about is the move in recent time, but if you take the lows that it went to post the IPO disaster, and very clearly the IPO became disastrous because of the kind of overzealousness in pricing the business at that point in time. This was the wave where you had Nykas and Paytms and all of those coming to the market. From a business standpoint, if you see their commentary, the kind of things that they were doing, they've narrowed down on some few of the verticals, few of the segments, which are very profitable. And these are volume driven as well. It's not that they're compromising on revenue growth in any sense, but the efficiencies that they can build on. And remember, this is still a very fragmented market. Delivery still owns a significant market share, and that is only getting consolidated with more players coming into the picture. So, there were doubts whether the quick commerce could impinge on their ability to grow from the traditional e-commerce lines, but that hasn't grown, and more people are kind of getting to use these things. So I think it's definitely a re-rating that's underway and could still have much more legs, provided you are patient enough to hold on for the next couple of years when the EPS resets to a higher level from where it is, and it will stop looking expensive in that sense.
Okay, so bullish on delivery, the re-rating will continue, and the quick commerce impact on e-commerce hurting delivery perhaps is a bit overblown, according to Prakash. Thank you very much for joining in. Now let's turn our attention to telecom, a recap of 2024 and the outlook for 2025. Now, 2024 has been a mixed bag for telecom. On one hand, you've got a Bharti Airtel, which has moved up close to 63% year to date. But you also have Vodafone Idea, which has seen a fall of more than 50% so far this year. Balaji Subramaniam, is now joining in. He joins us from IIFL. He's the Vice President of IIFL Securities. Balaji, thank you very much for joining in. Let's start with the big boy, Bharti Airtel. 2024, good year, 63% kind of rally. But it also benefited because we got tariff hikes this year. What about next year? What are the triggers for Airtel going into 2025?
Good morning. Thanks for having me on the show, Rima. As far as 2025 is concerned, the key things to watch out for would be, from a Bharti Airtel perspective, I think it will be more of the same, where we will see ARPU steadily inching up until we see the next round of tariff hikes, which I think probably should happen sometime in the second half of 2025. So that is one. The other thing is I expect the capex intensity to keep coming off, especially in India. So that would mean that you will have ARPU and EBITDA going up, while capex also will come down, which would result in healthy FCF generation for Bharti, and subsequently we should see deleveraging of the balance sheet. The other key thing to watch out for would be not just for Bharti Airtel, but for the industry as a whole is what happens on the satellite broadband front, because the TRAI has been working on the modalities of spectrum pricing and allocation of satellite spectrum. So we'll have to see what happens there, and whether Starlink ends up getting a license, and what exactly is going to happen on that front. But my take is that satellite broadband still has a long way to go before it becomes anywhere close to competitive versus terrestrial services. The other thing
Sorry, just to follow up, but if Starlink gets a license in 2025, do you expect derating for Bharti Airtel? While you're saying it's not immediate competition, but how are investors viewing this? How will they view this development if it comes?
So I think you may have some, volatility around, the news flow on Starlink, because at the end of the day, the stocks, the telecom stocks, especially Airtel, Hexacom, have rallied quite a bit during this year. So I wouldn't, rule out some section of investors to probably end up booking profits when you have these news flow on Starlink coming in. But that said, from a fundamental perspective, I don't think one should see any dent in terms of business prospects for the traditional terrestrial telcos.
You were telling us the third trigger. One was satellite, the first one was tariffs, and the third one?
So the third one would be especially what happens in terms of Vodafone Idea's fundraising, because they have raised about half of the funds required for capex through equity, and the other half of debt is where things are stuck up. So one thing to watch out for would be when Vodafone Idea is expected to arrest its subscriber losses. So if subscriber losses continue maybe after May, June of next year, I think that is some time where people might start building in a higher steady state revenue market share for someone like Bharti. So that is one. And finally, any potential IPO of Geo platforms also has to be watched out for, because that would also, depending on the valuation at which that IPO happens, that can keep telecom stocks buoyant during the next year.
Let's talk about Vodafone Idea, right? You said they only managed to complete half of their proposed fundraise, only the FPO. But the FPO, saw a lot of demand. It was subscribed 6-7 times. The stock went up to levels of 19 rupees. Now you've seen it come down to rupees 8. Now suppose on this curative petition on the AGR, the recomputation of AGR dues, right? If it turns out to be, a complete adverse outcome, there is no hope on that. What is the fair value of Vodafone Idea in that event?
So I think the street more or less bakes in the aspect that there may be no longer any AGR relief front, at least on the present value side. Of course, if there is any present value relief, if the government is able to conjure up any present value relief, then great. But I think one way of providing Vodafone Idea some relief could be by extending the moratorium on spectrum payments and AGR payments, which is set to expire from October of 2025. So if that is pushed out a little bit, then you will see that the cash flow position of Vodafone Idea would significantly improve. And that would mean that they would have a better shot as far as debt raising is concerned. Already we have seen that the government has allowed waiver of spectrum-related payments pertaining to pre-2022 auctions. So these two might, would give Vodafone Idea a better shot in terms of raising debt. And that would mean that they would be able to continue their originally announced capex program of around 50 to 55,000 crore investments between FY25 and FY27.
All right, Balaji, always good hearing your thoughts. Thanks a lot for joining in and helping us out with that. Wishing you a good day ahead and looking forward to chatting up with you rather soon. But it's 9:10, so let's get in our technical guest back with us. Sudarshan joins in. Sudarshan, what's your 9:10 call?
Well, consider buying Coromandel with a stop under 1740.
Got it. Coromandel out of the way. And Mitesh, what about you? Mitesh, you're on mute. We'd like to hear your pick.
I was talking about delivery, which I would recommend buying with the target of 408.
Okay, thank you very much for that. Let's get to some stocks you should have on your radar as we prepare for market opening. Sudarshan is with us for Max Financial. Sudarshan.
So, Minister of Corporate Affairs has approved the change in the name of the company of Max Life to Axis Max Life. And now Jefferies has come out with a note. It has a buy call and target is 1,660 per share. It says change in the name of the company will enhance the brand recall, especially in Tier 2 and 3 cities, as Axis Bank has a strong brand in Tier 2 and 3 cities. Also, some of the positive catalysts that it has mentioned: first, company can gain from exemption of term protection from GST, allowances of composite license, and there can be merger between insurance and other firms. But norms on banca insurance will be washed out as Axis forms 45% of AP for Max Life. As far as valuation is concerned, Jefferies finds valuation attractive at very current level. That's the reason it has a buy call on the stock.
Thank you very much for that. We're watching for IT stocks also because Citi met with the management of many IT companies, TCS, HCL Tech, LTI Mindtree, Persistent. And here are some of the key takeaways. On the financial sector, there appears to be a fair amount of consensus that the green shoots that we saw in the September quarter is still very much intact. So HCL Tech said the discretionary spending saw an uptick in August, particularly in BFSI, which has continued into October, while LTI Mindtree says that the vertical indeed has seen an uptick in demand and continues to hold. So that's the key takeaway on financial services, that the recovery holds and is continuing. On retail, TCS says that we've seen a positive outlook for the holiday season with potential trickle-down effect, which could lead to overall improvement. So the outlook on retail also appears to be fairly upbeat. On manufacturing, though, the outlook is soft. So HCL Tech is calling out the auto segment, particularly, that continues to be soft, while TCS says that in the near term, there are challenges related to supply chain and labor. On tech, it's a mixed bag. So HCL Tech is saying that they are seeing signs of a pickup, but they will monitor to see if it sustains. While LTI Mindtree also concurs, it's a mixed bag. Some accounts are performing well, some of them are tightening budgets. Furloughs are likely to hold. Now, Citi is largely bearish on the IT sector because of valuation. So they've got a sell call on TCS, sell call on LTI Mindtree. On HCL Tech, they're neutral. But on Persistent, they are bullish. They've got a buy call with a target price of 6,100. So on Persistent, when they met with the management said the clients are a lot more optimistic with the US election and Fed rate cuts behind it, but that will take time to reflect in the budgets. Priority for Persistent is growth over margins because according to them, margins can be recouped over a period of time. And on generative AI, they're talking about 25% productivity benefits and it will not be deflationary. So that's the broad overview of what Citi took away after meeting many IT managements.
All right. IT in focus and Persistent specifically is the one which Citi is kind of sort of picking out of the pack. Dixon is the next one. So I think they've got pretty much all large Android makers on their platform now. The last one got added, as we told you earlier, Vivo. I think Upasana is here with details. Upasana.
Good morning. First up, let me start with Dixon. This stock remains in focus today as well, as Dixon and Vivo India enter into a binding term sheet for a proposed joint venture to undertake OEM business of electronic devices, including smartphones. Now, Dixon will hold 51% of the share capital and Vivo India will hold 49% stake in the proposed joint venture entities, what the company has indicated. And this facility will undertake Vivo's OEM orders of smartphones in India and will also engage in OEM business of various other electronic products of other brands. Now, earlier this month, the company had also announced that it has launched mass production of Google Pixel smartphones, and company's wholly owned subsidiary, that is Pagid Electronics, had entered into a contract manufacturing agreement with Compal for manufacturing of mobile phones. And the commercial production for this at Noida unit has been started, is what the company has highlighted. So on back of all these news, Dixon remains in focus today.
All right. Upasana, thank you very much for that. Stock's up about, 1.4% or so as we speak right now. I mean, it's a quiet kind of a start, and I think we'll have the first rates in the market open coming up in a couple of seconds from now. 15 points lower on the Nifty. We're at 24,750-ish. And of course, I mean, the Sensex at about 82,000, about 100 points or lower. So slightly sideways, softish start is what you are working with. Hopefully we will have a more settled and not a one-way day, but of course, nothing like what we saw on Friday with that big sell down and that big recovery coming through as well. Mid-cap index is up about a quarter. And I think with the small cap index, which are also starting slightly in the green. First rates and lots to track. We'll look at the indices and we'll get to individual stocks as well. So not very much to show as far as the first sort of trades are concerned. We are absolutely flat, but blinking red and green. 24,765. Nifty Bank 0.25% lower. 53,470, 460. The Sensex is starting slightly lower, 0.12%. The mid-cap index is up about 0.25% or so. So I reckon even in the first, within the first minute or so of opening, more action as far as broader markets and some of the mid and small caps are concerned. The heat map should come up on your screen, give you a quick sense of what the start is looking like. And there you go. More down than up. 30, I think about 25, 30 odd names are lower, and the others are starting up in the green right now. So not very much to really show for it as far as the index is concerned. 24,733. We're starting about 32 odd points in the red. Let's just quickly look at a few stocks as we sort of, kick off things here. And I think Nigel is with us. So Nigel, why don't you take us through stocks?
Well, that's right. A few stocks that are moving around today. You have Happy Forgings. They bagged a 140 crore order to supply crankshafts. So that stock is up close to around 5%. You have HBL Power. They bagged an order for around 1,522 crores for Kavach equipment for one of the loco works. So that's why, in fact, that stock, has done quite well as well today. That one is another one that's buzzing around. RITES bagged an order for around 300 crores from MEA for integrated check posts. That's another stock that's buzzing around in trade today. Dixon Technologies, they have signed a binding term sheet with Vivo India to form a JV to undertake some OEM business here in India. And in fact, that could throw up a big opportunity. Stock at a fresh high, making another high in this morning's trade. Lokesh Machines, Mahindra & Mahindra has cancelled the supply of auto components orders. Keep an eye out on that stock. And also keep an eye out on Bombay Dyeing. The volumes are fairly decent right now. Reports suggest that Mr. Jay Vadia is returning as the director of group companies. It's seen that he's going to retake top position as an MD at Bombay Dyeing. So that could be another stock that's in focus. But a good start to trade, particularly for the broader markets. The breadth of the market is telling you a picture. 1,500 stocks advancing for just 500 stocks that are declining. Though the headline index is down 20 points, you'll have to say that's a good start to trade today.
Oh, absolutely. And, broader market, I think, is what makes all the difference. 3-1 in favor of advances as we begin the day. The biggest volume-led gainer, by the way, and it's all broader markets, is HBL Power. It's about 730, huge. I think it's a 10 bag over the last 3 years. And it's up 5%. Large volumes are coming through as well. This is a big underperformer. Cosmo First, stock's up about 7%. It's really not gone anywhere. But from the lows, it's come up a little bit. 740 was the recent low, and back to about 890. The only reason I'm mentioning is because volumes are really high. I think Nigel mentioned AFCONs. So these railway rolling stock names, Kernix, for example, is up 5%. Maybe we could look at some of the others like Titagad, the RVNL and the Ircons, etc. Of course, need no special reason for those stocks to do well. But these have been doing well. Last week, I think they did well in the second half, and they're doing well today as well. Premier Explosives, I think, 7.5%, 8% higher. Decent sized volumes again here. And Wockhardt Pharma is starting with about a 4% pop this morning to begin the day. On the downside, Angel is the top volume-led, number one volume-led loser. It's down 1.5% in terms of price cut. Ixigo, the OTA, is down about 2.5%, 150. Newland Laboratories is down about 1.7. KPR Mills is down about 2% or so. Titan is down nothing. Actually very small, 0.5%, 1%. Those kind of changes are coming through. And maybe just take a quick look at Gokuldas Exports as well, because last 3-4 days, it's come up very, very nicely. I think it left off at about $1,200 and took out its, for 12 months stock did nothing and then saw a sharp breakout over the last 6-7 days. And now it's okay, 1197 or so not very much on it. So 40 points to show for it, but this is the very, very initial couple of minutes of market open. Let's get an outlook going for 2025. Last couple of years have been great. What is 2025 going to be like? We have Gautam Chachoria, Head of Global Markets India, and Tanvi Gupta Jain, Chief India Economist at UBS Securities India, joining us right here in our studios. Gautam, Tanvi, great to have both of you here. Appreciate your time. Let's just start at a very simple, basic level. It's been a good last few years, right? Actually outstanding if you look at broader markets, not measured by just the Nifty per se. 25, Gautam, are you starting with a positive skew, very positive skew, or kind of a more tepid kind of, what are enthusiasm levels like?
I'll start. Thanks for having us here from UBS. I'll start with a mix of two things. One is our EM strategist. He's still underweight India on a relative basis for 2025. If I speak to investors and the feedback I'm getting, look, it basically boils down to policy stance and reforms agenda. India underperformed last few months largely because of the earnings miss and growth surprises, not necessarily because of India, China, and what's happening globally. Those, in our view, were small factors. The bigger factor has been the slowing growth here.
And you said policy stance. You mean monetary or fiscal?
Monetary and fiscal both. And monetary also, Tanvi is the expert there, but mix of both rates as well as a liquidity stance.
And you think the slowing that we've seen in the recent months is because of that?
You could ascribe a large part of that. Again, both monetary, one of them doesn't work in itself. It has to be together. So when both of them were, in a way, slowing down or forcing growth slowdown, in totality, we saw the surprise or negative surprise to some extent in 2Q earnings or in the GDP prints.
So that gets us to Tanvi. It's all stance, both fiscal and monetary. On fiscal, there is broad agreement that government spending there's no option, but it has to pick up in the fourth quarter. Monetary, it's kind of less clear. So just your first thoughts.
Sure. So if you look at the growth momentum in India is clearly slowing. And I think early 2025 we'll get to know what is the likelihood of US imposed tariff hike on China. And that will definitely lead to more downside risk, not only for India, but as well as the global economy. So I would say India definitely needs a monetary as well as a fiscal policy support. Fiscal policy at this point, we have seen the government capex spending has been lagging. Year to date, capex is down 15%. Even if I expect that the government will be increasing the capex spend by 30% in the remaining 5 months, the full year capex is only going to be 4%. So clearly, I think at this point, there is definitely a need for monetary policy support as well. We have a 75 basis point rate cut expectation starting the Feb policy of next year. Obviously, a focus will be more on how and the timing of the rate cut, especially with the weaker FX. But looking at the real policy rate in India, adjusted for the GDP deflator, at the upper quartile or the 10-year upper quartile, definitely there's a room for a rate cut in this cycle.
Okay. Hi, Tanvi, as well as Gautam, and good to see you all in the studio. Thanks a lot for coming down. Well, a quick question on the current GST rates. I was speaking to a couple of experts last week, and some of them indicated maybe the government should look at lowering GST rates. That could be one of the measures. Do you agree or you don't think so?
I think in the past we have seen that if you reduce the direct tax rate, it may not have a direct impact on the economy because I can use that lowering of income tax rate to boost my savings rather than really boosting my consumption. But a cut in indirect tax rate generally tends to have a much larger impact on consumption spending because it's a tax on consumption rather than a tax on my directly income levels.
Yes.
But I would say a GST council has to decide. It is not so much to do with the government.
Yeah.
Eventually, the GST council has to take a call. And the GST collections have been buoyant. The tax revenue in India has been buoyant. So maybe we can look at specific products where we want some easing in the GST rates. But definitely one idea which is already going on in the market and should have or should bode well more for consumption.
Okay, on select items, maybe some kind of a cool-off could bode well. Well, Gautam, you come in. You've given us an answer with regard to 2025. But you stop short of giving us estimated returns. 2025, which way would you be leaning? Mid-single-digit returns or high single-digit returns? Or do you think that we could brace for a difficult year, which would mean a negative year in terms of equity market returns for 2025?
Look, there are many moving parts, as always is. But,
indeed.
Even more so now, given the global backdrop of post-US elections, the policy stance there, as well as, look, there's a lot of hope building out around fiscal and monetary. And I'm less worried about what happens to FY25 GDP print and what happens to 3Q or 4Q earnings. I think that's gradually getting priced in by the market. Market knows that growth recovery, if at all, will be slow.
Yes.
What's critical is what scale this policy stance happens at, and therefore what's the outlook for FY26. And I think that's where it boils down to whether it's going to be a tough year or whether it was going to be a single year, double-digit year. Look, valuations in India, I'll worry less given the flows locally have remained resilient. And I don't see any reason talking to all the key clients who have these flows coming in, it's stopping anytime soon. So if the flows will remain resilient, I won't worry about valuations or necessarily market correcting in a meaningful way. Consolidation phase or single-digit, double-digit will depend, to me, boils down to policy stance and reforms agenda. And I'm not underemphasize the reforms agenda part. Look, India also has been a big reform story over the last few years, which has given hopes to market that the long-term growth in India looks exciting. That's taken a backseat along with the short-term earnings and short-term growth because elections, post-elections. Now there's no election happening.
There's no excuse.
No happening for many months now. So whether we see a reforms agenda back on the table in the budget, post that, pre that, I think that also plays a role.
Since you mentioned earnings a couple of times, FY26, what are you all penciling in terms of earnings? Because FY25 is not going to be as good as what we thought at the start of the year. FY26?
Analyst expectations in India always is that you have a recovery next year and we go back to low double digits to high single digits. That's a broad range, depending on the sector you look at. But the question is not just that. It's what markets start believing in. If it's going to be a double-digit earnings growth, which is linked to the policy stance, I think markets will be fine. We should still expect a single-digit or even low double-digit returns.
How was 24 in terms of, I mean, so UBS now, do you have a lot of mid-cap coverage, Gautam?
Yeah,
mid-cap, small cap? Yeah. That's where the interest is, right? Isn't it?
It still
because
is.
The larger conventional sectors, I mean, it's a bit thanda.
Yeah.
But broader markets, it's exploding. I mean, the interest levels, activity. So just,
Absolutely. So look, that's a space we want to keep building our coverage on, but going back to where market interest is, clearly among the foreigners, if you go back long, many years, it used to be the big private banks, consumers, IT services, and that's what's been not performing that well in the last 2, 3, 4 years. The interest is broadened out dramatically. We all know, we spoke about industrials, etc. That's not going to change in a hurry. Even now, despite the weak earnings or earnings cuts, those sectors, the cyclical sectors, are still seeing good growth compared to the rest of the markets. So I think that's a continuing trend, and that's what we want to tap on by expanding our coverage. Even today, investors' interest, like we had a conference a month back, the foreign clients, they were more interested in looking for bottom-up ideas around the mid-cap space. So that space is continuing.
Again, it's all single stocks and individual ideas, but there are some themes from where these come from. I mean, new energy transition. I mean, these are all sort of new exciting areas. There are lots of listed opportunities which were not there 3-4 years ago. So any themes you can identify which you think one should look for? I mean, as they say, fish where the fish are. So where are the fish?
So look, the names you mentioned, nothing new for us. Those are sectors and themes we remain bullish on longer term. Our analysts, for example, industrials analyst has been downgrading a lot of names in the last 3 to 4 months, given where the valuations are, given the earnings momentum. But that's a space to be in. Industrials, cyclicals, capex, specialty chemicals. The sectors where we are not so convinced yet at a broader level is pharmaceuticals, where we see very select opportunities, but broadly we see headwinds. The renewable space looks very exciting, very exciting. There's a lot more which can happen versus what's been announced. And we're already only seeing the early stage, you would say, of the listed universe participating in that in a big way.
When you say renewables, what part of the renewables chain?
The entire value chain, from utilities to suppliers to EPC companies. And we've seen the playbook happen in China last many years. It's early stage in India.
Is it driven by protection though, a lot of it?
Look,
I mean, not right or wrong, but I'm just saying.
Forget right or wrong, but protection is also in the context of what's happening globally. If it's protection happening only in India, then it would be a worry from a longer term.
It's happening everywhere. So
if it happens everywhere, then it's possibly feasible.
Okay, all right. Tanvi, you come in on this. You know, we've got a new RBI coming up. Mr. Malhotra takes over from Mr. Das. Some would have argued that maybe, he should have got an extension of, say, a year or so. The bigger problem is the vice captain, so to call it, Mr. Patra as well, could be moving out. How do you see, the new governor in terms of a stance, continuity, as well as the key focal points that he'll have?
Sure, this is not the first time we are having a bureaucrat turned banker.
Indeed.
We did see Mr. Das have a exceptionally good tenure, and he was able to ensure that RBI's autonomy is managed, and at the same time was able to very strongly manage the relationship between the RBI and the government, something which we had not seen in the past, and there were always a lot of frictions which were out there. So we are more hopeful that even the new RBI governor will be on the same path. Irrespective of the RBI governor, our call is still the same, that the inflation is going to soften pretty sharply. We are already seeing the number going down from 6.2% last month to 5.5% in the month of November. Our forecast is saying that the inflation will be softening towards 4.5% by the month of March.
Okay.
So clearly inflation is softening. Growth is showing signs of slowdown, even though we do see some cyclical pickup in the second half. It's largely because of festive season demand, good monsoons now finally having impact on the rural sentiment, which were yet to be seen. And we are hopeful that the government capex spending will be picking up, even though it is going to fall short of the target. But I would say, irrespective of the RBI governor, we are maintaining our call that the policy stance as well as the rate cut cycle is going to start in India. The question is on the quantum of rate cut, how much opportunity will India have to cut rates, especially when we will see the new Trump administration resuming office in Jan, and what it means for the tariff hikes on China. I mean, that is all in the media. So our US team is expecting that 75% of China's goods get taxed as 60% from the September quarter. Okay. In case we do see any preponement of tariff hike, then I think the ability for RBI to cut rates will also get limited. So as of now, we are still having a 75 basis point rate cut, assuming Trump-related tariff hike only come into picture from the September quarter.
Sorry, you said 60%? 60%.
Yes.
China imports into the US.
Yes.
Right, on Chinese goods.
75% of China's goods get taxed at 60% in 4 tranches.
60% is what he said. Well, everyone assumes that now it won't be 60, it'll be, that's just a starting gambit.
We still have that 60% tariff hike in our forecast. Wow. And that's why we reduced and lowered India's GDP growth to 6.3%.
Because, I mean, the general consensus view is that it's all China. It doesn't have any other impact. India is insulated. But it rarely ever works like that, right? I mean, there are second order, third order sort of implications, and it feeds through eventually.
Absolutely. So there are 3 ways India can get affected. One is a global growth slowdown, largely because of fading China as well as the US growth. And when US growth has been very strong so far. So India is a low beta economy, but India is not immune. So India will get affected indirectly. Second, the biggest risk, I think why we are downgraded India's GDP growth forecast for next year is that the private corporate capex recovery, which has been concentrated in a very narrow part of corporate India, might get further delayed and pushed out. If I'm a corporate, I would have, I always have that option of buying a cheaper import from China, especially when China has excess capacity to offload. And third, and I think the market is not discounting the fact what happens to RMB, because if you compare with 2018-19, RMB depreciated by 13%. China is going to appreciate against RMB. It makes a lot more sense. If I'm an Indian corporate, why not I import from China rather than expanding domestic investment in India? So I would say...
What's your rupee forecast? You think we're headed to...
We are actually expecting rupee to gradually depreciate towards 87. This is based on a 5% RMB depreciation, what my US and China team are forecasting.
Has to be, right? To stay competitive. It has to, I mean, join to the hip in that sense.
Yes.
Tell me just one point. Government stimulus will do the job, and we need both monetary and fiscal. But just there's an underlying worry, and this is a minority view, that maybe growth has now come back to levels where we were before COVID hit. I mean, that quarter, right? So you were actually, you had this big COVID sugar rush after COVID. I mean, spending really boomed, and the top end really prospered and made money. And if people, especially who held stock, I mean, they made a lot of money, and it went everywhere. And now all that is kind of fizzling away, and you're coming back to trend growth. I hope that is not true.
No, absolutely not. I'm not of that camp, because I think the macro stability risk has improved dramatically since the COVID-19, before even the COVID-19 shock. Your balance sheet is much stronger. Corporates have used COVID as an opportunity to deleverage. Asset quality of banks, despite that massive credit boom we have seen, is still very much, or I think one of the best we have seen in 10 years. Right. Before the COVID pandemic happened, the growth slowdown was also partly because of NBFC crisis related after effect. I don't see much of an impact right now. So I think India is in a much stronger, much better position than what we were pre-pandemic. So definitely, I think the trend growth is more towards 6.5. That time we had reduced our trend growth to more towards 5.5, 6. So clearly, we are much better than what we were in 2019.
All right, Gautam, let's get you in then. I think all of us dream of having a better house, maybe a better looking one, a larger one as well. I've personally pushed back my plans for a few years, going by the kind of pricing that we're seeing. But that's a sector that y'all are clearly quite bullish on, right? Real estate. It's come back after a while. It's enjoyed the last 2-3 years or so, but you all believe there's a further runway from here? What's the geography you're most bullish on? And if you could help us out with some key points.
Yeah. So look, it's a broad view on the property sector, not just geographically. Okay. The argument being, like it's a cliched term, is this time different? but that's the argument our analyst is using, that this time is different, even though there is discussion that property prices have gone up. And the analysis is based on the usual matrix of affordability, inventory to sales ratio, demand supply, the structural demand trends, etc. On all the metrics, Indian property cycle is far away from reaching its peak. These are the fundamental level. Now let's look at the stocks. Without mentioning individual stocks, even at the sector level, we are nowhere near peak in terms of where the valuations historically have gone to, or even globally, where we see properties are a very deeply cyclical sector, and there are accounting variances. But even then, what's the delta from bottom to an upcycle in terms of multiples? Indian property sector has a lot of legs left to go. So again, it's not just a 6-month call. It is one of the structural calls our analyst is making, and we all as a house are backing that property sector in India still has some years left.
Number of 100 crore houses which are being sold. I saw a report on the newspaper over the weekend. I mean, just amazing. So I think that's a faster selling category, maybe, right?
So that could possibly reflect the wealth creation we are seeing in the country. And again, look, that's not the market of the sector. That's a small part of the market. The sector,
but it's still premium because affordable is not doing well. I mean, there's no supply affordable, right?
Absolutely. So again, when we say premium versus, say, I won't say affordable, but somewhere in between, that segment still has long legs to go. And we are seeing momentum there also.
So if you typically look at a cycle, which year are we in for the real estate?
So I think we at least 3 more years, unless we see an economic shock or something. We are at least 3 years away. Look, the biggest data point is the inventory to sales or the supply coming in. It's nowhere near any cyclical peaks. Nowhere.
Anything else from the listed, sort of large listed space, lots of plays which you think?
So utilities in the renewable space, we remain positive. Then we are more cautious around autos and consumer discretionary. This is on the cautious side, which also we've been sticking to and still maintaining that view. We still haven't seen any signs of changing our view on that space.
Well, indeed.
Quick commerce, etc.
Quick commerce, Quick commerce, you'll have a view out there. And the newly listed one, I think, is something that you'll like quite a bit out there. So if you could tell us between the one that was listed earlier, that corrected and then bounced back, and the newly listed stock as well.
I won't differentiate between the two, but we like both.
Like both of them, okay.
So our analyst is bullish on that space. Again, the simple argument is the opportunity set is just too big, and we are far away from reaching anywhere near peak penetration. So it's such a long runway for growth, and still the incumbents have an early start. You'll see more competition happening. But we've seen the playbook in multiple other subsegments also.
What does it mean for listed physical retailers?
So look, they are also trying to evolve and replicate.
There's one which is listing now, which is going to come list on Wednesday. There's of course the large, which is already listed stocks underperformed quite a bit. I mean, they'll have to evolve, you think?
They will evolve. They will have to evolve. Ultimately, everyone has to evolve in response to consumer asks. But the question is who can do it at scale as a third party and who can do it for their own business. And it'll be mix and match. So as a distribution channel or as a way to sell to customers, it will evolve. Absolutely.
You know, since we briefly spoke about China, normally when you talk about China, you talk about metals, talk about chemicals as well. So what's your view on both those two spaces? Because it clearly has an impact on the global space as well, both in metals as well as in chemicals. Any view?
So look, at a larger picture level, metals, we don't have coverage right now, so I won't be able to give a view. Chemicals, right now, it's stock specific. So it's an opportunity also as well as a threat. Like if there's a lot of supply coming in China, it's a threat from a dumping / oversupply, but also an opportunity for Indian companies in terms of the China plus one theme. So it's not a universal theme across the sector. Each company's own strategy. So that's the way our analyst has approached it. It's whichever company is better placed in the China plus one theme, we are bullish.
All right. And, you know, before we lead into our next conversation that we're going to have, what about the NBFCs as well as, you know, the banking space? There are reports that suggest that maybe credit growth is slowing down a little bit, and there could be some near-term pain as well in some of these NBFCs. How do you all approach that space? I think in banks, you're like the top banks, right? The largest private sector bank.
So we have been cautious on that space. Our analyst has been highlighting stress building up, including some early data points showing stress even in the CV sector, for example, beyond MFI and beyond unsecured. So, and we still don't see any signs yet from on the ground of it bottoming out. So you see early leading indicators of bottoming out. We haven't seen that. So we remain cautious broadly on that space. We're still cutting earnings in that space, except the large private banks or the SOE banks. we're still earning. So,
Tanvi, one is slowdown. Again, we have, by the way, the Chola management, one of the largest NBFCs, joining us on the other side. But one is growth slowdown because of the lending opportunities, etc. But the other is the RBI and what is done, right, in terms of cracking the whip. And 2024, we've seen so much action.
Yeah.
It's an unfair question, I know, and it's not like one size fit all. But do you think that also perhaps is the reason? Because so many players are in a way out of the segment, or products are out of the marketplace in that sense, and maybe that's also hurting at the margin. Do you think that'll change a little bit? Maybe a little bit of easing on the regulatory front?
That is what our base case is. So if I look at why my GDP growth slowed down so sharply to 5.4%, we need to take into account that there was a very sharp slowdown in headline credit growth, even though bulk of it was consumer credit. But even your headline credit has slowed from a peak of 18% to as low as 11%. And all that happened in a matter of 6 months. So going forward, we are actually expecting the credit growth to stabilize at around 12%. I would expect, I'm not building in more regulatory tightening in my base case when I'm looking at the growth forecast. We are assuming status quo on the regulatory front. So credit growth largely stabilizes at around 12%. That is what is feeding into my numbers. Obviously, we would prefer to have a better mix of credit rather than only focusing on consumer sector. Obviously, we would want a more broad-based recovery in credit, hopefully towards the industrial sector or the capex-oriented sector. But I think a lot of global uncertainty is in the price right now to actually expect that the credit growth could actually flow into industrials or the larger corporate in a meaningful way beyond the working capital
But the demand has to come from them, and which perhaps is not yet happening in a big way. Thank you both for coming down to our studios, Tanvi and Gautam. It's a pleasure. Appreciate it very much. Thank you. So that's the conversation for 2025 from the top UBS India team. I'll take a quick commercial break here. And as promised, that Chola conversation will follow in a bit. Market, by the way, is down about 50 points. We're at 24,700. And lots of stuff moving around, which we will address as well. So new names in the mix, which was not there in the morning. And some of them we'll address. But let's just take that quick commercial break. As I said, we all have the Chola management on the other side. We talk about H2 2025 outlook with Arun Selvan of Cholamandalam Investment and Finance.
Which we have lost in the process, and we continue to lose till at least in my lifetime. Thank you very much.
Well, thank you, Dr. Poonawalla, for your very, very noble cause. We're ever grateful, and congratulations again on receiving this award.
The Brand Campaign of the Year award recognizes excellence in creativity and impact in marketing. And the Brand Campaign of the Year 2024 award goes to Ariel's Share the Load. Congratulations, and request Josie Paul, Chairperson and Chief Creative Officer, BBDO India, and Mukta Maheshwari, CMO, PNG India, to kindly join us on stage. And while we take a glance at this amazing campaign.
Equality begins at home, and for
Welcome back. Well, the markets are down a little bit in the last few minutes. We're down close to around 50, 60 points odd. But let's focus on the auto financial space now. The pain in the first half of the year was elevated for the sector. Is the situation improving the second half of the year? Will dispersal see a pickup in the second half? Is asset quality improving? Well, to understand all this, we are joined by the president as well as the CFO at Cholamandalam Investment, Mr. Selvan, who joins us on the show. Hi, sir. Good morning and thanks a lot for joining in. Well, tell us, what is your feedback? Second half of the year is shaping up better. Are you seeing some kind of, a return in terms of growth rate? And a quick comment on asset quality as well. How much of pain is there in the system?
Yeah, we're seeing some return in, both demand as well as improvement in asset quality. I'll focus first on vehicle finance, which still is our largest part of our portfolio. In the vehicle finance, while CV's growth is still a bit muted, we are seeing some traction in heavy commercial, especially in the segments we are working with in the small road transport operator segment. And our used vehicles as well as passenger cars and MUVs are showing reasonably good growth. tractor is picking up, while we are not seeing that much traction on the CE as well as on the mini LCV types. So it's a mixed bag, but we see the rural coming back with the tractor and some amount of PVs picking up in the rural, and the light commercial and the heavy commercial vehicle. With regard to LAP, we are seeing good growth there, and with regard to affordable housing, we are seeing good growth.
Okay, all right. But tell us, is there a perceived slowdown in business momentum? Could you tell us what is hurting? Is it inflation that's hurting? Is it higher interest rates that's hurting? Because various pockets, the feedback you get is there is some kind of a slowdown. Are you experiencing that? If yes, which segment and what's the root cause?
Yes, in the as I was saying, in the CV segment, we still have not seen the full comeback which we expected to happen in the third quarter. While October was a good month, November sort of mellowed down, but we are expecting December volumes to pick up, especially with the calendar year coming to a closure and the model changes that would come into play. So we are seeing a reasonable growth. It will be certainly a growth over last year's same quarter as well as Q2 of this year, but it may not be a large growth that might have been initially thought about.
Right, Mr. Selvan, good morning. Prashant here. Sorry, just to pinpoint on commercial vehicle side, sir, could you give us some sense? What has growth been like and what do you expect for the full year?
So the vehicle finance overall, it will clock a growth in the range of around 12 to 15% on the disbursement, and on the asset side, it should be in the range of around 15 to 20%. This is what we are seeing as we move into Q3, Q4, because these 2 quarters last year has been fairly good, but still we will be better than last year. It may not show a significant good growth. Our used vehicle traction is good, and we are seeing passenger vehicle also growing in a reasonably good shape. But we still have to see the growth coming in the heavy commercial and the light commercial vehicles.
And those growth rates which you mentioned for Q3 and Q4, you think it's a bit lower as compared to what you imagined you would be at when you started the year?
It would be more or less similar from a vehicle finance perspective, because we had factored in that these would be a little slower growth. See, what is happening is we are able to manage the similar level of growth because we have the product diversification. So whatever we are seeing as a slowdown in the new commercial vehicles, we are able to manage it with the help of used as well as the increase in the passenger cars. Two-wheelers have sort of stabilized. It is not growing aggressively. It is sort of keeping at the same pace as what we have done in the first 2 quarters.
You're not dependent on one segment, and I think you kind of managed to sort of press the pedal on other segments when growth somewhere else slows down. So overall growth guidance remains same, 25%?
Yes. Overall, company as a whole, including VF, LAP and other products put together, we still see the growth at the 25% number. I know it was being pushed to 28, but I think we should keep it at the lower end of the 25 to 28 forward statement we had discussed earlier. We should still clock 25 plus.
Okay, all right. Mr. Selvan, what about the new business? As a proportion of your total mix, how do you see that improving, and what will be the ideal contribution to your total business going ahead? If you could give us a time frame as well as contribution percentage.
So the new businesses will continue to be less than the 15% number which we had been, in the first half of this year. The mortgage businesses, which is the LAP and HL, will be the one which will see growth at the cost of a slight proportionate reduction in the vehicle finance. So you will see vehicle finance coming to around 54-55%, and then the mortgage businesses growing to around 32-33%, and the balance coming in from the new businesses. The unsecured will remain at the 8 to 9% level, and there will be growth in the SBPL and the SME segment to make up the balance 100%.
Okay, all right. Mr. Selvan, final question before we let you go. Give us a comment on the net interest margins. How do you see that shaping up? The RBI in all probability will start cutting rates from early 2025. So how do you see your NIM shape up from here on? And also quick comment in asset quality. I recall in the Q2, the provisions had spiked up and you explained that to us as well. But could you comment on both these two, NIMs and asset quality?
The NIMs will marginally improve. We are not factoring in any rate reduction by RBI, at least for this financial year. If at all it happens in February, the impact of that would be marginal to the extent of only 1 or 2 months at best. So we are not factoring in, but we are seeing some amount of benefit because a lot of our borrowings have been benchmarked with the T-bills and money market linked instruments. So that has given us some improvement whenever there have been fluctuations in these instruments. So NIMs will improve with also the increase in the marginal yield as well as the book yield of vehicle finance, which we, as you recall, we have been talking about the mix to change as it moves into as the old book, which was dispersed during the COVID period, runs down, and the new book with a higher yield becomes a larger part of the book in vehicle finance. With regard to asset quality, yes, we did see some increase in Q1, Q2. You will see some drop in Q3 and more in Q4. This again we had iterated when we spoke earlier.
Mr. Selvan, we'll leave it there, sir. Thank you very much for joining us. It's a pleasure speaking to you, as always, and getting a sense of what the rest of the year perhaps is going to shape up like. Some numbers there from Mr. Selvan at Chola Finance as well. We're going to take a quick commercial break here with news that I think the market's also recovering. About 10 points or so is what the Nifty is trading down by. And lots of new names, as I said, and we'll come to some of these stocks which are jumping around in a bit from now. Well, it's holiday season, and this is the time, of course, the best quarter for the hospitality sector, the hotel sector as well. How's demand shaping up? What are room rates like? And is it as strong like it has been for the last couple of years since COVID? We're joined by two hoteliers. We have Ashish Jankanwala, Chairman, Managing Director and CEO at Sami Hotels. Nikhil Sharma is Managing Director and Area Senior Vice President, South Asia at Radisson Hotels. Gentlemen, good morning. Great to have both of you here. Appreciate your time. Prashant, this side. Ashish, let me start with you. How is the third quarter panning out like? The big sugar rush post-COVID, has that lasted into this quarter as well? In terms of occupancies and room rates, is there any softening at all, or is it all up and up? Go on.
Hey, Prashant. So thank you for having me on the show. First of all, there's no sugar rush. COVID was bitter, and I'm glad that it's over. Whatever you're seeing in terms of performance is pretty stable. It's going to last us quite a few years. And this quarter is no different. So we've seen really strong performance continue this quarter. And it's been, as I said, something that we've seen coming in for a very long time.
So the third quarter, so far what you've seen, of course, we can't talk specific numbers, sort of much better than Q3 of last year?
Yeah, so we can see even for Sami, at least because we run a large part of business hotel portfolio, we had seen even Q1, Q2 grow very strong over last year, same time. And Q3 continues to maintain that trend, almost maintaining a double-digit revenue growth over last year for same-store hotels. I'm not talking about new inventory addition and all. So yeah, it remains pretty strong, actually.
All right. Hi, gentlemen. Good morning, and good to see you. And you all seem to be in the best possible sector, and the best possible time. It's the most wonderful time of the year. Ashish, give us some numbers. I recall when we chatted last, you were talking about double-digit revenue growth for FY25. Is that well and truly on? Could that be a surprise on the upside? And if you could quantify it, what could be the rough range? And I think you were suggesting that the adjusted margins were at around that 40% odd mark, and you were confident of holding out there. You reiterate that confidence?
Yeah, so I think there is no reasons to worry about maintaining a double-digit total revenue growth. And I'm talking same-store assets, and also the margins keep improving. This quarter and the next quarter, which is Q3, Q4, it's a rate.
Okay, all right. I think we have lost Ashish's audio, but I think we'll get back to it. The broad point was there's no big reason to worry. So that's good news. But in the meanwhile, let's get Nikhil as well into the conversation. Hi, Nikhil. Good to see you, Ben. Well, could you tell us what is your total portfolio like right now? How much of your portfolio comes in from tier 2, tier 3? And what is the kind of demand you've seen in this third quarter if you compare it with the previous ones?
Nigel, thanks for having us. Radisson Hotels in this country operates almost 130 hotels. We are in 78 cities as we speak. And I would say about 50% of our portfolio today is broadly between tier 1, tier 2, tier 3. And I would differentiate leisure as a segment by itself. So really, the Saputara, Lonavala are really leisure segments in themselves, and I wouldn't categorize them in tier 2, tier 3, tier 4. Of course, this is the best quarter for us as the industry, and at Radisson this year, we've seen average ADR go up by 10% in our like-for-like hotels, and for us, meetings and incentive, which is MICE, is a big contributor. And we've seen a 12% increase over last year.
That's good to hear. Sorry, Nikhil, overall, in terms of Q3 over Q3 of last year's, again, double-digit kind of growth?
Absolutely. And I know Ashish will hate me for saying this, but the best ever quarter, because Ashish has an analogy to it, and he should answer that. But this is the best November that we've seen at Radisson Hotels from a revenue perspective and from a growth perspective, and December is going to be better than November, and that's historically the best ever quarter for us. Which is true for the industry as well.
I completely agree. We have Puneet Chhatwal here. I remember speaking to him, and I remember him using that same phrase, best ever. And he's used that now for many quarters. So it is indeed been a very super time. Ashish, you want to take that? Nikhil wanted to toss that to you.
So listen, my view is that the demand supply in the hotel sector will keep delivering best ever quarters for several years to come. It's like me saying I'm older this year than I was last year. Growth is imminent. I think the way we interpret that is it's just the beginning. Hotel rates in India are still not, they have a huge headroom to grow. So I think we shouldn't be surprised about the fact that every year you will see a reasonable growth. Our long-term forecast shows anywhere between high single digits to early double digits, sustainable growth rates in total revenues, So I'm not surprised. Obviously, I'm very pleased, but I'm not surprised that everybody will say, this was my best ever quarter. Just as I would say, I'm older this year than I was last year.
No, that's well put. Ashish, but we had, so what is driving, is this change in something, so I used the word sugar rush, you said there's no sugar rush. But something is different, right, compared to where we were in 2019 and what post-2020 has been like. And what people want to do, things change. Consumer habits change. Quick commerce, for example, is an example, right? Very quickly, how fast consumer habits have changed. I don't know if that's a correct analogy, but do you agree? Is that, or you think this was anyway going to happen? What's your sense?
No, I think a large part of this was in any case going to happen because between 2008 to 18, the whole industry was getting built. And you saw some sort of a disturbance as any sector gets built. But 2017, 2018 onwards, most of the large cities had started stabilizing on new supply. And I can be very certain that as supply situation stabilizes, there was always enough demand for accommodation options or hotels or tourism in India. So I think it's very, very solid demand supply. We don't see supply catching up with demand in the next few years. And that's why, as I said, when demand and supply are so favorably stacked in favor of a sector, you would continue to see strong performance. There would always be disappointments about a quarter or two about the last year base, so on and so forth. But we've seen how last year people were worried about, you had G20, you had the World Cup. Everybody was worried that is that the peak and would you be able to deliver growth above that? But as I said, we have seen double-digit growth on same-store hotels in spite of kind of inheriting a very strong base last year. So I think it's solid growth. I think it's more like protein than sugar rush. It's building up your muscle. So it should last you a long time.
Ashish, easy to say you're on that side. You know, I'm taking my family of four for Christmas out, and you know, I think it's burning a lot of my fat. I think so. You know, just thinking about the kind of expenditure, but it's all for a good time and memories, is what I understand is what makes it all worth it. But let's talk about business then, Ashish. Let's get a couple of numbers for you. Your debt reduction plans, well, they have been going according to plan. Could you tell us by the end of this fiscal, what should your debt number look like? And before we had the bit of that audio problem, you know, you were going to tell us about the profitability aspect as well, adjusted EBITDA margins. How does that go? So comment on both these two.
Yeah, so I think we have seen our stable portfolio cross 40% EBITDA margins. And I think over the next few quarters, you would see the whole business kind of getting towards that. So we're pretty happy with where the margins are. We think there is a reasonable headroom for growth as far as the margins are concerned. At a company level, we should report higher than 40% margins over the next few quarters. So that's one. I think in terms of leverage, we are very comfortable right now. You know, as you know, we've been reducing leverage ever since we went public. We are generating free cash quarter-on-quarter basis. So we're doing two things, of course. One, that gets used towards reducing leverage. But even more important than that, as you know, we have invested some bit of a capital in growth projects. And most of our growth projects are very short capex to revenue cycle. So as we put capex, we expect the corresponding revenues to come over the next few quarters, and that will further help us deleverage the business because we're not really using any leverage for growth. You know, so I think combination of free cash and then free cash being used towards both deleveraging and growth is really helping us kind of accelerate the whole deleveraging plans that we have for ourselves.
Okay, and I think the last recorded net debt number we have is 1,900 crores. You know, as you said, you're throwing up a lot of free cash. Where is that number headed?
So, you know, for now, it's around the same number because we used about 200 crores of free cash in October for acquisition in Bangalore. So while our gross debt remains the same, our net debt slightly increased because of the utilization of cash for the Bangalore acquisition. But that acquisition will start throwing up both revenues and profits over the next few quarters. So eventually, it will then adjust our total net debt to EBITDA ratios.
And also, you were talking about this Navi Mumbai real estate that you all had, which you all could potentially set up, you know, I think a 300, 350 hotel out there. Give us an update out there. Maharashtra elections are out of the way. What's the progress on that front?
No, so I think we had a very constructive dialogue with the administration before the elections got announced. And of course, then we went into a silent period. Now that the elections, you know, are over, the new government is in place, we will kind of re-engage with MIDC. We believe that we have the right merits and the reputation to make that investment in the state. And as I said, I remain fairly excited about about Navi Mumbai as a future market. And you're right, it should potentially give us about 350 total inventory.
Okay, all right. Well, Nikhil, before we let you go, any plans of listing the company? You know, just look at the valuations. Ashish is smiling cheek to cheek. We have Mr. Puneet Chatwal as well. I met him a couple of weeks ago and he said, Nigel, I'll promise and I'll over-deliver. I'm so sure. Any plans in listing?
Nigel, not at the moment, but never say never. And just to your point on taking the family, you need to be more in touch with hoteliers because I can tell you we're seeing a 7 to 8% increase just in the holiday season. Yeah, whether it's Kashmir or Goa. A lot of media reports that said Goa is down and out. It's not really down and out, at least not for December. It did see a dip through the year, but it's not seeing a dip anymore in this quarter.
I just had one last question to Ashish. Ashish, and you sort of you said best ever and protein, and I like that protein, not sugar rush. You know, as they say, right? What is worth doing is worth overdoing, and we've seen that in the real estate sector. I mean, is supply going to overwhelm, or is it really far out? I mean, at least for the next few years, you don't see that.
So I think in the large markets where the current base of supply is upwards of 8,000-9,000 rooms, you would see that supply is not able to catch up with demand because demand is definitely growing in that 8 to 12, 13% CAGR, right? So for supply to grow at that rate, you're talking about 700 rooms to 2,000 rooms opening every single year. I'm talking about different markets. So I think large markets which have a good supply base today, I feel very, very comforted by the fact that supply will not be able to catch up with demand growth. In some of the smaller markets, you know, things can be a little bit more volatile over the years, where let's say the current base of inventory is 2,000 rooms or 3,000 rooms, and therefore 10% supply growth is, you know, another 200 to 300 rooms really, you know. So we've always said that we find greater comfort and margin of safety in larger office markets or larger hotel markets, where I'm quite confident that supply will find it really hard to catch up with demand, and definitely not in the next 3 to 5 years.
All right. So, I mean, a clean runway in that sense for hotel companies, and many years, at least a few years of double-digit revenue growth, top-line growth is what we should expect, as you put it. Both Ashish and Nikhil, thank you both for joining us here on CNBC TV18. It's a pleasure, and I should end this conversation by saying happy holidays. Thank you very much for being here. So that is a discussion on hospitality and hotels as we wrap up the year. Q3, the best of the year. Well, Walkhard stock is surging. It's up 10%, started higher, and I think it's only picked up steam. Vinny's here to tell us why, what's happening. Vinny, morning.
Good morning. So absolutely the most important drug that we talk about when you talk about Walkhard is the cancer drug, that is WCK 522222. So that is Zynic. Now this drug is an important one for Walkhard. We've seen that, since the approval is coming for this drug, the stock has been buzzing. Now they've said that there's a successful use of this drug in the US for a cancer patient. So this indicates that, this drug is working out well. Till date, they've tried it out on around 45 patients, which have benefited from this compassionate use of the drug, and that is why a positive up move that we are seeing coming in for Walkhard Hospitals, because there's a positive news there. And the new drug discovery portfolio is also focusing on meeting all these unmet needs which are there for antibacterial drugs. So keeping an eye out on this one, because it's an important one for Walkhard, and any positive news on this front works well for Walkhard.
All right, no, absolutely. That's a big one for them. 1524 on the stock. We'll take a quick commercial break here. Mitesh joins us on the other side coming up.
Ariel's Share the Load campaign, conceptualized by BBDO India, has been leading the charge for change. From its inception, the campaign challenged societal norms, asking a simple yet powerful question: is laundry only a woman's job? In 2024, Ariel redefined this movement with its #HomeTeams edition. Through evocative storytelling, it urged families to work as a team, sharing responsibilities equally. By highlighting real-life scenarios, the campaign struck a chord with millions, inspiring conversations on gender equality and inclusivity. The impact: a wave of social media engagement, widespread participation in the #HomeTeams initiative, and a reinvigorated push for equitable homes. CNBC TV18 India Business Leader Awards 2024 proudly presents the Brand Campaign of the Year award to Ariel's Share the Load #HomeTeams.
Ladies and gentlemen, please give a big round of applause to Josie and Mukta here from the Ariel team for this campaign. Many, many congratulations.
Congratulations to you. Would you like to share your thoughts on this?
It's a proud moment and an honor to accept the award for the Brand Campaign of the Year on behalf of Procter & Gamble for Ariel Share the Load. As part of building communication that drives superiority for a product, P&G brands try to communicate values like equality and inclusion, which are absolutely critical to drive conversations in our households so that we can redefine changes needed for society. Thank you so much. Awards like this support our unwavering commitment to build brand narratives that drive the change. A warm thank you to our long-term partners BBDO, who have helped us bring this commitment with their passionate storytelling to life. Brands at P&G, as they look at brand building narratives, do weave in addition to driving business growth, messaging that inspires our communities to have the conversation and inflect change. Thank you, CNBC. Thank you, jury, for putting up an amazing event and for the award. Thank you.
Thank you, Josie, Mukta and team, and congratulations again on winning this award. Well, it's now time for one of the most anticipated categories of the evening, the Young Turk of the Year Award. Now, this award celebrates startups that lead with innovation, agility, while also creating remarkable growth stories. And this year, the Young Turk of the Year...
Welcome back. 30 points lower, 24,740 is where we are at this point. Mitesh is back with us with what he'd want you to do. Mitesh, good morning again. So it's a quiet day, at least for frontline indices. What would you want viewers to do?
Yeah. So Prashant, it's a quiet day, but some stock specific action is happening definitely for sure, and ITS still remains a good back. So, from there, I would recommend buying into Naukri. Buy here with a stop at about 87.30 and a target of 9,000 can be looked at. And the other one is real estate, and I have a buy on Lodha Developers, which is making a fresh swing high. So keep a stop below 14.35. Look for targets of 15.20, 15.30.
Got it. What we'll do is we'll take a quick commercial break here. Mitesh, thank you very much for that. Our special Indianomics segment on the other side, Lata gets speaking with Lohit Bhatia of Quest Corp, Mr. Balakrishnan of Center for Development Studies, and Amit Basole of Azim Premji University to discuss why salaries in India are not rising or not rising at a fast enough pace. That's a conversation. Interesting one. Stay tuned. Coming up.
So I'd like to request Mr. Amit Khatri, the co-founder of the company, to join us here on stage. And while he does that, let's also take a moment to look back at his journey. Mr. Khatri.
In the fast-paced world of connected living, one brand is leading a silent revolution. Noise, India's top smartwatch brand, is powered by innovation and accessibility. Founded by Amit and Gaurav Khatri, Noise has consistently stayed ahead, pioneering smart eyewear and launching India's first smart rings. Even in a challenging 2024, when others struggled, Noise thrived, achieving a remarkable 19% growth rate and crossing 2,000 crore rupees in revenue. Its success attracted high-profile investors, including its first strategic partner, Bose Corporation. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Young Turk of the Year Award to Noise.
A huge round of applause for Amit Khatri, the co-founder of Noise.
Let's make some noise for Noise.
It's a proud moment for all of us, our team, to have this award, and thank you CNBC and jury for selecting us. I spoke to few folks here, few people here. Most of them don't know Noise, which means we have to do a lot of work here. By the way, we are third largest in the world, just not in India, and we are the most downloaded app in health and fitness store. We have close to 20 million users and a lot more to come. So thank you so much, and it's a good motivation for all the noisemakers there in Gurugram. Thank you.
Once again, ladies and gentlemen, make some noise for Noise. It's time now to celebrate visionaries who dare to dream big. Our next category, the Young Turk Startup of the Year, recognizes startups that embody the entrepreneurial spirit, driving innovation and delivering exceptional impact. Let's delve into the incredible journey of this year's winner. Priyanka and Harshil Salot, the co-founders of the Sleep Company, may I request you to kindly join us on stage.
And a big round of applause to welcome them here as we look back at their journey.
In an industry stagnant for decades, one brand is redefining comfort and technology. Co-founded in 2019 by Priyanka and Harshil Salot, the Sleep Company was born from Priyanka's quest for better sleep, a need shared by millions.
Welcome to an all-important Indianomics discussion, a report by Quest Corp, the staffing company, on wage growth in the corporate sector in India published in the Indian Express has made policymakers sit up. The report says that average salaries in India over the past 5 years have risen by just between 1 and 5% per annum, which means, adjusted for inflation, people in the formal sector are earning less than they did 5 years ago, adjusted for inflation. Possibly in response to this report, the Chief Economic Advisor, V. Anantha Nageshwaran, has been advising India Inc. that there will not be enough demand for the products made by their companies if they pay their employees too less. So the question is the steep slowdown that we saw in the second quarter GDP and in the corporate earnings, EPS growth in the second quarter because of low wage growth? And how does one resolve this? I have with me the author of the Quess Corp report, Lohit Bhatia, President Workforce at Quess Corp, and economist P. Balakrishnan, Professor at the Center of Development Studies, Thiruvananthapuram, and Amit Basole, Professor of Economics, specializing in labor at Azim Premji University. Professors and Mr. Bhatia, thank you very much for your time. Lohit, since this is so much about your report, please tell us the top 3 or 4 takeaways from your study.
So thank you very much, Lata, and glad to be with you on this show today morning discussing this all-important topic. This report was conducted and a detailed research was done somewhere at the beginning of this calendar year, and it was finally published a few months before the budget. In this report, we came out with the large macroeconomic data when it comes to employment and the job creation. The second, what we spoke about is what is the total labor market and how does that get subdivided. And the key takeaways from this report is all of us know we're about 140 crore Indians. In the working age population that is 15 to 59, the labor force participation rate is now a little over 61%.
Yes.
That's about 55 crore people. We also said that, by the way, contrary to popular belief that enough formal work is not getting created in the last couple of years, just in the years between 2017 to 2023, as per the EPFO data, about 6.7 crore people came into the formal work and created what is called a UAN or a universal account number. However, when you sum total all of these categories, we still said that a little over 11 crore people have some shape and form of formal work in India, which means that out of the total labor force, which is at about 55 crore, formal work at 11 crore is just about 20 or 21%.
Okay.
And that's what a report was talking about. The key recommendations which went to the policymakers before the Union Budget 24 as well was that how can the government aid and abate, and grow this sector.
Okay.
And last, before I pause, one of the key recommendations that we were speaking about was incentivizing formal job creation, which in many ways we see as the ELI, which came out from the government.
Fair point. I mean, that's very thorough. But what got published in the Indian Express and what led to the CEA's comment is the level of the salary. I mean, besides the fact that you're only giving us nominal, you're not adjusting it for inflation. And even then, the growth in the BFSI sector is just 2.8% for those 5 years, compounded annual. For engineering, it's terrible. Engineering, manufacturing, infrastructure, we would think is important. And, you would have engineers there. And that is just 0.8, less than 1% growth every year. Likewise, I can go on. That salary increase looks very small. Actual salaries is terrible. You're telling us it is 17,500 in BFSI and some 20,000 odd in other sectors. Only IT looks a little respectable at 40,000. I mean, these are average salaries. They are that low?
So let me clarify a few points here, Lata. First, this is from the period 2019 as a base to about 2023-24. This also had 2 years of COVID in between. This data is predominantly for the 600,000 workforce that work at Quess. Now, Quess, as you know, is the intermediary of getting people from the informal labor market to the formal labor market for the very first time. So A, you're dealing with entry-level workers. B, you're dealing with workers who are typically on an outsourced role. C, you're dealing with people who are either freshers to 1 to 2 years of experience. And D, you're dealing with a base which was 2019, and then we had 2 years of COVID impact. Now, let me just add one quick dynamic before I pause here. India's minimum wage average still continues to be at about 13 to 15,000 rupee. Now, many states are below the 15,000 rupee mark. And had Social Security Code or the Labour Code being implemented, which is already approved by Parliament more than 2 years ago by all the states and ratified, we would have been in a situation where a national floor wage would have come out. So again, coming back to this point, I think you have to keep that in context.
Got it. No, I take your point that these are COVID years and these are entry-level workers. Those are two very important takeaways when we measure this. But I mean, it's still like, you know, how does a person live in 17,500 rupees? It looks a little tough. And this is formal sector. What happens when people are not in the formal sector? Amit Basole, you're the master of that data. You tell us, if this formal sector data is so shocking, is it worse in the informal sector? You know, maids and gig workers, I think in Mumbai earn a little more.
Right. Thanks, Lata. So I think, if you look at the periodic labor force survey, which is the official employment survey of the government of India, comes out annually and gives us a picture of the entire workforce. There too, the story is similar in the sense that wage growth has been very tepid. In fact, I would say earnings growth in overall, because it measures self-employment earnings and regular wages and casual wages, gives us the trends for all of them. And since the survey started coming out in 17-18, the regular wage growth has been barely, let's say, 2% or 1% annual. Self-employment earnings have been doing even worse, and we can come to that later if you wish. So the story is corroborated on a labor, on the wide labor market. The one bright spot, so to speak, is casual wages, which actually have been growing quite strongly in PLFS. Not much has been talked about over there. So something to perhaps explore. But yeah, on regular salaried work and so on, the story checks out on the entire labor market as well, including informal.
And the actual salaries also will be, below 50. As Lohit pointed out, informal would be like 13,000 perhaps.
Yeah, the levels are also not that different. If I recall correctly, the average regular salaried worker in PLFS would be somewhere around 15,000 rupees per month.
Okay, so in the first level of formality, they are not earning much more. It's just that it is formal and they probably have ESIS and those benefits. Dr. Balakrishnan, now to come to you, sir. We all sat up in terms of the growth suddenly capitulating to 5.4% and that getting corroborated by corporate India. If you think GDP is not very clean data, corporate earnings growth is clean data. That earnings growth was like, less than 5%, low single digits in the second quarter. Is there a sudden development in terms of the labor market going astray?
I don't think this is so sudden, because if you look at two sources, one is the PLFS data and the other is the data for rural wages from the Labour Bureau. Over the past 5 years itself, real wages have declined in some areas and some sectors very drastically, by about 25% for the self-employed earnings, that is, over the past 5 years, except, interestingly enough, for casual workers, whether you look at the similar Labour Bureau data or the PLFS data, for casual workers, it's increased. So, but for all other sectors, it's decreased very substantially. I just want to say that, in my view, this is not a particularly a recent development. It's been happening for the past 5 years, and it's not surprising because the inflation rate has been very high for the past 5 years, right? The food inflation rate. Yeah, so it makes, and inflation, but especially food inflation. Okay. So it's not surprising. It's not all that recent. And while the data on the corporate sector is very, very clear, and we have to thank Quest for it, I just want to say the problem is probably wider than just the corporate sector in India.
Okay, no, Dr. Balakrishnan, let me rephrase the question that people have as investors or as observers of the economy. One interpretation of the slowdown was that fiscal spending just collapsed in the first quarter and the second quarter of the current fiscal because of elections and because of perhaps extreme heat. We got all those reasons. And because the Reserve Bank's policy for other reasons tightened because of dollar buying and liquidity, dollar selling by the RBI and liquidity tightness, they went after unsecured loans. We thought that was the reason for the slowdown. But are you saying that those are temporary and this is the bigger reason, or is it the other way around?
I would say that. I mean, it seems to me that whatever has been budgeted, maybe capex in the past 6 months has slowed, I believe. But the RBI's role cannot be very great because the rate of interest, which is the key variable, has remained, nominal rate of interest has remained the same for the past 22 months or something. So I would say there's a deeper problem of declining real wages, and maybe the immediate problem could be that capex has not been maintained. Sorry, the central government's capital expenditure, not the private sector, has not been maintained at the same level as it was in 23-24. So that's my view.
That's in calendar 2024. Clearly, for 6 months, they did not spend as much as the budget estimates indicated. Lohit Bhatia, this is more an economist's question, but I'm still asking you because you handle wages and staffing so much. This kind of wage levels are coming at a time when inflation, food inflation, for the last 18 months has been running at between 8 and 10%. Food inflation. Overall inflation, of course, has been a little more benign, hugging the 5 to 6% mark. Now, is there not an upward pressure, or are people still able to keep wages so low, the staffing companies and those whom you supply labor to?
I'll go back to where I began from. I think in the entire labor force that India has for our working population is about 55 crore. We've still been able to bring only 20-21% of those into the formal work.
Yes.
So today, this conversation of, people at about 2.4 lakhs per annum, is it good? Is it bad? With Social Security, are they able to sustain or they're not able to sustain? Is a conversation on the basis of the balance 80% which don't even have this. I think the important aspect is the transition from that informal to formality, because that's when your wages actually start to kick in and become meaningful in nature. Let's take an example of 90,000 crores a year goes into Manrega. But even today, when we obsess on Manrega, an average worker earns no more than 30,000 in a year, not 30,000 in a month. If you look at a casual worker, let's say somewhere in rural India or in semi-urban India, they earn less than 5,000 or 6,000 rupees if they're associated with any of the Anganwadi kind of a work.
Got it.
Now, that's the kind of worker that we first need to bring in. That's the first point. Second point, coming back to your very specific question, does something need to be done on wages?
1 minute. Lohit, I'll keep that for after the... for a little later. Let me just get Dr. Balakrishnan in very quickly on the point. Where do we see things to be repaired as we, expect that 7% growth? Since we have been having decent growth in the last 3 or 4 years, and we suddenly saw this drop, do we first fix the fiscal deficit and the, RBI's tight liquidity policy? Will that keep us still at 7%, or is 7% difficult unless we graduate more people to at least the lower middle class?
Well, if the private investment rate does not really take off, clearly growth can be maintained only if public investment or public capex remains very high. The other is, I think the main thing to try and fix now is inflation. Without fixing inflation, you can't fix the slow growth of consumption, which lies behind the slow growth of manufacturing output in particular, and the economy more generally. So yes, capex will have to remain, though some of it is depressing in the destructive impact that some public investment is happening on natural capital, etc. But from a macroeconomic point of view, that would be necessary if private investment is not buoyant, and you must fix inflation. RBI's role, in my view, right now is not very great.
Yeah. No, I take your point entirely, sir. RBI can fix perhaps core inflation. They can't do much about food inflation. And maybe the missing chairs in this discussion would be perhaps people like Professor Ramesh Chand and Dr. Gulati, who would tell us why is food inflation for 18 months so stubbornly high. Either it is pulses, or it is potatoes, or it is other veggies. But that discussion for another day. For the moment, we have to take a break with the conclusion that it's a combination of causes, both fiscal spend being low and urban wages not taking off, urban jobs not taking off, and rural wages, of course, suffering as they always have. That's the cause of the slowdown in the economy. We will come back and look for solutions from our experts back in a minute.
Launching their smart grid mattress, the company has transformed over 2 lakh lives, delivering not just restful nights, but better living. With patented technology and relentless R&D, the sleep company is raising the bar on sleep innovation. The Salot's dream has found takers, supported by premier investors like Premji Invest, Altaria Capital and Fireside Ventures. The company has entered international markets and achieved a 500 crore rupee annual revenue run rate in just 4 years. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Young Turk Startup of the Year Award to The Sleep Company.
Priyanka and Harshal, do stay back and say a few words.
No, absolutely honored to be here and getting this award on behalf of the Sleep Company. At the Sleep Company, our mission has always been to revolutionize the way people sleep and sit, make world a more comfortable place. And we truly believe that, we're at the cusp of a huge consumer disruption where sleep is becoming an integral part of our health and well-being. Just taking a moment to, thank obviously our incredible teams, our investors, and our consumers who put in trust in us for their sleep. And to CNBC and the jury, thank you so much for honoring this vision. I think last but not the least, thank you to our amazing families for their support. And, our biggest cheerleader, our 8-year-old son, Ayan, who's there. And he's the reason why this all started. So thank you so much, and thank you, everyone.
Thank you so much, Priyanka. Many congratulations. A big round of applause for the Sleep Company. Thank you so much. Our next category is the Breakout Brand of the Year, honoring a brand that has reshaped its industry with creativity, innovation, and impact. Requesting Meenu Margaret, founder and CEO of Bliss Club, to join us on stage. Let's uncover the story of this year's winner, Bliss Club.
In the world of activewear, one brand is redefining the game, Bliss Club. Founded by Meenu Margaret, a chartered accountant turned entrepreneur, Bliss Club's mission is simple. An activewear that's not designed just for an hour at the gym, but for the entire day, blending comfort, style and innovation seamlessly. In just 3 years, Bliss Club has become a leader in women's activewear, with over 65% of its sales from its website and a growing presence on Myntra, Amazon and in 12 retail stores across India. With an ARR of 100 crore rupees and an impressive 80% growth rate in just 3 years, it's won the trust of customers and top investors alike. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Breakout Brand of the Year Award to Bliss Club.
Walkout surges 10% after the successful use of drug Xanic that was used to treat a cancer patient in the US.
Vedanta dips more than 1% ahead of the company's board meet, where they will mull a 4th interim dividend for the year.
Dixon Tech climbs more than 4% after the company forms a joint venture with Vivo to manufacture electronic devices, including smartphones, in India.
And HPL Power Systems climbs nearly 2% after the company bags an order worth around 1,500 crore rupees for locomotive works. Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. For starters, this Monday morning, the market's a little bit lower. The Nifty is at the low point of the day. The good news, though, is that from the broader markets, there are plenty of winners out there. I think Friday we had evidence that this market has now shifted into a buy on dips. So today's that dip. Let's see whether or not we get a recovery at some point of time. The crucial level on the downside is around the 24,400 odd mark and 24,200 mark, from where we did see a bit of a bounce, which is incidentally where the 20 and the 50 DMA comes in. Hey, Mangalam.
Good morning, Nigel. Broader market's doing extremely well. The latter half of this week has a bunch of central bank decisions coming in as well, from the US, from China, from Japan. So we'll keep an eye out on all of that. But, as we speak, a couple of stocks making the highs of this morning. We have KEI Industries from the broader markets moving to the high point of trade. A decent traction is what we're seeing in names like Siemens and Indraprastha Gas as well. We did see a big move come by on Dixon, but just keep an eye out on Varun Beverages and Indian Hotels as well. Indian Hotels, of course, this is the season, and as a result of which we're seeing some up move in some of these hospitality stocks. So Varun Beverages is the other one which is seeing a bit of an up move. Let's welcome Chandan Taparia of Motilal Oswal Financial Services for a quick technical check on the market. Chandan, on Friday, we did see that big range on both the lower and the higher end. Right now, it's a 100-point dip that we're seeing. Do you think this dip needs to be bought into? And if yes, what are the targets you're looking at?
Good morning, Mangalam and Nigel. Thanks for having me. So really, we had a roller coaster ride on Friday where market corrected to 24,200 zone, really to 24,800 marks. The closing was excellent as index formed a bullish engulfing kind of pattern. But today again, declines are there. But we believe that declines are likely to be bought because broader market is comparatively doing well. Many heavyweights counter are heading to the new breakout. Nifty IT is holding well. So I believe the range could be wider and broader in the market, but declines could be bought. As of now, we believe that 24,400 could act as a major support to ride the swing in between 24,400 to 25,000 marks. So one need to play this territory. Looking at the data setup, we have seen some surge in put-call ratio. India VIX is hovering at lower levels. So that also indicates the declines has to be bought in the market. Looking at the Bank Nifty index, that got stuck in a range. The good part is that selective PSU banks started to perform. SBI and ICICI Bank looks good for next leg of rally. So we believe that any declines towards 53,350 could be bought with support of 53,000, and Bank Nifty can head towards 53,750 to 54,000. So 53,000 to 54,000 is the range for Bank Nifty, while 24,500 to 25,000 is the range for Nifty. But bias will be buy on decline stance in both the indices. Looking at the stock wise, first is buy on Oberoi Realty. This stock has seen a strong momentum in last couple of weeks, and now it has given a fresh breakout from a bullish pattern that is called pole and flag pattern, which has typical fresh momentum. We have seen some build-up of long positions, which also indicate fresh up in the counter. So one can buy with support of 2130 for an upside target towards 2270, and entire Nifty realty sector looks good for the fresh leg of rally. Second trading idea, that is buy on Polycap. The stock has seen a fresh breakout after the consolidative move of last 10 weeks. Positive price pattern on the lower time frame indicate fresh spurt in the counter. We have seen some put writing, and the long additions also indicate some uptick towards 79,58,000. So one can buy with support of 7,400 in Polycap.
Okay, all right. Any view, Chandan, on Ola? Stock is almost at 100 rupees yet again.
Yes, Nigel, Ola looks strong. In fact, on daily chart, stock is all set to give a fresh breakout from his pole and flag or pole and pennant kind of pattern, which has a bullish implication. Just a couple of weeks back, it had negated its lower top, lower bottom. So I believe with support of 92, one can even look for a target towards 115 to 120, which is 15 to 20% upside from current level. Those who are looking for intraday can keep the support of 94 for a rally towards 103 to 104 for immediate point of view.
All right, we take that point, Chandan. Thank you so much for joining in and giving us your view on the indices, individual stocks, the sectors to back, and a lot of other individual stocks as well. Let's get you some more ideas for profit. This one comes in from our colleagues at Money Control Pro. Today we have Nitin Agrawal joining in with a stock that he's been tracking closely. Nitin.
The company that I have chosen for today is Gabriel India, which is an auto ancillary company. First, let me touch upon its last quarter number. The company posted a strong growth in Q2 revenue, driven by the outperformance of its key client TVS and Mahindra & Mahindra. Further, its EBITDA margin expanded by around 107 basis points on a YOY basis. This was primarily driven by the higher content per vehicle and the rich product mix. Now coming on to the outlook, there are a couple of factors that make us upbeat about the company. First, the demand outlook for its two-wheeler segment, passenger vehicle segment continues to be very strong. In addition to that, replacement market continues to be very strong. Further to that, the company has been supplying to the who's who of the industry in the electric vehicle segment, which is showing a strong momentum and strong growth. The company supplies to Ola Electric, Ather, TVS, Bajaj Auto, etc. In addition to that, the company has forayed into a sunroof segment, which is a high growth sunrise segment in India, primarily because of the customers' focus towards premiumization, and the company has been generating a good revenue, and it has been increasing its capacity in this particular segment. In terms of valuation, the company currently trades at around 20 times FY27 projected earnings, which we believe is very reasonable given the company's growth outlook.
All right, with that, we'll take a short break. Come back on the other side. We have management of BLS International. Shikhar Agarwal, who's a joint managing director, joins in with a business update and their recent partnerships that the company announced as well. Stay with us. Come back on the other side to get you that conversation.
To Team Bliss Club and to Meenu here. Meenu, you're the breakout brand of the year. Tell us what you aspire to do next now that you've unlocked this milestone.
No, this is a super exciting time for us. Exactly 4 years back, Bliss Club launched from a 2 BHK apartment in Bangalore. We launched with a single pair of black leggings, which we call the ultimate leggings. I don't come from an apparel background, and everyone from the background said, you can't launch an apparel brand, with a single SKU. You need to launch a collection. But in my head, I just thought that if I can just make that one product that's really amazing, which I can call the ultimate leggings, there'll be a lot of women who want to buy it. And that's exactly what we did, and we continue to invest a lot in building insanely amazing products. That's something we want to continue doing. We also want to continue breaking the norms and challenging the industry. And it's been an incredible 4 years. From there, I wanted to thank everyone who's been part of our journeys, our investors, 8 Roads and Elevation, our vendors who's helped us make some incredible products, my family who's here, my husband who's been an incredible emotional support, my sister who's an orthodontist who shut her clinic to help me start Bliss Club during COVID, my parents who brought up 2 women who they said can conquer the world. I have a 6-month-old. I hope I can get her to conquer the world at some time as well. And our customers who we call Bliss Queens, who really are the heart and soul of everything we do at Bliss Club. But last but not the least, my incredible team. We are 150 of us back in Bangalore as well as in all our stores in India. I have Saket and Nagaraj here with me, and everyone back home. It's been an amazing 4 years to build a 100+ crore brand in a category which is women's activewear, which they say is niche. So we have some very large incumbents in this category, and we hope to build something truly differentiated. Hope to see a lot of women building brands in India.
And more power to you and your tribe, Meenu, and may this tribe continue to grow. Many congratulations again on winning this award.
Up next, the outstanding contribution to climate consciousness recognizes individuals or organizations driving impactful, scalable solutions for sustainability. From water conservation to waste management, energy transition to carbon capture, this award honors efforts that address environmental challenges at scale. Requesting Utkarsh Singh, co-founder and CEO of Batex Energies, to join us on stage to accept the award, and let's learn more about this year's winner.
Batex Energies has recycled 220.
Welcome back. A bunch of stocks from the broader markets doing extremely well. 361 Wealth Asset Management's up at the high point of trade. JK Paper's doing well. Swiggy is another one which has been, doing well. The previous couple of trading sessions, there was some supply pressure as the anchor lock-in opened, and from there itself, from the lows, we've seen some recovery on the stock. There have been brokerage notes as well, citing, the benefit that is already priced in as against, Zomato. So they're talking about valuations, and we do have, something like a Zentech, which is up around 7% too. But stock on our radar is Aurobindo Pharma. In focus after the company's arm has received positive opinion for its biosimilar, Vinny joins in to tell us more about how much this means for the company.
So this is a small one, but still is very important for Aurobindo Pharma because it indicates the focus that they have on the biosimilar space. Now, just let me take you all through the news flow. First, Aurobindo Pharma's arm, Curatech, has gotten a European body's approval for a biosimilar drug. Now, this drug has got a positive opinion from the European Medicine Agency. The drug's name is Zefilti. And other than this, what Aurobindo Pharma also highlights that there are 2 more biosimilar drugs also, which are under review already, and they're expecting a positive outcome coming in from the EMA even on those 2 drugs as well. Let's not forget that, Aurobindo Pharma has been focusing and investing on the biosimilar front as well. They made investments of around $400 million for its biosimilar projects over the last few years. And this is a positive development. So what Goldman Sachs highlights that they believe that this is an evidence that the company can actually work towards it and can start monetizing on its biosimilar side. That is why Aurobindo Pharma is buzzing in trade today.
All right, thanks a lot for that, Vinny. Well, we'll slip into a short break. Come back, we'll try to touch base with the management of BLS as promised. Stay with us.
Lithium-ion batteries, extracting essential metals like lithium, cobalt and nickel to reintegrate into the supply chain. As India's largest battery recycler, it has processed over 2,500 metric tons of batteries, redefining sustainability. Beyond recycling, Batex is developing 100% off-grid solar EV chargers for companies like MG Motors, advancing clean energy innovation. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Outstanding Contribution to Climate Consciousness Award to Batex Energies.
Ladies and gentlemen, a huge round of applause for Utkarsh and Batex Energies team.
Utkarsh, congratulations.
We would love to hear about your story and your accomplishments.
This award is dedicated to the entire team of Batex Energies, who are dedicated in creating a circular supply chain of these critical materials. We all are talking about electric mobility, but it is not possible if lithium, cobalt and nickel is not there. The only way India can create our own materials is if we start recycling them. And this also contributes to Atmanirbhar Bharat and circular economy. So we are going to keep going ahead with our vision and saving the environment. I would like to thank CNBC and Standard Chartered for giving us this recognition. And thank you to our families. Thank you to my wonderful co-founder Vikrant and to all our mentors, our investors, our teachers who have got us here to date. Thank you. Thanks
And
a
we
lot.
wish you all the very best with that, Utkarsh. Big round of applause again, ladies and gentlemen.
We recognize a company that has rewritten the rules of its industries, creating new opportunities while challenging traditional players. The Disruptor of the Year award highlights innovations that reshape how businesses operate and how consumers engage with them. Now this year, the award goes to Blinkit, requesting Mr. Albinder Dhinsa, co-founder of Blinkit, to join us on stage. And while Albinder reaches the stage, let's take a glimpse into the Blinkit story.
In a world where the Indian consumer craves convenience, one company has redefined shopping. They've made it possible to shop from the comfort of your couch and get deliveries in record time. What began as a mission to deliver groceries in 10 minutes has expanded to include everything from furniture to electronics, covering 26 cities with 639 dark stores. With a 40% market share and a 93% jump in gross order value to 12,469 crore rupees in financial year 24. This brand has revolutionized the shopping experience, more than doubling revenues to 2,301 crore rupees. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Disruptor of the Year award to Blinkit.
Congratulations to Team Blinkit.
Well, as promised, let's welcome the management of BLS International. They have made two recent announcements. The company has signed an MOU with FinStreet Limited and has also forged a strategic partnership with ADI DLT Foundation. To help us out with an understanding on both these two opportunities, we're joined by Mr. Shikhar Agarwal, who's a joint MD of the company. Hi, Shikhar. Good morning, and thanks a lot for joining in. Well, Shikhar, you must be a busy man just going by the traffic, the kind of travel plans that we're hearing about. We'll get to that in just a bit, but explain to us these recent two announcements that you've made. What is the potential opportunity? Explain a little bit about it to us. And could you quantify it in terms of revenue potential, say in the next 2 years from now?
Thank you, Nigel. So basically, Nigel, what we've done is that, Abu Dhabi Investment DLT Foundation, which is doing multiple projects across the world, we have tied up with them to offer our blockchain-based technology and solutions for delivering citizen service projects globally. So there are multiple, multi-billion-dollar worth of opportunities that ADI DLT Foundation is working on in Africa, in Europe, and within India also. So our target is that together we will explore multiple projects in the citizen service domain, in land record registration domain, in Africa, Europe, and Asia markets, and together, offer our technology to the government, to the foundation, and together deliver these projects. So that was the aim of the MOU.
Got it. So that explains, the entire scope of this business. But let's understand the numbers behind this as well. One, it seems as if this, falls under your non-visa, non-travel related businesses. This is in your, business outsourcing sort of citizen services that you're talking about. How big is this deal in terms of revenue for you? And what are the kind of earnings that you make on typical deals? And basis this, what does this do to your potential order book here?
See, right now it's too soon to give actual numbers out since this is a MOU that we have just signed. But actually, as we've been talking about, this is the first step, in exploring the opportunity which is multi-billion-dollar globally. So I feel that with this, and with the support of the Abu Dhabi government, we definitely have access to a lot of markets. So we feel that we can, in the next few years, go after billions of dollars of tenders, and we can convert few of them. So exactly right now, I don't know the exact numbers we'll generate from this, but definitely we are looking at upwards of 15% EBITDA margins, 15 to 20% EBITDA margins that we'll generate on all the contracts that we deliver through this platform.
Shikhar, just help us out. Visa revenues in comparison to non-visa, what is the mix and where is it headed?
Right now, 70-75% of the revenues come from visa business. 20 to 25% are coming from the non-visa business, which is the e-governance and banking correspondent business. And going forward, as we have spoken in the past, as you see now, travel visa has resumed after COVID. So we see big growth coming in the visa business also for us. In the visa outsourcing counselor service domain. So we feel that the numbers, the ratio should maintain as we see growth coming in both the areas for us.
Okay, help us out with what is the guidance for this year, revenue growth, number of visa applications, and are you on course?
Yes. So if you see our second quarter numbers, we did 145 crores profit on an EBIT of 169 crores, which was a major jump compared to second quarter last year. And the visa volume also grew by more than 30%. And if you see in the second quarter, we only put in the numbers of iData acquisition for 80 days. So full quarter numbers still have to come in. Even the company Citizenship Invest that we acquired in third quarter, the numbers have not come in. So that is expected to come in from the third quarter. On top of that, multiple contracts that we have won and deployed, those numbers have started to come in now. And we are, as we discussed last time, bidding for multiple opportunities in visa domain, counselor service domain. Multiple tenders are coming out. So that is why we see that whatever growth that we have delivered in the last 5 years, we've done a 70% CAGR growth. We expect to, maintain the numbers that we have achieved in these quarters.
All right, 70% growth is what you expect to, sustain. Just a couple of questions. One, you said that there are more applications underway when it comes to, you wanting to win those contracts. If you could give us in detail, how many are you expecting to get in the next, say, 6 to 12 months? That's point number one. And secondly, if you could break your revenue growth in the visa business down by volume as well as value, because what we've seen is that a value per visa or value per application that you see has only moved higher. It's closer to 2,900 rupees right now. So if you could tell us how your 70% growth will come in terms of volume and value.
So if you see in the second quarter, 30%, we have seen a growth in terms of volume. The number of visa application has grown by 30%. This was due to a combination of factors, due to the new contracts that we have won, due to the companies that we acquired, and the growth in existing business. And in terms of gross margins, if you see our EBITDA margins have grown to 33%, which was 29%. So there has been a jump in that aspect as well. So we definitely expect to maintain those margin numbers. We were at 21%, then we reached 26, 29, and now we're 33. So, as the base of the company is increasing, our first aim is to maintain those numbers, 33%, and visa volume growth that we've achieved of 30%. I feel we want to maintain those numbers, and as we add new contracts that we are bidding for, as we said that, it also the contracts that we have won in the last 1.5 years, 15 new contracts, we had been bidding for them for the last 2-3 years, So all these new contracts that we are eyeing, probably results will come in 1 year's time. Exactly the number of contracts that we win, I'm not too sure, but the opportunity size is multi-billion dollars, and even if we win 30% of those market, I feel that we can really grow the company in the next few years.
Okay, all right. Shikhar, thanks a lot for joining in. I believe you're traveling right now as well at the airport, so safe travels. Thanks for joining in, giving us an update on business. And we look forward to chatting up with you post your Q3 numbers, and we'll get further numbers.
Just as an aside, Shikhar, are you traveling to any of those countries of which the visa you manage, or you are looking to get their contracts?
I think I am now targeting to go to those countries where we are not managing.
Okay, so when you come back, will you have a contract in your hand, or this is just a holiday that you're going for?
I think no. Holiday, is not there on the horizon right now because there's too much work potential. But,
So we need
I
some
don't know
contract.
if I'll have a contract, but that is the aim every time we fly.
Can I ask you what country this is?
Europe. Yes, I'm going to Europe.
All the best, Shikhar. Hopefully you come back with a contract. For the time being, if you're so busy, the street will like to hear that. Shikhar is busy scouting for more business. So let's see how that goes. Thanks a lot for joining in. I'll tell you what, Mangalam, we've completely run out of time on this edition of Chartbusters. As our director says, just, let's wrap up and let's stay tuned because Trading Hour comes up next.
Albinder, before you go, in under 10 minutes, can you quickly take us through your journey?
Sorry, I'm struggling with a bit of cold, but see, I think customers are the ultimate disruptors. They're always unsatisfied. My journey in this over 11 years has gone from delivering in 24 hours to delivering in 90 minutes to now delivering in 10 minutes. But I would, I'm very grateful that we get to serve customers, especially, women, homemakers who really value our service. And I think they understand more than anybody else the value and convenience of getting fast deliveries. And of course, it takes about 3 lakh people in our supply chain to make it happen, whether they are sellers, whether they are store owners, drivers, and thank you for recognizing their achievements.
Ladies and gentlemen, brings us to one of the most significant moments of the evening, the most promising company of the year. Celebrating a mid-sized listed company for strong shareholder returns, sound financials and exemplary governance. And the winner, ladies and gentlemen, please put your hands together, is PI Industries. Congratulations to the team, and may I request Mr. Mayank Singhal, Vice Chairman and Managing Director at PI Industries, to join us here while we watch the company's success story.
A trusted name since independent India, PI Industries has empowered generations of farmers with cutting-edge R&D and an extensive network of 70,000 retail points. Now making strides in pharmaceuticals. Its new vertical contributes over 7% of revenue within a year of launch. With 85% earnings from patented products, PI has seen revenues grow 2.28 times and profits 3.7 times in just 4 years. CNBC-TV18 India Business Leader Awards 2024 proudly presents the Most Promising Company of the Year award to PI Industries.
Congratulations to Mayank and the entire team of PI Industries. Ladies and gentlemen,
as you going, yes.
Mayank, we would love to hear your thoughts.
Yes, good evening, everybody. Once again, a very thank you to the jury for selecting PI and giving this great honor. I must not forget to thank all the people who contributed to this organization. We are not a young organization. We are about 75 years old. So I must remember my grandfather, who tediously laid the foundations of this organization, set the course of its right values. My father, who propelled it to take it to the next level. Today, PI stands an institution which is taking innovation to the world, basically taking India to the world. We fostered ourselves by saying that we want to be the largest innovative agri-science company with 900 scientists creating innovation. Our first product has got to go to the...
Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Vivek Iyer. Well, after that stellar rally that we saw on Friday, markets have come in for some profit booking today. Nifty is at the day's low right now. It's down around 114 points. The mid caps are outperforming. We don't have a lot of individual sectors which are doing so well. Hardly many in the green today. Nifty Realty has made a comeback, up around 2%. Media is doing well. PSU Banking Index also contributing to some gains, but the private banking index is not the one which is supporting so much today. We do have the metals, which are the top loser in terms of movement today. But yes, overall, this is something which was expected largely. But the mid caps and small caps, they have also made a comeback, and small caps surging as usual.
Good morning. Absolutely right. You know, the mid cap and small cap. So the outperformance there has resumed, like you mentioned. Now, bulls would have anticipated and would have hoped, you know, after the kind of comeback that you saw on Friday, that they would have hoped to actually go out and build onto the gains, or at least stay flattish. But what's actually happened is that almost a 100-point downtick as far as the Nifty is concerned. But despite that, quite a lot happening, you know, as far as individual stocks are concerned. One particular name is Afcons Infra. You know, one of the second largest, in fact, the second largest infra company, capital goods, also does quite a bit of infrastructure works in India. Now, that particular company got an order win. And at the back of that, you know, seeing quite a bit of an up move today, almost 4.5% higher. The other pocket, very select pharma stocks are doing well, a bit of a comeback as far as Aurobindo is concerned. And Vocard, on the back of that positive clinical trial, when you're talking about Vocard, you know, it's up 10%. Aurobindo up 1.5%, Vocard up 10%. And the other stock, you know, Dixon Technologies continues to go up and, you know, announce JVs with various MNCs, various manufacturing OEMs. And on the back of that, that stock today is up 4%. But moving on, we have quite a lot lined up on the show. First up, Abhishek joins us now to tell us more on the banking sector's business momentum for the month of November. Abhishek, take it away.
To begin with, you know, Vivek, this momentum continues to slow down with respect to, you know, YOY growth numbers that you are seeing on the deposits as well as advances front. So deposit growth is at 10.75% year on year, which is the lowest that you are seeing in last 9 fortnights. Credit growth has come in at 10.64% YOY, which is one of the lowest in last 68 fortnights. And I just compared the data of November to the fiscal year. Over the last few years, what is seen is that whatever number has come in for November, that has been reflected in the fiscal year and as well, plus minus just 25 basis point or 50 basis point of growth rate. So this number looks to be a bit of worrisome. Deposit growth, however, continues to outpace the credit growth for last 3 fortnights in a row. Credit deposit ratio remains elevated at around 79.5%, which is the highest that you are seeing in last 5 fortnights. And 3 growth YOY, that is year on year, is at 11 fortnight low of just 10%. Deposit to M3 ratio, that is at 83.25% when compared to 83.1% that RBI showed, in the fortnight ago. With respect to the numbers being ex HDFC Limited, the deposit growth is at 11.1% YOY and just 0.76% on a fortnight basis, a 9 fortnight low with respect to the growth rate over there. Advances growth is at 11.8% YOY and 0.9% sequentially, that is a fortnight ago, which is a 37 fortnight low with respect to the growth rate seen over there. So calculation shows that the ex of HDFC Limited, the credit deposit ratio is at 77.7% when compared to 77.6% that the sector had reported a fortnight ago. Back to you.
All right, that is the update coming in from the banking space. But with that, let's move on because there are a lot of stocks which are on our radar. HBL Power is one of them. Vinny is joining us to tell us why the stock is in focus. Vinny.
Good morning. So yes, HBL Power is in focus after they've bagged a big order that is coming in on from the Chitranjana Locomotive Works. And now this is a 1,522 crore value order win that they have. This is for supply, installation, commissioning, and this is a Kavach order that is coming in. So that is train collision and avoidance system. That is also known as Kavach. So big order win, 1,500 crores. This order is pertaining to mainly installation of around 2,200 locomotives, and it is expected to be, they have to complete this within 12 months. So by next year, they should be completing this. Do not forget that for HBL Power, around as of now, FY24 numbers that I'm looking at, it was 24-25% of the revenue contribution came in from this segment. That was the electronics segment, which included Kavach electronics as well as chargers. So surely an interesting one to watch out for, given that they've seen an increase in terms of a lot of orders coming in on the railway system side, and HBL Power is buzzing in trade.
Thank you so much for that, Vinny. Well, the next stock on the radar is one from the insurance space. Max Financial is buzzing. This is on the back of a positive report coming in from Jefferies. Yes, joins in with more details. Yes, the rebranding exercise largely done.
Well, that exercise is largely done, and that is what Jefferies has spoken about as well. First, I'll start with the target price that they've given. Very interesting one. They have a buy rating on the stock, that is Max Financial Services, with a target price of 1660 rupees per share. Now, interesting to note that there's a potential 40% upside from the current market price as far as Jefferies' target price is concerned. As you said, of course, the partnership has been largely done with Axis holding nearly about 20% stake in Max Life Insurance, the life insurance subsidiary of Max Financial. What Jefferies feels is that the refresh in the identity could enhance brand recall, especially in the tier 2 and tier 3 zones where banks, that is Axis Bank, is strong in terms of its network. Now, there are three things according to Jefferies where Max Financial and Axis Bank could take benefits out of. One is exemption of the term protection from GST, which is in the works. Second one is allowance of composite insurance license, and the third one is merger between insurance and other non-insurance companies. Finally, they are a little skeptical, a little cautious as far as norms on bank assurance is concerned, and they say that that will be watched out because Axis Bank drives 45% of the APE for Max Life Insurance. Valuation, according to them, is attractive at about 8 times price to VNB.
Okay, all right. That is about Max Financial Services. Thank you so much for joining in, Yash, with the details of that Jefferies note. But Winnie's back with us. Wockhardt is also in focus. It is on the back of a successful use of drug Xenic. Tell us more about this, Winnie. How big is it? The stock is up 10%.
Absolutely. So this drug, Xenic, is actually a cancer drug that is used, that they were been trying on. And, if you remember when this drug had come into play and they had spoken about launching this drug, we had already seen the stock run up. Post that, a sharp run up had come in. So this drug's name was Xenic, and it was WCK5 222 was the name. Now, obviously, this is a successful use that has come in. They said that, they tried it on patients who have successfully done this and then have gone forward with other treatments, which has worked out well for them. Now, this drug is nearing a completion of phase 3 study for its global registration as well as marketing authorization. So any positive sign in terms of successful use of this drug becomes a positive for the company. Till date, they've tried on 45 patients that have benefited under the compassionate use of the drug as well. The new drug discovery portfolio also is focusing on a lot of unmet needs of this antibacterial drug, which is effective and as a super bug also, for super drug also. So keep an eye out on Wockhardt, because this one is a very big and important drug for the company. So positive news, even a small one, is turning out to be a very big move for the stock. That's why we're keeping an eye out on this one.
Thank you so much for that, Winnie. Over 7% higher as far as Wockhardt is concerned. And now it's time for the Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat with Vishal Mehta, CMTN founder, market scanner, to understand the importance of a well-defined strategy or edge.
Why is it crucial for traders to have a well-defined strategy? Also, what are the risks one should consider before entering into the market?
A lot of people think that to get into a trading, you just need a demat account and money in your account, right? When it comes to business, or even if professions, right? If you want to become a doctor, you spend about 15 years to study and master it. Engineer, the most important thing in like any business is you have to have a strategy and you have to have a capital. We as a retail trader are playing against some of the largest corporates who are with the best of the minds, best of the execution capabilities. So what is at our end is the strategy, because without a strategy, you are in the jungle and ready to be killed.
This and taking it into the pharma sector, the biotech sector, and putting India on the global map. Once again, thank you very much, and thanks to all the members of PI over the generations who made this company what it stands for today. Thank you.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and
Welcome back to Trading Hour. Well, even as we speak, markets continue to trade with minor cuts. The Nifty down almost 0.4%. Well, select auto stocks are the ones that we are focusing on. Have a look at some of the names. Auto stocks under quite a bit of pressure. Bajaj Auto, Hero Motor, Escorts. All of these names actually trading near the day's lowest point. We had the management of Chola Finance earlier in the day, but that particular stock, too, is seeing a bit of selling pressure, down almost 1.6% in the session today. But moving on, we have Manisha Mamatas. We are shifting focus to the commodity space, and today you're focusing on Bitcoin.
Oh, yes, I am, because today is a day when you're looking at yet another all-time high. Once we did that 100,000, it only has been making higher highs from that. People did think that once 100,000 is done and it's a psychological level, you could be looking at a big profit taking, but we haven't seen that yet come in. And if you look at the prices today, we have seen $106,000 in cents of Bitcoin there. Well, the US president-elect has suggested that Bitcoin could make its way as a Bitcoin strategic reserve within the forex reserves as well. That clearly has boosted the prices therein. In any case, since the time Trump has been elected as a president, well, you have seen prices continue to go up. Trump also has promised to make US the crypto capital of the world. Also, when you look at the overall prices, we've seen nearly 40% of gains since the US elections, and it has seen $12 billion of an inflows in the US listed Bitcoin ETFs as well since the US elections. So clearly, the mood has been quite upbeat, the kind of statements and the kind of moves and the kind of money flow that we have seen come in here. The other factor that the street will watch out for is the dollar index, which is off its 3-week highs. And this is ahead of the US Fed meeting, which is on 17th and 18th. And there is right now a 93% probability of a 25 basis point rate cut. And that augurs well for most of the dollar denominated asset classes, including commodities and cryptocurrencies as well. Well, if you look at the overall markets, then we are looking at $2 trillion of a market cap for Bitcoin and an all-time high of 3.88 for the overall cryptocurrencies as well. In this year until now, it has been a year which is the best in a decade really for cryptocurrencies. You have seen Bitcoin prices gain up by nearly 147%. Ether is up 77%. Even better gains coming in for Binance and Solana and Ripple, which are also platforms for cryptocurrency and tokens, have seen nearly 200 to 300% of gains as well within this year itself.
God, look at those gains, right? 147% to around 300%. That's the kind of moves you've been seeing in the cryptocurrency space. Thank you so much, Manisha, for joining in with all those details. So we're talking about record highs. The other record has to be what Gukesh has done, sealed the championship in the last classical game after defending world champion Ding Liren, who blundered towards the end of the game. Both had won 2 games each in the 14-game championship. They were tied until the last match with 6 points each. Gukesh has broken the record held by the Russian Garry Kasparov for nearly 4 decades, who won the title at the age of 22. The prodigy from Chennai is also only the second Indian after Vishwanathan Anand to win the title. He started playing chess at the age of 7 and earned the Grandmaster title at 12. President Draupadi Murmu and Prime Minister Narendra Modi congratulated the young prodigy on social media, calling his win the result of unparalleled talent, hard work, and determination. And he's been getting a lot of congratulations, a lot of wishes. Elon Musk tweeted for him as well. And of course, all the Indians very proud. And there have been celebrations since the time this has been announced as well. So our world chess champion is returning home. And look at that crowd. This is how these heroes should be celebrated, right? And this is exactly what's happening. He's arrived in Chennai and getting the grand welcome that he totally deserves, Vivek.
Well, what inspiring scenes. He's at the airport now. Hardly can see him given the kind of media attention he's getting. The youngest chess champion, that we've actually seen, and second after Vishwanathan Anand in India itself. The very inspiring scenes. What's actually even more inspiring is the fact that he's actually the youngest to do it. And this is something that when you're actually talking about, it's such a great feat at this young age to actually go and pull it off. We'll wait for more visuals, but it's very inspiring. At this point of time, we'll move on. We'll slip into a break. When we return, we will discuss market technicals with Soni Patnaik of JM Financials and also discuss our top trading bets.
the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
and then go home.
Welcome back. You're still tuned into Trading Hour on CNBC TV 18. It's a good time to get a technical check on the market. Soni Patnaik from JM Financial Services is joining us for just that. Soni, good morning. Thank you for joining in. Well, what is explaining the market moves right now? Do you think after that stellar rally that we saw on Friday, this week could be a little different? Important levels that you're watching out for on the Nifty and the Bank Nifty as well.
Hi, good morning, Sonal and Vivek. Thank you for having me on your show. So I think Nifty, after the stellar move that we saw on Friday, right now it is just a bit of a sideways trend between 24,600 to 24,800. It may remain so for a day or two. 24,600 holds as a very strong support. The next leg of rally in Nifty can be seen once it breezes past the 24,800 or 24,850 resistance. Above that, we can see Nifty heading towards the 25,100 mark, and it's quite important for Nifty to look forward to these levels. As long as it holds and defends the 24,600 support. So I think we'll get there. It's just a matter of a day or two. And similarly on lines, we can see Bank Nifty also in a very range-bound movement. So the next leg of rally for Bank Nifty can be seen above the 54,000. It's holding above a 53,000 mark support on closing basis. So this also is in sideways, and the next support or the resistance, once it crosses the 54,000 mark, you can see it heading towards the 55,000 mark. Both the indices have a similar structure. It's like a buy on dip structure that has been formed since Friday. And as long as the supports are intact, I think we can continue and to look for the upside.
Thanks for that, Sony. Sony, what are your individual picks for the day?
So Vivek, the first buy would be in Indian Bank. So Indian Bank has seen fresh longs today of 4%. It's a new entrant in the F&O space. So one can buy Indian Bank in futures around 587 odd levels. In futures, one can keep a stop loss of around 575 and a target of 610 to 620 can be seen. And the second buy is in Tube Investments of India. Now, that is also a new entrant in the F&O space. The stock has been seen crossing its 20 exponential moving average on daily charts. So one can buy Tube Investments of India for targets of 3,800 and 3,820, keeping a stop loss of 3,650.
Okay, all right. So those are the two stock picks by Sony. Thank you for joining in today and giving us all those updates. By the way, from the broader markets, there are a lot of moving parts. So let's just quickly look at them. Spark, for instance, is up around 10%. We have been talking about pharma stocks being in focus, be it Aurobindo Pharma, be it Wockhardt as well. Spark is one of them, which is up around 10%. The recent listing, Enviro Infra, has also surged. It's up around 9% as we speak. Zen Technologies is up 6%. We have Avanti Feeds, which is up 6% as well. So a lot of moving parts that you should keep on your radar as well. We'll do one thing. We'll slip into a short break. Up next, we'll discuss the market fundamentals with Rohan Mehta from Turtle Wealth PMS. Stay tuned for that conversation.
पड़ी।
Welcome back to Trading Hour. Well, one particular stock from the metal space that saw quite a bit of a sell-off last week was National Aluminium or NALCO. Last week, the stock cooled off from levels of almost 260 to 230. And today, once again, the stock is at the lowest point of the day, down another 2%. So almost a 10 to 12% downside is what this particular stock has seen in the last 5 to 7 trading sessions. Well, moving on, Rohan Mehta from Total Wealth PMS joins us now to discuss market fundamentals and its top sectoral picks. Thank you so much for joining us, Rohan. Now, welcome. We're almost at the end of Q3. So Q3, what is it that you're penciling as far as earnings are concerned? And especially, we'll be starting off or kicking off the earnings season with the IT pack. So what's your view over there?
Yeah, good afternoon. See, we at Turtle, we have consistently seen the numbers very closely of 750 total index of the last quarter. And what we see is, the last numbers were not very good. From 750 companies, only nearly 140 companies made an all-time high pack. Last 2 quarters also were not good. The financial quarters, what we see, the demands were not very, high, the sluggish, and then there will be an environmental change. This quarter has been decent by what we are listening to management, the promoters, that it's picking up very well, and let's see how the things, meet up. But I think so this quarter will be better than the last 2 financial quarters we had. And looking forward on the sector side, we feel that IT and the capital markets sector. These are the only 2 sectors which are outperforming markets currently, and that's where the opportunity are looking forward for on the growth side.
Okay. Rohan, we have been speaking about how Q2 was weak, Q1 was weak in terms of earnings. What have your conversations been like with companies across segments? Is there a definite recovery that has come by in Q3, and is it something that they see sustaining in Q4 as well? Just your earnings outlook for FY25 and FY26 as well.
As generally we don't see on a year-on-year span, rather we see on quarter-on-quarter. The last 2 quarters, what it had was, one was a heat wave in the first financial quarter, and then second was a bit of rain, and this quarter has been decent, but still not that great, which we can look forward for on a margin where, the numbers are going to be exponential than what we expect or the street expects. So that is the reason what we see is that now there is an extremely sectorial change into markets. I'll share you a very interesting data that, from last 20 years, there has been 14 times market has corrected more than 10%. And every time when market does a new turnaround, there is a new sector. So what we feel right now is that the CapEx story is now going to get paused and the OpEx stories is now going to get started. So now we see that Nifty IT from last 3 years has been sluggish, and now we see it has to be rising, or in the same, the capital markets for it. So what we find now, opportunity not more into the CapEx side of the story, but more onto the OpEx side of the story, and specifically capital markets and IT looks very, very interesting. So our expectation is that these 2 sectors had seen a pause area. Now the wealth creation will happen more onto the OpEx side of the life.
Okay, so you prefer OpEx over CapEx at this point of time, and you're liking the IT as well as the capital markets play. Which sectors are you currently wary of? So in terms of CapEx, taking a pause, like you mentioned, which sectors will you be booking profits from?
Yeah, so we feel that auto is a sector where the pause may happen now, or we have started leaving 1 or 2 company aside. I think so everything has started to see a good pause, and it needs a pause, right? Because seeing the competition side and the demand has been much more higher than the supply. Supply has been much more higher than the demand side. And also we see certainly onto the businesses which are onto the power side, energy side, which has been too expensive, and the numbers are because the competition has gone so higher and higher day by day, so it's very hard to sustain these margins and come out with numbers. So power, energy, and auto, we feel that it's a good point to take out profit and wait for, or maybe it's a sector rotation point of time.
Okay, so some sector rotation which you'll be looking at. Rohan, do you track the chemical space very closely? Because FY23, FY24, weakish, FY25, no, still clear trends which are available in terms of commentary. Companies are still waiting for destocking to get over. Do you think this is one sector we can look at right now, because they've corrected sharply, most of these stocks?
Yeah, so if you see, I've been very closely watching chemical now, but chemical has a very variation of space, right? So we are very much interested into the agro side of the chemical because still specialty chemical has not seen that much type of bullishness into it. So chemical in specific areas where the pharma concentrate are there or an agro concentrates are there, there is looking much more better demand in comparison of or a very specific specialty chemical. So anything which has an agro and anything which has a pharma molecule, which is interesting. So certain agro spaces, chemical companies which didn't do good in last 3-4 years when there was a chemical boost in the markets are looking very much interesting. So not as in sector as a whole as a chemical, but yeah, agrochemical is a space to look for sure.
Okay, so agrochemicals is something that you like. Well, want to turn your attention to the metals as well as the material space. Metals have been a significant underperformer, at least in terms of price action. And on the other side, cement stocks have seen a bit of a comeback, at least in the last 2 weeks, on the back of price hikes that have, that have sustained. So, what is your view going into Q3, and do you see any opportunities here?
So, I was just, with yesterday was one of the biggest TMT bar and, distributor of India. And I was talking the way the, metal prices have dropped at the lowest, specifically in the iron ore and, all the specific metal side. And they were onto the expectation that this is the lowest and that there can be a revival. So we would be expecting somewhere around, a revival in this space because the price has hit very badly. Of course, the China factor and the demand also has been sluggish. So maybe not this quarter, upcoming quarter can be interesting to it. But one space is still very much interesting in this area is stainless steel and saw pipes. So these are the two areas because again, metals are too vivid to talk about it. But in a macro side, I think so this two space of stainless steel and saw pipes are interesting.
Okay, all right. Take that point. This is your take on the metal space. Last question before we let you go, Rohan. What about the banking space? Are you liking something in the banking financial space that you think could be the theme going forward?
Yeah, so banking has seen a revival. I'll tell you, after 2.5 years, this is the first time Bank Nifty has, or the Fin Nifty has outperformed the Nifty, specific Nifty 50. And of course, backed by backed by HDFC and of course, backed by certain banks. So we still like PSU banking space much more higher than the private banking space because that's where the value migration is happening around. So anything on the PSU banking space is looking a superior value for next 1 to 2 years. Looking forward, for what I can say is that how much growth we can expect is nearly about a double-digit growth, but there is nothing more downside to this space what we see ahead. So look at the numbers, look at what they have posted, specifically the larger PSU segment, PSU banking segment has been phenomenal. So not to lose much, but a lot to gain more in coming time.
Well, thank you so much for time, and thank you so much for giving us all of your views as far as your sectoral expectations are concerned. Well, moving on, as we slip into a break, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
ಕೆಟ್ಟಿರ್ತಕ್ಕಂಥ ಸೆಟ್ಟಿಗೆ wash the movie, get it, take a and then go home.
Welcome back. You're still tuned into Trading Hour. Well, it's time for a CNBC-TV18 exclusive. Parikshit is joining us to detail with all the details on Bajaj Auto's EV game plan and the vision going forward. Parikshit?
Well, yes, Bajaj Auto is gearing up for a series of electric vehicle launches in the two-wheeler, three-wheeler and electric cargo space as well. In fact, they're targeting exiting FY25 with a total capacity of 500,000 vehicles per year. So by early FY26, they expect a capacity of 40,000 units per month, and they want to sell about 5 lakh electric vehicles in total in FY26. Now, what we are being told that the sales will be significantly bolstered by new launches, especially the e-rickshaw, which will be launched in Q1 of FY26. The new Chetak will be launched this week, and there could be several Chetak launches and electric three-wheeler launches coming up as well. We also hear that the company may come up with a whole new EV brand for their electric three-wheelers, just the way they positioned the electric scooters under the Chetak brand to give them a different brand identity. Similarly, electric three-wheelers from Bajaj Auto will be positioned under a new brand to give them a separate brand identity altogether. The new Chetak scooter, we're told, will have a bigger battery, will be better on performance, higher range, and will give more value to customers. Bajaj Auto has sold over 1.7 lakh electric vehicles across two and three-wheeler segments till now in this fiscal, and the aspiration is to increase it much more in the coming months. The company has already become the largest EV OEM by volume. They've displaced Ola Electric in electric two-wheeler sales this month to get the top spot.
Thank you so much for that, Parikshit. A very important story coming in there. The stock has recovered from the day's lowest point. Well, moving on, Aurobindo Pharma is buzzing today after its subsidiary received a nod from a European agency over a drug. Winnie joins us for more details.
Yes, absolutely right. Aurobindo Pharma's arm Curatech has received this European body's nod for a biosimilar drug, and this drug actually is called Zephyllitide, and it is a filgrastim biosimilar drug. Now, there are 2 more products also that the company has highlighted that are under review, and similar versions will be also coming out. They are with the same agency, that's the EMA, that's the European Medicine Agency, which does give the approval. So they're expecting more positive news flow coming in, and this one is surely a positive here for Aurobindo Pharma. Now, what Goldman Sachs is highlighting that why is this biosimilar, even though it's smaller for Aurobindo Pharma, it's important because this indicates that the management has been working towards a biosimilar side, and now they can start monetizing their biosimilar drugs as well. And on that front, they can start monetizing that segment. Firstly, one company has invested almost $400 million in this biosimilar projects as well over the last few years. So it's an important one coming in here, and monetizing and getting more value from this segment also will be interesting.
Okay, all right. That's interesting. Thank you so much, Vinny, for joining in with all those details. Pharma definitely seems to be the flavor of the day as well. By the way, take a look at the market. Steady where, while it is steady at those levels when we started the show, the Nifty is down 124 points. Mid caps are outperforming. There is a slight recovery that we've seen, but that also has been sold into. Other than that, if from the broader markets, we look at some of the stocks which are in focus, Gulf Oil Lubricants should come up for you. It's up around 5% as we speak. Puravankara is logged in upper circuit. It's up 10%. We spoke about Wockhardt earlier, but the other names include the likes of these feed companies, shrimp feed companies, Avanti Feeds, there's Apex Frozen Foods. All of them are buzzing in trade. We'll just try and understand whether there's a fundamental shift that we're seeing here, but the entire sector has been buzzing in trade today. But time for a short break. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
Welcome back to Trading Hour. Well, as the year comes to an end, and to understand how calendar year 2025 will pan out for the markets as well as the economy, earlier today we spoke to Gautam Chachuria, the head of Global Markets India, and Tanvi Gupta Jain, Chief India Economist at UBS Securities India. Let's listen in to excerpts from that conversation.
The growth momentum in India is clearly slowing, and I think early 2025 we'll get to know what is the likelihood of US imposed tariff hike on China, and that will definitely lead to more downside risk, not only for India but as well as the global economy. So I would say India definitely needs a monetary as well as a fiscal policy support. Fiscal policy at this point, we have seen the government capex spending has been lagging. Year to date, capex is down 15%. Even if I expect that the government will be increasing the capex spend by 30% in the remaining 5 months, the full year capex is only going to be 4%. So clearly, I think at this point, there is definitely a need for monetary policy support as well. We have a 75 basis point rate cut expectation starting the Feb policy of next year. Obviously, a focus will be more on how and the timing of the rate cut, especially with the weaker FX. But looking at the real policy rate in India, adjusted for the GDP deflator, at the upper quartile or the 10-year upper quartile, definitely there's a room for a rate cut in this cycle.
2025, which way would you be leaning? Mid-single-digit returns or high single-digit returns? Or do you think that we could brace for a difficult year, which would mean a negative year in terms of equity market returns for 2025?
Look, there are many moving parts, as always is.
Indeed.
Even more so now, given the global backdrop of post-US elections, the policy stance there, as well as, look, there's a lot of hope building out around fiscal and monetary. And I'm less worried about what happens to FY25 GDP print and what happens to 3Q or 4Q earnings. I think that's gradually getting priced in by the market. Market knows that growth recovery, if at all, will be slow.
Yes.
What's critical is what scale this policy stance happens at, and therefore what's the outlook for FY26. And I think that's where it boils down to whether it's going to be a tough year or whether it was going to be a single year, double-digit year. Look, valuations in India, I'll worry less given the flows locally have remained resilient. And I don't see any reason talking to all the key clients who have these flows coming in, it's stopping anytime soon. So if the flows will remain resilient, I won't worry about valuations or necessarily market correcting in a meaningful way. Consolidation phase or single-digit, double-digit will depend, to me, boils down to policy stance and reforms agenda. And I'll not underemphasize the reforms agenda part. Look, India also has been a big reform story over the last few years, which has given hopes to market that the long-term growth in India looks exciting. That's taken a backseat along with the short-term earnings and short-term growth because elections, post-elections, now there's no election happening.
There's no excuse.
No happening for many months now. So whether we see a reforms agenda back on the table in the budget, post that, pre that, I think that also plays a role.
Since you mentioned earnings a couple of times, FY26, what are you all penciling in terms of earnings? Because FY25 is not going to be as good as what we thought at the start of the year. FY26?
Analyst expectations in India always is that you have a recovery next year and we go back to low double digits to high single digits. That's a broad range, depending on the sector you look at. But the question is not just that. It's what markets start believing in. If it's going to be a double-digit earnings growth, which is linked to the policy stance, I think markets will be fine. We should still expect a single-digit or even low double-digit returns.
How was 24 in terms of, I mean, so UBS now, do you have a lot of mid-cap coverage, Gautam?
Yeah,
mid-cap, small-cap? Yeah. That's where the interest is, isn't it?
It still
because
is.
The larger conventional sectors, I mean, it's a bit thunder.
Yeah.
But broader markets, it's exploding. I mean, the interest levels, activity. So just,
yeah. So look, that's a space we want to keep building our coverage on. But going back to where market interest is, clearly among the foreigners, If you go back long, many years, it used to be the big private banks, consumers, IT services, and that's what's been not performing that well in the last 2, 3, 4 years. The interest is broadened out dramatically. We all know, we spoke about industrials, etc. That's not going to change in a hurry. Even now, despite the weak earnings or earnings cuts, those sectors, the cyclical sectors, are still seeing good growth compared to the rest of the markets. So I think that's a continuing trend, and that's what we want to tap on by expanding our coverage. Even today, investors' interest, like we had a conference a month back, the foreign clients, they were more interested in looking for bottom-up ideas around the mid-cap space. So that space is continuing.
Very interesting conversation there with UBS Securities. Well, let's take a look at the markets. The mid-cap and small-cap end of the markets are holding out quite strong. The mid-cap index down up almost 0.4%. The small-cap index too up almost 0.5%. Some individual stocks to watch out for. Have a look at two names from the real estate space. The first name there is Oberoi Realty. The stock today is up almost 5% in the session. And the other name that we're looking out for is DLF. Oberoi Realty up almost at 2210. DLF2 is up almost 2.5% in the session today. The other couple of names that are doing quite well from the agrochem as well as fertilizer space are two names. First up, have a look at Chambal Fertilizer. The stock is trading near the day's highest point. And the other stock that's doing quite well is Coromandel International. That stock too has seen a move to the high point of the day. But with that, it's all the time we have on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
Our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Heavyweights trade soft in sluggish trade, but mid-caps clock some gains. Realty ekes out gains, but metals and energy drag.
Credit growth for the banking sector slows to a 68 fortnight low even as the deposit growth fails to pick up. Cholamandalam Investment and Finance tells CNBC-TV18 that the commercial vehicle loan business is also seeing a slowdown through segments like affordable housing and loan against properties fare well.
Sami Hotels and Radisson Hotel India tells CNBC-TV18 that November this year has been the best ever, and they expect this run to continue with supply unlikely to catch up with growing demand, at least in the bigger cities.
Bitcoin breaches the $106,000 mark, taking its market cap to near $2.1 trillion. Expectations that a separate strategic reserve will be created by the US under Donald Trump for the crypto assets fuels the move. Good afternoon, you're with us here on Halftime Report on CNBC-TV18. I'm Hormuz Fatakia, with me is Mangalam Malu. Before we get to the markets, the big number flashing at the bottom of your screen, the WPI numbers for the month of November at 1.89% compared to 2.36% in the month of November. The food inflation has cooled down month on month but continues to remain on the higher side as well, right? 9% compared to almost 12% last month, but still a cool off on a month-on-month basis nonetheless. The CNBC-TV18 poll had projected the figure at 2.3%. Mangalam, good afternoon. The numbers look slightly good on a month-on-month basis.
The numbers look slightly good on a month-on-month basis, but the stickiness of the food inflation is something that we'll most definitely keep an eye out on. Obviously, we do have the November CPI data as well. So WPI is just, slightly lower than what the street was anticipating. 2.3% was the poll. And the numbers come in just shy of that 2% mark. Month on month, it's cooled off from 2.36% to 1.89% as well. What's actually aided this reduction in WPI month on month is fuel and power. That has come down by 5.8%. So there is a disinflation of 5.8% food and power, which is fuel and power. That is down from negative 5.79% in the previous month to about negative 5.8%. We have seen primary articles inflation that has too cooled off from 8.09% in October to about 5%, 5.5% that we're seeing right now. The food inflation, it's still sticky at around 8.92%, compares with around 11.59%. It's shown signs of moderation, but still at a higher level. And then we also have, the core inflation that has come by. So we'll keep an eye out on all these things. We do have Aditi Nair, who's the chief economist at ICRA, joining in now. Aditi, there has been some moderation month on month, but there is still some stickiness when it comes to the food part of inflation. What do you make of these numbers, and what's your view in the very near term?
Thank you. We had actually expected the WPI inflation to come in at around 2% in this month, so it's come in just a tad below what we were expecting. And the broad theme for November was that a favorable base effect was going to pull down the food inflation in this month. Now, looking ahead, there's a couple of things that we need to watch out for. The month-on-month momentum for food items is really quite mixed right now, and we're not going to have such a favorable base effect going ahead. So that's kind of juxtaposed with the fact that we've got the Kharif arrivals coming in, and overall the Rabi outlook is looking reasonably favorable at this point in time. So we're hopeful that we're going to end up with a good Rabi crop as well. On commodities, the disinflation is expected to narrow going ahead, and that is something that is going to feed into many parts of the WPI. So that's something to watch out for. And the INR has also been depreciating. So again, that's something that typically transmits a lot faster into the WPI than into the CPI. So that's the other theme that we need to keep an eye on. Overall, for the month of December, we would actually expect that we're going to have a little bit of a reversal. So we're looking at a higher WPI inflation of around 2.5 to 3% for the month of December.
Aditi, good afternoon. Thank you for joining in. Would food inflation be a primary contributor to that reversal? Because month on month, the numbers may have cooled off optically, but they still remain higher, right, at that 9% level. Now, do you see this winter crop coming in and all of these factors contributing to a decline in food prices and then subsequently food inflation, or do you see that number remaining on the higher side again?
So we do expect the YOY food inflation number to remain quite high in December, even though on a month-on-month basis with the winter crop, etc., we do expect to see some amount of softening. But we're not expecting it to be as much as what was the case last year. So between November and December last year, we had a sharper sequential easing, and that's not something that we're expecting this time around, in spite of the fact that some easing which is typical seasonal, decline would be there. And overall, the trend is also quite mixed across different commodities. So we still need to keep our eye on edible oils, for instance. And even in the vegetable pack, we are looking at a normal seasonal easing in some of the winter vegetables. But for potatoes, onions, and tomatoes, I think we still need to be a little more watchful given the amount of volatility that we've seen in the recent months.
All right, we take that point, Aditi. Just a final question before we let you go. Your view on the RBI policy, when does the first rate cut come in?
So, generally our view has been that if we get another step down in the CPI inflation to around 5% or so in the next print, which will be the last print that we will have before we go into the February policy meeting, then the likelihood of a rate cut would probably be quite high. So really, how much of a step down can we get between the November and the December CPI inflation reading? That's the main thing that we're watching out for. On the growth side, we won't have another quarterly print, but we will have the advanced estimate for the GDP growth that will be available in January. And our sense is that Q2 was probably the bottom for the GDP growth. We do expect to see higher numbers for Q3 and Q4. So mainly, the decision will rest upon what is the kind of downtrend we see in the CPI inflation. And do we see more confirmation that that path down to 4% that we had seen outlined by the MPC in the December policy review? Are there any fresh risks that seem to upset that disinflation down to 4%? Or does the December print suggest that, we're on track to meet that?
A little early to talk about, this, but even the budget, right? We have Feb 1, the union budget. What would be the policies from the fiscal end is something we'll keep an eye out on, especially given the slowdown that we've seen in GDP growth. Would you be worried about that?
So a few things that, we'll be looking out for in the budget for the monetary policy cues. One, of course, do we get that 4.5% fiscal deficit target for next year that we're expecting? Of course, what is the revised estimate for this year? And then how much further correction in the fiscal deficit is envisioned by the government for FY26? What are the medium-term cues as well? Because, we are looking forward now to the fresh medium-term path, which was suggested by the government in the last budget that, they're going to move to looking at debt to GDP instead of fiscal deficit to GDP as the indicator for the fresh medium term. So, more details around how that is expected. And then for FY26 itself, within the overall fiscal deficit target, what kind of expenditure growth are we looking at? What is the quality of expenditure? For instance, this year, the sense we have is that capex is going to undershoot the target, maybe by as much as 1 trillion, because the early trends that we have up to the last month are not suggesting that there was a very sharp upturn, in capex after July. So if you recall, in the first quarter, because of the elections, capex was moving quite slowly. We got a big surge in July, and then the momentum has varied quite a lot in the subsequent 3 months. But of course, the last month for which we have data is October, which was the Diwali month. So how much of a big push are we going to get between November and March? We are expecting the YOY growth to be very high, but we still think that capex will fall short of Government of India's target for FY25. So on top of that, what kind of a YOY growth are we looking at for FY26? That will also be important both to understand the fiscal impulse for growth and the overall quality of expenditure.
All right, Aditi, thank you so much for sparing time and joining us to decode the WPI numbers and the road ahead as well. That is Aditi Nair of ICRA, the November WPI at 1.89% below the CNBC-TV18 poll. Before we slip into a break, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel D'Souza sat down with Vishal Mehta, CMT and founder at Market Scanner, to understand the importance of a well-defined strategy or edge.
Why is it crucial for traders to have a well-defined strategy? Also, what are the risks one should consider before entering into the market?
A lot of people think that to get into a trading, you just need a demat account and money in your account, right? When it comes to business, or even if professions, right? If you want to become a doctor, you spend about 15 years to study and master it. Engineer, the most important thing in like any business is you have to have a strategy and you have to have a capital. We as a retail trader are playing against some of the largest corporates who are with the best of the minds, best of the execution capabilities. So what is at our end is the strategy, because without a strategy, you are in the jungle and ready to be killed.
Now back with us here on Halftime Report. 160 points down now on the Nifty, almost 600 points down on the Sensex as we speak, down to the lowest point of the day. And considering the kind of recovery that we saw during Friday's trading session, some bit of profit booking coming in at higher levels. What's not doing well on the index though are stocks like Titan, BPCL, Tech Mahindra. Actually, IT is a sector that is not doing well in today's session. Both Tech Mahindra, TCS are leading the losses on the index. Among some of the PSUs as well, ONGC, NTPC also trading with losses of anywhere between 1 to 2%.
All right, so we'll talk about all of this. One of the things that we need to watch out for is Reliance in today's trading session. Is down about 21% from its 52-week high. Has been a bit of an underperformer. It's a fair amount of period for this stock to actually underperform. Typically known, to lead the index on the way up, given its weight on the frontline indices, has a lot of drivers. Let's see, what the view on Reliance from the market is. We do have Parag Thakkar, who's the senior fund manager, Fort Capital, joining us now in the studio. Parag, a pleasure speaking with you. Let's dive straight into Reliance. I mean, what exactly is happening out here?
So basically, I will tell you first of all the disclaimer that we own Reliance in our portfolios.
Okay.
And I am thumping the table buy on Reliance. I have because one, the earning has bottomed out. I think Q2, where we saw EBITDA of around 38 to 39,000 crore, I think that was a bottom. From here, refining margins have recovered. The full benefit of tariff hike will come in from Q3. So all this will result in EBITDA going up from 39,000 crore average, which we have seen in last 2 quarters, to say above 40 to 43,000 crores. So there will be a 9 to 10% QoQ EBITDA improvement. The other point which I would like to say is that due to the necessity of the industry, the tariff hikes will continue to happen. And Jio has become a big business at 195 rupees ARPU and 47 crore subscribers. It is making 70,000 crore EBITDA. And 15% tariff hike is something which you can build in, which will drive EPS growth of at least 12 to 15% for Reliance in next 2 to 3 years. And even in AGM, Chairman has said that by the end of decade, that is 2030, Reliance will be more than double its size today. So if you see, for example, and this is my favorite thing, which I would like to share, that today Reliance market cap is around 17,20,000 crores. And it makes a cash profit of 1,35,000 crores. So around 8% cash flow yield, OCF yield, after paying interest, you are getting today. So it's a fantastic entry point. Your CSEC is at 6.8. You are getting 8% cash flow yield. It is not free cash flow, OCF yield. And this is going to grow at 12 to 15%. And if you give me opportunity, I'll just tell there are 3 misconceptions about Reliance today in the market. One is that Starlink fear, right? Now, there is a AT&T presentation available which shows that Starlink has only 40 lakh subscribers in 100 countries, while Reliance in India has 47 crore subscribers. Okay, so it is hard for me to believe that Starlink can disrupt Reliance or I would say any telecom player in India. Second misconception about Reliance, there is high debt. So everybody, if you ask to retail people, they'll always say that Reliance is very high debt. I like to set it correct. Reliance EBITDA last year was 1,65,000 crores and net debt was 1,16,000 crores. So net debt to EBITDA is below 1x. Even last quarter, when they reported EBITDA of 39,000 crore, when refining was a down cycle, full benefits of tariff hike were not there and retail was sluggish. Right? That time they did 39,000 crore EBITDA and net interest cost, other income, so interest cost less other income was only 1,200 crores. So their net interest cost is just less than 5% of the EBITDA. So I would like to remove this particular thing from retail people's mind that Reliance is very highly debted. Right? Third point which I would like to say is that when people say that Reliance ROE is always 10%, 11%, right? So why we should give it above book value? Now here is my point that when Reliance was investing in Jio and they invested around 4 lakh crores, if I am not wrong, and today it is going to get a value of 9 lakh crores. They invested around 1.5 to 2 lakh crore in retail. Today they are getting value of 8 to 9 lakh crores. So in Reliance, they invest in futuristic businesses, which the value for shareholder gets unlocked in long term. So to see Reliance on current ROE or current free cash flow is actually a myth.
So, you're mentioning that there will be an EBITDA improvement on a sequential basis, right? What are the factors that will contribute? Will it be the O2C business? Will it be Jio, retail, or a combination of everything?
So I'll tell you, first the full benefit of tariff hike, right, which happened. Because in last quarter it was not a full benefit. Second, refining margins have improved significantly from the bottom. Even today, I just got a message that today it has touched Singapore GRM is at above $6. And remember, these great companies do great things, right, in the bottom of the cycle. So they did this Russia deal.
Got it.
In my view, if $1 improvement in Singapore GRM happens, EBITDA goes up by 4,500 crores. And Russia has various varieties of oil to offer, which will improve Reliance O2C business EBITDA significantly.
So we understand the point on Reliance. Finally, before we let you go, slightly short on time, are there any other themes that you are, what's your view on the market?
So basically my view is that from here on, the Indian economy has bottomed out.
Okay.
So stock market might have seen some rally because of from 23,300, now we are at 24,700 Nifty. So some part of that is captured, but I would say that from here on government spending will recover, rural consumption will come back because of good monsoon, and there were late mandi arrivals. So that benefit will also come. So I think apart from Reliance, of course, banking, financials, cement, everybody will see benefit, or say L&T kind of companies. And here I am not talking about price points. I am just talking about the direction of the economy.
All right, Parag, thank you so much for
Thanks.
spending time joining us on the show today on Reliance, and of course the themes that he's watching out for going forward. Time for a short break here, more on the markets, and of course the FNO update at midday. Stay tuned, back on the other side.
Welcome back. You're watching us here on Halftime Report. The Nifty is seeing a bit of a slippage right now as we speak. So perfect time to get you an update coming in from the F&O space at midday itself. What's really standing out, if you look at, the Nifty down almost 140 odd points. We did see a 600-point range on Friday, but now we've seen a bit of a decline. Let's see at what point this decline gets bought into. The reason why I say that is because the broader market's doing a lot better. We have the mid-cap index, which is up about 0.5%. In this, sort of moves on the market or environment in the market, the India VIX has actually taken a sharp surge, almost 10.5% higher, closing in on that 14.5% mark. So we'll keep an eye out on that one too. The broader markets are outperforming. Like we said, the small cap and the mid cap index doing extremely well. And even though the lines are narrower, the green line is still above the red line. So that's something we'll watch out for in the second half of trade as well. The other thing, the real estate stocks, they're doing well. Typically, real estate stocks do a little better when they expect, some sort of rate action. So that's something we'll keep an eye out on. Oberoi Realty, Macrotech Developers, or even if you look at, some of the Bangalore-based players like Prestige Estates and DLF in the north. So it's across the board that we're seeing an up move, not one particular geography. As far as the markets are concerned, the 24,700 call on the Nifty fairly active for a premium of 150 rupees, telling you levels upwards of 24,850 could face some sort of supply. But what happens at the lower levels is something I'll be very curious to know. Largely because, put writers at 24,400 have unwound their positions as against, the street expecting them to write some puts. And also we have the 24,500 put writers unwinding some of their positions. Now we've seen some writing out here telling you 24,400 could be some bit of support. What are the levels that technically tie in for the Nifty? 24,412. That's the 50-day moving average. And the 100-day moving average on the way up is something that we need to close above beyond Friday as well. So that's something we'll watch out for. Stocks that I'm watching today. Dixon Tech may enter F&O ban given the action that we've seen in the open interest out here. And there are a couple of stocks which may exit F&O ban today. One of them is PVR Inox. The other one is Metropolis Health. So keep an eye out on them.
Another day that's belonged to real estate so far. A fantastic year for Dixon Tech and lower levels in focus for the Nifty. Some key takeaways there from Mangalam. Time for a short break. Up next, we connect with Amit Agarwal, the group CFO at Raymond Lifestyle, to discuss wedding season demand. Stay tuned. We'll be right back.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market?
Welcome back. Now, Raymond Lifestyle is in focus. The company is expecting the wedding wear market to grow at a CAGR of 12 to 13%, and they are aiming for almost 300 to 350 crore rupees in revenue over the next 2 to 3 years from its ethnic business. Now, we have Amit Agarwal, the group CFO at Raymond Lifestyle, who is joining in from the sidelines of the Motilal Oswal India Ideation Conference. Amit, good afternoon. Thank you so much for joining in. You know, we've been talking about this wedding season, right? A wedding happening every second, or maybe more weddings happening every second. So how has the demand for the Ethnics brand look like during the quarter, and what is the road ahead that you see?
So, no, thank you for having me, and the Motilal Ideation Conference is going very well. So let me tell you that what we have been hearing and getting the data from the various 600 cities with our franchisees as well as the EBO stores, the secondary demand is very, very good. And after a hiatus, let's say, of 15-17 months, we are seeing this kind of a wedding season coming back. So what we saw, first there was a big move for the Diwali, and then post that the wedding season. We are expecting, and the wedding season is not just happening in the month of November, December, rather it is extending up to the month of May. So at this juncture, the shopkeepers, the wholesalers, the franchisee network, everybody is very excited to see this demand growth, and people are coming up. And it is not just the shopping for the bride and the groom family, it is also the people who go and attend these weddings. They are also very excited to shop the products.
All right, we take that point. But, you know, if you could give us a sense of your revenue mix itself, while Raymond does do a fair amount of formal wear, etc., ethnics is something that is growing. I mean, how much would you attribute as the entire wedding season, which includes some purchase of suits, etc., to your annual revenues? If you could give us a sense of, okay, you know, out of 100 that we sell, 40, 45 or 50, etc., comes in from the wedding season, and this is what we are expecting this year and the next. If you could give us that clarity.
Sure. So look, if I look at our business, so it has got the fabrics business, then you have the apparels business, then you have the ethnics business, and then the garmenting and the shirting business. Now, if I look at it, the pro play fabric business, and you know, there is a common saying in India, there won't be a wedding in this country unless and until a Raymond suit gets stitched. So we have been in the wedding space not today or yesterday, we have been there, and this is the 100th year for a very long period of time. So we see that the wedding space at our retail value, because you know the whole process is that we sell to our dealer, and the dealer under our brand name sells to the final customer. So if I look at the gross merchandise value, from a total wedding estimated market of 75,000 crore wedding menswear, I think we get almost 3,500 to 3,800 crore value, which is coming to us. Obviously, our numbers will be lower because we sell it to the dealers who put a markup and then they sell. So we are supposedly the largest player in the wedding segment on an organized basis, at ranging around 3, 4, 5% of the total market share, because it is loosely defined. Second thing, if you look at the ethnics, you know, we have been continuously on a journey of expanding our stores. We have opened, as we speak today, almost 140 stores in prominent cities, which is actually doing very, very good. Compared to the last year to this year, we have seen a very significant growth in these numbers compared to last year. Because the growth is happening, the weddings are happening, weddings are becoming larger, so that is also reflecting us. And over the next 3 to 4 years, we expect our wedding or ethnic stores to take it to the strength of close to 300, 325. And I think we expect each store when it gets matured over 3-4 years to do anything between 1.5 crore to 2 crores per store.
So what is in the pipeline now for the second half, Amit? What are your expansion plans, new product pipelines, if you could shed more light on those?
Yeah, sure. So the basic saying is, "Jo dikhta hai wo bikta hai." So you have to have more stores getting opened. And in our line of 300 stores of ethnic expansion, this year again we will add anything between 80 to 90 stores in this year. So in second half would see another 50-60 stores to get added. Second thing, if we talk about the new lines in the fabric side, we have launched the ceremonial collection, which is again very closely related to the weddings. Then we have for the formal suits, the Bello Italia range, which is competing with the Italian range, which we have launched. So that is one on this side. On the apparel side, if I look at it, the whole casualization piece, which we have launched, is doing extremely well for us. And we are launching new products because the summer season is expected to be good. And people are coming for the bookings on the suitings and the shirtings in the next few days. So we will also watch out what kind of bookings we will see, but new collections are continuously being launched by the company.
All right, final question before we let you go, Amit. You know, basis the numbers that you're talking about, 325 stores, 1.5 crore revenue, implies that over the next 3 years in the ethnics business itself, your revenues could be anywhere between 350 to 500 odd crores. Well, the growth plan is set for you. The street wants to see some sort of, you know, execution on ground with this plan as well, because Raymond as a brand has been one of the strongest, like you pointed out, over the last 100 years or so. But, you know, with the strength of the brand, the strength of the business hasn't kept up. So from a 3 to 5 year standpoint, if you could give us a sense of your lifestyle business in terms of revenue target, CAGR, and what is your aspirational margin target? Say 3 to 5 years from now, what are the milestones that the street should be looking at?
Sure, no, very helpful. So look, I'll give you first what we have demonstrated performance. If you see post-COVID, over the last 14 quarters, company has been consistently delivering a growth and has recorded the record revenues and profitability. So that has been one part of the story which is already demonstrated. Now, if I look at it going forward, what we are seeing, considering the mix of all the businesses which we have in the lifestyle business, anything between 12-13% revenue growth and 17-18% EBITDA growth on a CAGR basis over the next 3, 4, 5 years. And that's what we believe is very well achievable.
All right, Amit, thank you so much for sparing time and joining us to discuss your road ahead. Wish you good luck for the conference ahead as well, the management there of Raymond Lifestyle. As we slip into a break, here's some good news for viewers. India's business news leader is now just a click away, and Mangalam is already looking at that click in his CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. And you can download the CNBC TV18 app from the Apple Store or the Google Play Store.
Macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Just keep an eye out on some news coming in. CNBC-TV18 exclusive. A whole host of deliberations and discussions are likely to take place at the GST Council meet on December 21st in Jaisalmer. Shivani joins us with what she's picking up on GST on old and used electric vehicles as well as smaller petrol and diesel cars. Shivani.
Well, yes, sources have told CNBC-TV18 that electric vehicles or EVs may soon face a higher GST rate in the resale market. The GST Council's Fitment Committee has proposed increasing the tax on old and used EVs and also on smaller cars like sedans from existing 12% to 18%, aligning them with the rates applied to larger petrol and diesel vehicles. Currently, resale EVs fall under this lower slab of 12% GST, while new EVs enjoy a concessional 5% GST rate to promote green mobility in India. But this proposal could make second-hand EVs less affordable for people in India. Now, here's how the current GST structure works. Larger petrol vehicle, diesel cars and SUVs are already taxed at 18%. Smaller vehicles, including compact cars, sedans and EVs, are taxed at 12% when sold in the used market. However, the tax is applied only to the supplier's margin, the difference between the selling price and the purchase price or depreciated value, keeping the overall tax burden low. If the GST Council approves this hike in December meeting, all old and used vehicles, including EVs, would uniformly attract 18% GST. This move could increase cost in the resale market, especially for budget-conscious EV buyers. Back to you.
Shivani, thanks a lot for that. And Timsy is also picking up some other key items that are likely to be discussed on the GST Council's agenda. Timsy, tell us more on those.
Well, that's right. Upcoming GST Council meeting in Jaisalmer on 21st December could discuss some of the major proposals, which includes to consider closure of GOM on revenue analysis, which has been in existence since 2019, and it has not been able to give any concrete recommendations. Thus, there's a proposal for a closure. Then comes the GOM on restructuring of compensation cess that is likely to submit a status report and seeking a 3-month extension under the chairmanship of MOS Pankaj Chaudhary. That is most likely to go through. Apart from this, for the Industry Council is likely to discuss and approve rules and procedures of functioning of the appellate tribunals to reduce the legal burden of courts for the industry and for the government. Then comes for online services. Council could discuss to issue clarity on details of unregistered recipient and declaration of place of supply. Then comes Council could create a provision to grant temporary identification number to those who are not liable for a permanent number, because there's a huge queue of GSTN while people are seeking GSTN and they are not being granted this. So this could ease the burden and allow these people to conduct business smoothly. Apart from that, then comes a concept note is likely to be discussed in the council for issuing GST registration based on risk assessment. This will give more teeth to the IT backbone, and the deliberations are on granting different categories of registration based on risk profile, and thus allowing out ITC benefit also based on the risk profile. So let's see what happens finally when the council meets on 21st of December.
Take that point, MC. Thanks a lot for that. For now, the market seeing some bit of recovery from the lows, holding on that 24,650 mark, a 100-point cut. What we'll do is take a short break, come back on the other side. Manisha Gupta joins back. She will have with her Sayam Mehta, who's the president at All India Gems and Jewellery Domestic Council. Stay with us. Welcome back. We were talking about the wedding demand with Raymond. Just pull up Siaram Silk Mills, another stock which, gets impacted positively by the wedding season. The stock's up 9% as we speak. And this month itself, it's seen a rally of almost 37%. So we'll keep an eye out on that one. But that's about the equity space. We have with us Manisha Gupta, who joins in now. Manisha, you spent, I guess, a week in Brazil.
Yeah.
There's coffee, there's cocoa, there's a lot of metal, there's
ethanol,
sugar, everything.
ethanol.
Yeah. So how was that, and what commodities are you tracking today?
Well, Brazil was a complete learning, Mangalam, and I can tell you, since you were talking about the wedding season, there were quite some honeymooners there, not so many Indians, but yeah, various part of the world there, and that's a place where you have summers right now, so it was an amazing experience. But we are talking about gold right now, because in the Indian markets, with all that wedding season going on, this is yet another theme where we have seen strong buying continuing, especially with the fact that the gold prices have come very strongly off their all-time highs. Joining us then is Sayam Mehra. He's president at All India Gem and Jewellery Domestic Council. Sayam, hi. Thank you for joining us. First of all, on the Indian gold demand, we do understand also, and there have been reports, Sayam, that Indian jewelers are selling gold in the Indian market at a discount. I mean, how far is that true?
No, the thing is that there is no discounts which is there in the market as of now, but the previously the rates of the gold used to be at 94, 95. Now while with One India, One Gold rate coming up, the gold rates have come up to 92 only, which is 22 carat. There is no extra premium which the retailers are charging now. And in spite of the gold rates reducing a little bit, December is generally a month where which the buying of the end consumers is a little less due to the holiday season, people going out for holidays, different mindset for buying. There is also 1 month of lag, which is about from 15th of December to 9th of Jan. There is less buying. As Ashub, it is in the mind of the end consumer. So there is less selling at this time, in spite of many weddings and festivals which have already been passed. The golds have reduced about $100 from its peak. And I think this month itself also, the rates is difficult. It is difficult for the rates to increase because of there is going to be less movement in the European and the US market because of the Christmas and the year ending coming in. But after January, I see a movement also in gold and also in buying after the 12th or 13th of January next year.
Sayam, I was, I came back from Brazil today morning and I was crossing Dubai as an airport, and, everywhere, every gold shop there was putting out and in big banners on how people buying gold on Dubai airports can make use of GST and VAT refund. I mean, I know GJC has been working quite a lot onto this one, but is there any more development there?
So we had a discussion last year also with the FM and the MOS FM, Mr. Pankaj Chaudhary ji, a few days back when I and the team at GJC went and met them. We discussed about the refunds at the airport. We discussed about anything about the custom duty also, how can it be refunded? Because people, the NRIs who have already shifted outside the country, want to buy the jewelry from their family jeweler, but it is becoming impossible for them because of this 9% or 10% charges which a local retailer has to pay, which an end consumer has to pay. So we had got a commitment last year that by this year end or the mid of April next year, there should be some system which should come up, some refunding system at the airport also which can come up. So still we are following up, but there is a little bit more time which they have asked, and we are following it up. Let us see how it goes. The countries like Dubai, Singapore are following this, but in order to get the funds from the NRI and people buying from a local jeweler here, it is the need is that there should be GST refund and there should be custom refund, which also should be there at the airports.
Sayam, when it comes to jewelry, you're a manufacturer. I mean, you sell for India and you export as well. How are you looking at both of these markets as we come towards the end of this year?
No, I think India domestically has been great. The market has been very good. Not only 22 carat, but also 18 carat jewelry has been selling a lot as the gold rates have increasing. In hallmarking, we are getting 9 carat also in the coming months to come, so that even if the gold rates are going to increase to maybe 78, 80,000, and maybe next year ending, we can see 92 to 94,000. Still, there can be a 25% lower caratage. As per hallmarking, we can sell it at a better rates for the end consumers. In the international market, in spite of the gold rate increase, if you go to see the Saudi market, which is cropping up very well, Dubai, wherever you see, go to any gold souk in Dubai or any other places also, you see Indian handmade jewelry coming up there. So So you will see that kind of Indian handmade jewelry which is coming up there. And I think by these ways, Indian exports are increasing also year on year when it comes to gold. When it was 5% previously, now it has come to 6 to 7% of the share in the entire 40 billion, 37 to 40 billion of the exports. Indian handmade jewelry of gold is also now increased from 5% to 7% this year.
All right. Take that point, Sayam. Thank you so much for joining in and giving us those views. We'll wrap up on this edition of Halftime Report while Manisha and I discuss her Brazil tour. Take a short break, come back. Market action taken forward by Business Lunch.
Heavyweights trade soft in sluggish trade, but mid-caps clock some gains. Realty stocks eke out gains, but the metals and energy drag. Credit growth for the banking sector slows to a 68 fortnight low, even as deposit growth fails to pick up. Cholamandalam Investment and Finance tells CNBC-TV18 the CV loan business is also seeing a slowdown, though segments like affordable housing and loan against property fare well. Sami Hotels and Radisson Hotel India tells CNBC-TV18 that November this year has been the best ever, and they expect this run to continue, with supply unlikely to catch up to the growing demand, at least in the bigger cities. Bitcoin breaches at the $106,000 mark, taking the market capitalization to near $2.07 trillion. The expectation that a separate strategic reserve will be created by the US under the Trump for the crypto asset fuels the move. India tabla maestro composer and four-time Grammy Award winner Zakir Hussain dies at 73 following a 2-week hospitalization. The Padma Vibhushan awardee had won the acclaim on the global stage, having performed with several world artists. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. A quick look at how the market is shaping up. So we've seen a bit of a subduedness that came in for the market. It opened up in the red and then the decline just further, accentuated through the day. Now, as of now, Nifty is down almost 100 points, more than 100 points that we're seeing, down 0.5% of trade. Similar to the Sensex, also 0.5% of decline. But what's outperforming today is the broader market. So let's pull the Nifty mid and small cap because that's outperforming. Nifty mid cap holding on to gains of 0.5% and the small cap also managing to hold on to good gains in trade. Realty, PSU banks, let's pull that up because that is among the top sectoral gainer. Nifty Realty up 3%. PSU banks managing to hold on to some bit of a green as well, 0.2-0.3% of gains. But overall, the Nifty bank, that's not been doing well, though the PSU bank side is doing much better. Only the PSU segment, overall Nifty bank is not holding on to that much of a gain that we are seeing coming in trade. Let's move on and talk about some of the stocks that are in focus on the back of some news flows that have come in for them. One is Dixon Technologies, Afcons, though managing to hold on to very good gains. Other than that, we have RITES as well as JK Paper also managing to hold on to good gains on the back of news flows. Pharma, that's been an exciting space as well today, some of these names. So Aurobindo Pharma, Wockhardt Pharma. We have these companies in focus on the back of news flows. Spark is also buzzing in trade. They will be holding some investor presentation and meet that will be happening with some clients, and that is going to be on the 19th of December. So we'll watch out for that. It's going to be on the pathway in terms of research and development for them. What is the focus area going forward? So keep an eye out on Spark. Also today, surely seeing a very sharp gain of almost 10% to 11% in trade. On that note, let's talk about the banking sector and start the show with the banking sector because that's in focus. Abhishek is joining in with us now to give us more details in terms of the banking sector's business, the momentum for the month of November. How is that shaping up? Abhishek, good afternoon.
Good afternoon, Vinay. So, RBI gives out the fortnight credit and deposit data for the banking sector. And this time it looks to be on the weaker side for the month ending, November. And typically what we have seen over the last few fiscals, or let's say 3 to 4 fiscals, is that whatever number has come in for the growth rate in November, end, that's been the typical growth rate for the fiscal year end as well, with plus or minus 25 to 50 basis point in growth rate. So business momentum as of 29 November 2024, deposit growth is at 10.75% year on year. This is the lowest growth that you are seeing in last 9 fortnights. Credit growth has dipped to 10.64% YOY, which is one of the lowest growth that you are seeing in last 68 fortnights. Deposit growth continues to outpace credit growth in the last 3 fortnight data that RBI has put out. Credit deposit ratio remains elevated at around 79.5%. And this is also one of the highest that you are seeing in last 5 fortnights. M3 growth or money supply growth that on a YOY basis is at 11 fortnight low of just 10% YOY. So deposit to M3 ratio, that's improved to 83.25% when compared to 83.13% that we had seen a fortnight ago. X of HDFC Limited numbers, the deposit growth is at 11.1% YOY and 0.8% on a fortnight basis. This is the lowest number that you are seeing in last 9 fortnights. Advances growth is at 11.8% and 0.9% on a fortnight basis. Now, on a year-on-year basis, this is the lowest number that you are seeing in last 37 fortnights. Credit deposit ratio is at 77.7% when compared to 77.6% that the sector had reported in the last fortnight. Back to you.
Okay, Abhishek, thank you so much for the update coming in on the banking sector. But let's move on and talk about Wockhardt. Why is that in focus today? Now, Wockhardt is in focus. Why? Because they have successfully said that the use of Zynic, which is WCK5222, that's the cancer drug that, Wockhardt has spoken about since 2022. And since then, the stock has also moved up. But now they've seen some successful use of this drug in US cancer patients. Their phase 3 trial is already on in terms of the study that is taking place. And and that is expected to be coming out soon. So yes, that completion will be anytime soon that we're watching out for. Now, obviously, till date, they have seen 45 patients, have treated 45 patients with this drug that have benefited under the compassionate use of the drug. I beg your pardon. So compassionate use of the drug, that is something that they're working out in the phase 3 trial, and that is what is positive for the company, because this is a slight bit of a positive use that after the drug, they have managed to see positive results coming in and take further treatments, at least for the patients that they've tested it on so far. Let's not forget, Wockhardt has seen a very sharp run up in the last couple of years as well. Last 1 year, it's more than 200% uptick that one is seeing in, and that is mainly because of this cancer drug, which is an important one for the company. Let's move on to the next stock also that is in focus today. We have HPL Power that we're keeping an eye out on, and that is because they have won a coverage order of around 1,522 crores. This is a big order because this is for around 2,200 locomotives that they have to supply and install actually the systems for the railway systems. This is expected to be completed in the time period of 12 months. And other than that, 24% of the revenue as of now, as of 2024, FY24, came in from railway electronics, coverage as well as chargers. But in the last year and few months, we've seen increased order coming in from the railway segment. So that is something that we'll be keeping an eye out on. But on that note, those were the buzzing stocks. But with that, we'll slip into a very short break. And after the break, we'll get you exclusives on a whole host of discussions that are likely to be a part of the upcoming GST meet. What will be that agenda there? Stay tuned in for that.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make
Invest.
Welcome back to Business Lunch on CNBC TV18. Let's move on and get to some CNBC TV18 exclusive. A whole host of deliberations and discussions are likely to take place at the GST Council meeting that will be held on the December of 25th. Shivani joining in with us with what she's picking up on GST on the old and used EVs and smaller petrol and diesel cars. Shivani.
Well, yes, sources have told CNBC TV18 that electric vehicles or EVs may soon face a higher GST rate in the resale market. The GST Council's Fitment Committee has proposed increasing the tax on old and used EVs and also on smaller cars like sedans from existing 12% to 18%, aligning them with the rates applied to larger petrol and diesel vehicles. Currently, resale EVs fall under this lower slab of 12% GST, while new EVs enjoy a concessional 5% GST rate to promote green mobility in India. But this proposal could make second-hand EVs less affordable for people in India. Now, here's how the current GST structure works. Larger petrol vehicle, diesel cars and SUVs are already taxed at 18%. Smaller vehicles, including compact cars, sedans and EVs, are taxed at 12% when sold in the used market. However, the tax is applied only to the supplier's margin, the difference between the selling price and the purchase price or depreciated value, keeping the overall tax burden low. If the GST Council approves this hike in December meeting, all old and used vehicles, including EVs, would uniformly attract 18% GST. This move could increase cost in the resale market, especially for budget-conscious EV buyers. Back to you.
Thank you so much for that update there. But now over to Timsy, who is also picking up other key items that are likely to be on the GST Council's agenda. Listen in and Timsy, take it over.
Well, that's right. Upcoming GST Council meeting in Jaisalmer on 21st December could discuss some of the major proposals, which include to consider closure of GOM on revenue analysis, which has been in existence since 2019 and it has not been able to give any concrete recommendations. Thus, there's a proposal for a closure. Then comes the GOM on restructuring of compensation cess that is likely to submit a status report and seeking a 3-month extension under the chairmanship of MOS Pankaj Chaudhary. That is most likely to go through. Apart from this, for the Industry Council is likely to discuss and approve rules and procedures of functioning of the appellate tribunals to reduce the legal burden of courts for the industry and for the government. Then comes for online services. Council could discuss to issue clarity on details of unregistered recipient and declaration of place of supply. Then comes Council could create a provision to grant temporary identification number to those who are not liable for a permanent number, because there's a huge queue of GSTN while people are seeking GSTN and they are not being granted this. So this could ease the burden and allow these people to conduct business smoothly. Apart from that, then comes a concept note is likely to be discussed in the council for issuing GST registration based on risk assessment. This will give more teeth to the IT backbone, and the deliberations are on granting different categories of registration based on risk profile and thus allowing out ITC benefit also based on the risk profile. So let's see what happens finally when the council meets on 21st of December.
Absolutely, Timsy. Thank you so much for that. But on to another CNBC TV18 exclusive that we have for you all. Parakshit is joining in with us with details on Bajaj Auto's EV game plan. Listen in to Parakshit and his views coming in on what is expected there. Parakshit, what are we expecting from Bajaj Auto's side now?
Well, Bajaj Auto is targeting selling 500,000 electric vehicles in FY26 and more than that as well. Rajiv Bajaj, in fact, told CNBC TV18 exclusively that the company is likely to exit FY25 with a capacity and sales run rate of 40,000 cumulative electric vehicles per month. The company has new electric three-wheeler launches, including an e-rickshaw on the anvil in the coming months, and these will significantly bolster sales volume. We will in fact see a lot of action starting this December and in the next quarter as well. Sources tell CNBC-TV18 that the e-rickshaw will be launched in Q1 of FY26. In fact, Bajaj Auto is likely to launch a new brand for electric three-wheelers. All new electric three-wheelers will have the new brand identity. Sources also add that the company will launch 5 new electric Chetak scooters and 5 electric three-wheeler passenger and cargo vehicles in the coming months. A new Chetak scooter is being launched on the 20th of December this year, which sources say will have a bigger battery, higher range, more features and better performance than the current Chetak lineup in the market. The production capacity of Bajaj Auto is being ramped up to meet electric vehicle sales target of over 5 lakh EVs in FY26. Bajaj Auto has sold a total of over 1.7 lakh electric vehicles across 2- and 3-wheeler segments. The company has emerged as the top electric two-wheeler maker in December, displacing Ola Electric.
Okay, Parikshit, thank you so much for the latest update coming in on that front. But on that note, we're going to step into a very short break. And on the other side, tributes pour in over the passing of the tabla maestro Ustad Zakir Hussain. We get you more after this break.
Comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
somber news coming in this morning, where we got to know the tabla maestro Ustad Zakir Hussain passed away at a hospital in San Francisco at the age of 73, and according to his family, he died due to complications arising due to progressive illness of respiratory system. The musician who took the tabla to the global stage had been hospitalized for the last 2 weeks and was later taken to the ICU as his condition worsened. Ustad Zakir Hussain's career spanned over 5 decades, during which he was revered as both a national treasure in India and admired worldwide. The percussionist, one of India's most celebrated classical musicians, received the Padma Shri in 1988, the Padma Bhushan in 2002, and the Padma Vibhushan in 2023. And tributes pour in from around the world to honor the legendary Ustad Zakir Hussain, who left an indelible mark on the classical music world. Prime Minister Narendra Modi praised the remarkable contribution to showcasing Indian instruments globally and calling him a true genius. Musicians and industry leaders are also paying their respects. A.R. Rahman remembered the tabla maestro, expressing regret over missing the opportunity to collaborate with him. Microsoft CEO Satya Nadella acknowledged Ustad's rhythmic brilliance, hailing him as a true legend. Rajya Sabha MP and philanthropist Sudha Murthy also shared her reaction to his demise. Listen in.
Hearing the Zakir Hussain's death, it gives immense pain. He is the one who introduced the beauty of tabla to the Western country. He was a good human being. I knew him personally, and it's a great loss to India as well as the music world.
And moving on to some international updates that we have this afternoon. South Korea's ruling party leader, Hang Dong-hoon, is stepping down following the impeachment of the country's president, Yoon Suk-yeol. Now, earlier, South Korea's lawmaker voted to impeach the president over the attempt to impose martial law in the country. CNBC's Sherry Kang is joining in with us to give us the latest.
The ruling party leader, Han Dong-hoon, stepping down, and this was... We've been seeing signs, especially since late last week, calls were growing for him to resign from his post. He did a lot of back and forth on President Yoon's impeachment, and how he managed the party line was very much in question, especially coming from the ruling party lawmakers who were really siding with the president. And we've got a lot of optics that showed President Yoon versus his own ruling party, Han, as well, so in recent months. So this really shows somewhat of a breakup among conservatives, people who were for or against President Yoon's impeachment. And I think that's going to be a really key point going forward as we keep watching the political chaos in South Korea. President Yoon, who has been impeached, the ruling is going to be coming from the Constitutional Court to make it official, to uphold or reject. We've got some months for that to happen. We've got the Constitutional Court actually picking up the case pretty fast, and they've already begun reviewing this case from this morning.
Okay, and as we wrap up on Business Lunch, we leave you with visuals of the world chess champion Gukesh D, who returned to the country earlier today, days after winning the 2024 FIDE World Championship in Singapore and becoming the youngest ever at the age of 18. Okay. With that, it's a wrap on this edition of Business Lunch. Thank you so much for tuning in to CNBC TV18. Don't go anywhere. You have Midcap Radar up next.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, steady as it goes. We have just been at those levels when we started the trading session as well. 124 points lower there. Bank Nifty is lower, but it is slightly outperforming the benchmarks. And the real outperformance in the mid-caps and small caps, they have made a comeback.
That's right. Mid-cap and small-cap have built onto the gains. The Nifty Bank has spared some of the losses that it saw earlier during the day. So a bit of a comeback and some good going as far as the bulls are concerned. We have quite a lot lined up on the show for you today. Let's start off with the top headlines. Heavyweights trade soft in sluggish trade, but mid-caps clock some gains. Realty stocks eke out gains, but IT, metals along with oil and gas drag.
Dec 16th shares surge over 4% after the company enters into binding term sheet for a proposed joint venture to undertake OEM business of electronic devices, including smartphones.
Vocard surges after the successful use of the drug Xanic that was used to treat a cancer patient in the USA. Stock surges over 8%.
Max Financial surges after Jefferies issues a buy call with a target of 1660 rupees a share. Says the refreshed identity post-partnership with Axis could enhance brand recall, especially in Tier 2 and 3 markets.
Afcon's infra gains after securing a letter of award from MP Metro Rail for an engineering, procurement and construction project worth over 1,000 crore rupees. The stock is up over 3.5%.
All right, those are the top headlines. As Vivek pointed out earlier, mid-caps have added on to the gains that we have been seeing earlier. 345 points higher on the mid-cap index. The small-cap index is up around 0.3%. So far, small caps have been outperforming the mid-caps, but today it is slightly different, but nothing. Oh, actually, it's 0.6%. So it is outperforming the mid-caps as we speak. The Nifty Bank has pared down some of the losses that we've been talking about. So 45 points lower there, and a lot of moving parts in the broader markets as well. So we'll keep discussing that through the course of the show. But so far, some recovery of Nifty Bank. Let's see whether that culminates or transfers into the Nifty recovering towards the end of the trading session as well.
We still have around 2 hours to go, so it'll be interesting to see whether the bulls can take the markets back into green territory. Well, one particular space that we can look at, and I'm sure Hormaz will have a whole host of stocks from the realty basket on his radar today. The entire real estate pack today is doing quite well. In fact, the Nifty Realty Index is one that's doing quite well. But we'll move on to Hormaz. He's standing by the wall. This is our special segment, Mid-Cap Movers. Hormaz will take us through the mid-caps that are moving around in the session.
Well, portfolios are doing well, and that is what is more important for the street participants to hear, right? Even though the benchmark indices are slightly quiet, but plenty of movers, as always, in the broader markets. And we'll start off with the gainers in today's trading session. And Sundaram Finance is one of them, 5.5% higher, a new day, new development, and a new record high for Dixon Technologies, crossing the 1 lakh crore market cap last week itself. So a new high there as well. 5-star Business Finance, Keynes Tech, all of them doing well in today's trading session. As Vivek just mentioned, real estate is a sector that is surging in today's session. Puravankara is up in a 10% circuit. Oberoi Realty, after an upgrade from Avendus Sparks, is up 7%. Prestige Estates, Macrotech, all of them having a good day, and all constituents of the real estate sector trading with gains in today's session. A lot of the stocks are reacting to news flow developments. And walk hard after the drug launch was up 8%. Some positive news coming there. Glenmark as well after a drug approval, 2.5% higher. Vedanta at the lowest point of the day ahead of the board meeting for its fourth interim dividend. Stocks that are doing well on the back of strong volumes, and they'll come up on your screen. You can see walk hard, and then you can see some of the stocks that are doing well on the back of volumes, and there are plenty of other names in the list as well. And lastly, some of the stocks that are not doing well in today's trading session, some of the underperformers, an Angel One, Vijaya Diagnostics, HPCL, Nalco, all of them down to the lowest point of the day as we speak, and they are trading with losses of anywhere between 3 to 4%. Back to you guys.
All right. Thank you so much, Hormaz, for joining us as always. So those are some movers in the broader markets. It's a good time to welcome Shilpa Raut from Prabhudas Leeladhar for a technical check on the market. Shilpa, good afternoon. Thank you for joining in. Do you think we'll see some recovery in the benchmark indices as well, as we've seen in Bank Nifty and the addition of gains on the mid-caps?
Good afternoon, everyone, and thank you for having me on the show. Nifty is likely, to move sideways for a few sessions more because 24,800 is definitely acting as a very strong resistance. So until and unless we move past that and sustain or give a close above that, the move towards 25,000 to 25,300 becomes debatable. So Nifty might be a little under pressure, but yes, Bank Nifty definitely is looking much, much better. You have a good support, positional support at around 52,500, and from here 54,500 to 55,000 definitely is looking quite possible in near term.
Okay. Shilpa, what are your individual picks for the day?
I have two buys. The first one would be, of course, from the reality sector. Prestige. Prestige is looking very strong. If you look at the option chain, there's a lot of support at around 1800 zones. So with a stop loss of 1780 from here, one can stay long in Prestige and look for targets of 1930 to 1950. The other one would be a buy in Paytm. Paytm also has given a breakout now, sustaining above 1000. Definitely adds a lot of conviction for the stock to move towards 1030 to 1050. So stop loss of 980 here should work fine, and look for targets of 1050 from here.
All right. Okay, Shilpa, thank you so much. So there's a sharp recovery in Paytm stock as well. It's up around 1.5% as we speak. It's time to slip into a break. When we come back, we'll get you more on the market, stock-specific action, and a lot more. Stay tuned.
Welcome back to Midcap Radar. Well, Hormal just told us about some of the real estate stocks that are doing quite well. In fact, the entire realty index is doing very well. Oberoi Realty, one of the top gainers. Along with that, one particular stock in an NBFC that does quite a bit of lending to the realty pack, that is Hutco, a recent addition into the F&O space. Now, that particular stock, Hutco, is up almost 4.5% in the session. The other stock that's buzzing and doing very well on the back of news flow is actually Dixon Technologies. The stock started the day in the green and it's actually built onto its gains quite significantly. The stock that is valued over 18,000 rupees is up almost 5% in the session today, almost 1,000 rupee up move as far as Dixon Tech is concerned. But moving on to the pharma space, Aurobindo Pharma is buzzing today after its subsidiary received a nod from European agency over a drug. Winnie joins us with more details.
Afternoon. So yes, Aurobindo Pharma's arm, that is Curatech, has received a European medical agency's nod, and this is for a biosimilar drug. Now, this drug is called Zephyr, and this is a big drug coming in for the company from the biosimilar side. Why? Because company has been focusing a lot more on the biosimilar investment in the last few years. Now, Goldman Sachs in a report, they highlighted that this is a positive development because first it gives an evidence that the company's ability is there to actually start monetizing the investments they made in biosimilar drugs. Also, do not forget, the company had made an investment of around $400 million over the last couple of years for these biosimilar projects. Company also has highlighted that they have 2 more products, which are also biosimilar products under the review with the European Medical Agency. So more drugs could be expected on a positive side coming in for the company. As of now, this positive opinion that they've received from the CHMP on this drug surely is keeping the stock abuzz, giving a boost to the biosimilar side, and that is why a positive up move that we're seeing today. Stock holding on to gains of almost 3% and at the day's highest point as of now.
Oh yes, it is. And pharma space generally is in focus as well, right? So if we look at the markets as well right now, thank you, Winnie, by the way, for joining us with all those details. There was a wee bit of recovery that we saw. The bank Nifty briefly got into the green, so it is absolutely flat now with some negative bias. But in the Nifty pack, we do have recovery coming in on BPCL. There's Dr. Reddy's as well. When he was talking about Aurobindo Pharma being in focus, we have Walkard, which has been buzzing in trade as well. So we have Dr. Reddy's, which is at the day's high. This Power Grid, which has seen a recovery from the lows as well. Kotak Mahindra Bank. So some of these banking names are in focus. HDFC Life is the other one. We do have Apollo Hospitals as well. ICICI Bank and HDFC Bank are the other 2 names on our radar. Let's talk about the action in the primary space, because that continues to be very strong. In fact, DAM Capital's 840 crore rupee IPO opens for subscription on December 19th and ends on December 23rd. The company has set a price band of 269 to 283 for the IPO. My colleague Reema caught up with Dharmesh Mehta, the MD of the company, to discuss about the IPO, the company and its growth targets going forward. Listen in.
Well, firstly, I'm not comparable to the other players because they have NBFC, other financial services business in their segment. We don't have that. And the reason to IPO is you can attract talent and also gives a lot of credibility to the platform. And once that happens, it's easier to win more mandates and transparency is there. And the investors who invest early on can get the benefit of the growth story if we are able to achieve what we are planning today.
Okay. So what are in the pathway to growth? What is the plan towards entering into wealth management, asset management? Because right now your focus is more on merchant banking and broking.
We will eventually go into AIF and asset management and also into retail broking as and when. So there are certain plans which are already there. And I believe we're just setting up this entire platform, which touchwood has now been settled and hopefully will grow much more. And then we'll start looking to expand the other business.
So have you started work towards asset management, AIF or retail broking or not yet?
Not yet. I think it's in the works as we speak and hopefully soon we should do that.
You've also indicated in the RHP that to enable cross-border transaction and expand your global reach, you are looking to explore a strategic partnership with a global merchant bank. Is this going to be a significant revenue driver?
It will be, because the kind of platform we have built today and the kind of clients we have today, all of them or a large part of them will be acquiring assets globally. And having a strategic tie-up globally will help acquire, especially the mergers and advisory piece. So that can be large transaction happening abroad. So a strategic tie-up definitely will help in the future. It's not that we won't do well without that. It is just an additional advantage which we'll have as and when it happens.
And is there a timeline to this?
No, there's no timeline. We're not in a rush.
You're not in a rush. So there are three potential growth drivers from here on. New areas that you're looking into. One of this is global partnership, second is retail broking, and the third one is asset management / AIF / wealth.
That's correct.
Is that correct?
That's correct.
So when we look at retail broking, what is the approach that you will take? Would you look to build it organically? Would you look to acquire a company? Would it be a Zerodha type entity? What is the thought process?
The thought process is very simple. We won't be into cash burn businesses, so it won't be throwing cash and trying to acquire business. If it comes in
So
the
no
traditional
discount broking?
No discount broking, and we'll try to build it the traditional way. And as I said, the balance sheet of DAM Capital won't be used to burn money. So whatever makes business sense, we'll do it. And we are in no rush. We'll build those platforms over a period of time.
And would you be open to an acquisition? Like, for instance, Mirai acquired Sharekhan?
We'll be open to acquisitions, like something how we acquired IDFC. If it comes at a good price, always open to it.
Okay. And what's the cash in the books right now?
As we speak, in the last March, we are roughly around 150 crores of cash. Hence, there is no requirement of capital, so we are not doing any primary. It's purely OFS to come to get listed. As of today, there's no plans to raise any primary.
So we have your revenues till September, Dharmesh. But from 1st of October, SEBI introduced a new circular which enhanced the regulatory measures. So there was rationalization of weekly, contract expiry, etc. Have you seen a drop in volumes?
Well, not so far. And as we said, we are more into institutional broking, so that's not impacted much.
But from an industry point of view, because there were some estimates which said that we could see a 20-25% drop in volumes because of these measures.
Maybe in the speculative segment, but we are not in those part of segment.
So since your revenues are linked to the economy, the financial health, the capital markets, India, and what's the pipeline looking like from here on?
I think so. India IPO story is, and overall fundraising story is very strong. And I believe that will continue for the next few years.
So your market share is 12.1% in IPO / QIP. What is your market share in institutional broking and M&A?
Well, it's not as simple as what you can see in institution as IB, which comes in public domain. So it's always a guesstimate, and I would not like to do a guesstimate on the same.
But it will be in very low single digits, is that fair?
Yeah, it should be in low single digits.
Even for institutional broking?
That's right. And that's the growth story. That we just because institutional broking, unlike IB, takes time to grow. Because there's a time period by which you actually grow institutional broking, and that's why you're seeing the growth which has come in the last few years.
You've been also the fastest growing company in your space. 38% revenue CAGR, nearly 80% PAT CAGR over the last 3 years. Apart from low base, what do you think helped you achieve that?
I think overall markets have helped us. That kind of fundraising which has happened in India, which is unheard of in the last 10 years. So that's definitely helped, and obviously acquiring market share will also help. As you can see in India, in the last 10 years, the fee pool has increased multifold. But the number of investment banks virtually who dominate this investment banking space are the same. So you just have to go and dent that space, which we have been able to, and try to gain market share.
What's interesting is the kind of commission that you make as a book running lead manager has also gone up in FY24. But on an average, it's been between 1 to 2%.
That's right.
What is the average globally, and is there headroom to increase that or not really?
Well, you can't compare global investment banks to India because there's an underwriting risk which they take. It doesn't happen in India. So they're not even actually comparable. But I think overall the yields will move up. The yields which you make per transaction is definitely going to move up. And also the value of the transactions are moving up. So the size of fundraise which you were earlier looking into a few thousand crores, now Hyundai raised almost 27,000 crores. So that size has never happened in India. So I think the fee pool itself is going to move up substantially.
And one final word then on the markets. There is increasing opinion that since we've had 8-9 years, good years on the trot now, H1, at least the early part of 2025, looks to be a little more headwinded, given the monetary policy may not be as easy as it was earlier anticipated, and there is policy uncertainty. Your thoughts, at least over the next 6 months for the Indian markets?
See, when you're such a big bull run, you're going to have some consolidation happening. I think so the long-term story of India is intact. So I'm not too worried on that part. 3-6 months don't matter in the scheme of things.
But you think 3-6 months we could be in for some pain?
Not pain. I would say you will go through a consolidation phase. I wouldn't say it's going to be painful. Don't forget, we come out of a large election and plus state elections. I think so next year the focus of government will be into policies on the growth story. So you'll start hearing much more positive news, hopefully, once the budget is out. So I'll be hoping that India will go back to normal business from 2025.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an...
Welcome back to Midcap Radar. Well, the markets, especially the broader end of the markets, continue to build onto the gains. Have a look at the Bank Nifty. The Bank Nifty, the tussle is on between the bulls and the bears. At this point of time, the bulls have managed to go ahead and take the Nifty Bank just above the flat line. Now the Nifty Bank is completely hovering around the flat line. Well, one particular stock, especially in the last half hour of trade, that's doing quite well is actually Samvardhana Motherson or Motherson Sumi. Remember last week the company did announce a couple of acquisitions, a couple of important acquisitions as far as the Japanese market was concerned. On the back of that particular stock saw quite a few EPS upgrades coming in from the sell-side analyst community. The other stock on the radar is United Spirits, seeing a bit of selling pressure, now down almost 1.5%. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Hello, good afternoon. You've tuned into Your Stocks on CNBC TV18. And a quick look at what the market is doing right now. We have seen that the Nifty and the Sensex today is underperforming, though Nifty has recovered a bit from the day's lowest point, still down 0.4%. Similar for the Sensex, down 0.4% in trade as well. What's performing today and holding on to the green is the Nifty mid and the small cap. That's managing to hold on to some bit of a gain. So let's keep an eye out on how the mid and small cap space is shaping up in the second half of the trading session as well. Nifty mid and small cap both holding on to good gains of almost 0.6% and more on the upside. Bank, let's pull at the Nifty Bank up as well, because that is something that we should be focusing on, and where that is headed. Nifty Bank is flip-flopping between the red and the green, though as of now has recovered from the day's lowest point is what the Nifty Bank is holding on to. We have top contributors like ICICI Bank, IndusInd Bank, Axis Bank, while on the flip side, HDFC Bank, AU Small Finance Bank and Bandhan Bank not contributing much to the Nifty Bank. But yes, that's how the market is looking like, but this is a show where we solve all your stock-related queries. And we have our experts for today who are joining in with us, Asta Jain of M Securities and Ashish Kyal of VA Strategy Advisors, to answer all those doubts that you all have on the stocks. Asta as well as Ashish, good afternoon, and thank you so much as always for joining in with us. You know, I'm going to start by talking about queries only because market is just moving in that range. One day we see it up and one day down. So I'm just going to skip that part today and just talk about the queries. Let's start with Sun Pharma. That's the first stock query that we have. It's coming in from Rahul Menon, who's writing to us from Kerala. He holds 1,000 shares of Sun Pharma at a price of 1,210. Currently making a profit over here, so wants to know for the long term, and he's a long-term investor. So what should he be doing now with the stock? Should he continue to hold this or maybe book out his profits and maybe look at something else? Asta, let me take it to you first.
Hi, good afternoon to all of you. Talking about Sun Pharma, we are recommending continuing hold on this counter with the initial price target, which can be set at around 1920 to 1950 odd levels. Now, talking about this counter, what we have seen is a volume-led growth. Basically, revenue growth was decent in the Q2 of FY25. So it was a volume-led growth, and the company has certain new product launches also. I think on the basis of whatever effective cost control measures this company is taking, the US market is also performing. In fact, they are gaining leadership in India also in certain products. So I think it is a well poised to cater the opportunities which are present in the sector in future as well. So we are recommending a hold on this counter with a price target of 1920 to 1950 initial levels.
Okay, hold and keep an eye out on those levels over there. Ashish, good afternoon. Sun Pharma, how is that looking like? Should the viewer continue to hold this pharma company or maybe book out profits and look at some other company? Anything you are finding interesting?
Afternoon to you and all the viewers. If you look at Sun Pharma, I think the stock has done exceptionally well over the past 1 year, also 1.5 years. The overall trend is bullish. We saw some kind of a short-term correction, but I think that's an opportunity to accumulate. The view is going to be positive. I think if the stock manages to break about 1830, 1835 levels, there will be a fresh breakout and we can expect the target on the upside at 2000. So my recommendation, continue to hold on. It is outperforming within the pharma space. 1830, above that, we are expecting 2000, and over the medium to long term, we can even expect 2500. These stocks can touch.
Okay, 2,000, 2,500 in the medium to long term. So yes, the viewer can continue to hold the stock. That's the view coming in from both our experts. Let's move on to the next query then. We have Srinivas, who's writing to us from Karnataka, holding 300 shares of Bajaj Housing Finance at a price of 136 rupees per share, making some bit of a loss here right now. Wants to know whether to hold the share for another 2 to 3 years. Asta, what is your fundamental view on this one?
So fundamental view is positive, first of all, because what we have seen in the results gone by, that company was able to cross 1 lakh mark of AUM. If I talk about September ended figures, so that is one of the key for this. In fact, they have shown a strong growth in their financial and as well, and in fact, their GNPA ratio is looking healthy to us. So all in all, I think now the company is on a way basically to achieve strong profitability going ahead also. So we are recommending a hold on this counter. Initial price target which we are giving to this counter is at around 145 odd levels.
Okay, keeping an eye out on Bajaj Housing Finance. But, you know, Ashish, I know you don't have much in terms of technicals over there, but for the charts, last 5 days specifically, if you're looking at Bajaj Housing Finance, you've seen a fall coming in of around 9% for the stock. On the long-term basis, you know, does it merit continuing to hold the stock, and should the viewer continue to hold it for a long term because they want to hold it for a time period of 3 years?
See, for the long term, it is going to be difficult to comment since we don't have much of a data or just 3 months of data. But if you look at the levels, I think from the stock where it was around 180, it is now corrected to 130. And even over the past 6-7 days, there is no positive reversal. We have still not seen a close above the prior day high, which is a very simple way to see if the trend has changed. So there is definitely pressure from the short to medium term perspective. One can continue to hold. The very important support on the downside is 125, from where the stock has shown a bounce back in the prior occasion. So if 125 holds, there is a possibility we might start seeing some positive traction. But if 125 is taken out, it's best to be out of the stock. Be cautious as of now, and let's see the price action at around 125 if at all it reaches there.
Okay, keeping an eye on those levels over there for Bajaj Housing Finance. Next query is on Paytm. Now, Rohit Kumar is writing to us from Telangana, holding 350 shares of Paytm at a price of 600 rupees per share. Wants to know whether he should continue to hold the stock or maybe look to exit this one. Obviously, now he's making a profit on this one of around 9. Stock is currently trading at 900 rupees, almost reaching the 1,000 mark as Paytm. On the fundamentals, let's start with that first, Astha. Paytm, should the viewer continue to hold this or now book out profits, given that sometimes you see those issues coming in and the stock then suddenly sees a very sharp fall? So what should one strategy be here?
So I think the strategy would be here to hold the counter, or maybe partial profit booking is also recommended, but not fully. Now, the reason being so much of optimism is that even management is also guiding about the positive adjusted EBITDA. So I think that is a major positive for this company. What we have seen in the results gone by also, that there was a MTU decline, that is the monthly transacting unit, but unit decline. But despite that, also what we have seen is there was a growth. So I think this stock is now well poised to show strong growth going ahead, and especially with the positive adjusted EBITDA. So definitely a positivity in the financials performance is always, encourage the strong momentum on the upward side in any stock momentum, and that is the case with the Paytm as well. Recommending here to either partially profit book or may we continue with the whole lot of quantity with the 1145 as a price target.
Okay, thanks for that update there on Paytm. Ashish, on the charts, Paytm, what should we be looking out for? Because, after that one point of time at the beginning of the year, we saw that fall coming in somewhere in Feb. Then it remained in that range of around 300, 400. And then that pickup came and there's no stopping it right now, right? 900 almost reaching the 1,000 mark for Paytm. So on the charts and technicals, you also would advise them to hold, or what is your view?
Absolutely, you are absolutely pinpoint on the front that we got a very sharp fall, we got some consolidation, and it has been steadily rising post that. So the low which was there around in the month of April, May was around 330. We are now touching that 1,000 mark. My recommendation would be to book partial profits here. You are getting a decent enough move on Paytm on the upside steadily, and continue to hold on for the rest of the position, because as the stock is managing to protect its 20 days average and continuing to find support there and bounce back on the upside, the overall tone is still bullish. There is no sign of reversal yet. We have not even seen a break below the support levels. So as of now, hold on for book partial profit, hold on for remaining positions. Use 935 as a stop loss on the downside, and the upside target we can expect around 1100 levels.
Okay, keeping an eye on those levels over there. Let's move on to the next query. It's on Angel One, where Puneet Saxena, who's writing to us from Ghaziabad, holding 30 shares of Angel One, price of 2,600 rupees per share, making a profit on this, wants to know whether to continue to hold or maybe book out their profits. Just looking at the stock right now, in the last 5 days, we've seen some bit of a fall, and specifically today, we're seeing almost a 4% fall coming in. Ashish, first let's start with the technicals on this one. What is Angel One looking like? Because before that, we have seen a run-up coming in. But is it any sign of a consolidation right now? Should one be worried on that front?
Not really, because if you look at Angel One and look at the chart since the start of the year onwards, you will see a very classical rounding bottom kind of a pattern along with an inverted head and shoulder. That's a pattern in technical analysis where we say, and it has given a breakout on the upside. It's a bottoming pattern, given a breakout on the upside. Now it is just retesting that neckline, which means that the trend is still bullish. We are retesting that neckline, and we can now expect it to go back on the upside. The target on the upside as per this pattern comes to around 3750. So continue to hold on to the stock right now. Maintain a stop loss, which is going to be around 3110. As long as that area is protected, I think the stock should reverse up back towards 3750 or higher.
Okay. And, Astha, on the fundamentals, what is Angel One, that one should watch out for? Because just last week, I think all these capital market stocks were buzzing in trade. We've seen a move coming in on them. And there were a lot of triggers also that is there for this capital market stock, capital market side of stocks that we're seeing. So Angel One, would you also say on the fundamentals becomes a good bet to continue to hold?
Yes, I think it is a good bet and one should continue remain invested in the counter. Initial price target which we are giving to this counter is at around 37.70 to 38.30 odd levels. Now talking about this counter, first of all, we have seen the robust volume growth of around 17% in the FNO. In fact, the NSE active clients also we have seen, and the cash market business. So I think all these segments, cash market business, it was around 17%. In FNO, we have seen around 20% volume growth, while in the NSE active client, it was around 15% volume growth. In fact, they have seen the growth in their MTF book also. So first of all, growth across the segments is what is a major focus of this company. Now, second point is about their entry into the new businesses, which are AMC, wealth management, and other financial services. I think now the strategy wise, these all are well poised to show strong growth momentum in the financials, as well as if these will be executed. I mean, these strategies will be executed in a very well manner. So I think all in all, it is a positive from our side. In the longer term, it can see till the levels of 37.70 to 38.30. So one can remain invested in the counter for a longer term perspective.
Okay, that's a view on Angel One, surely keeping an eye out on that stock. But on that note, we're going to sit with a very short break. But don't go anywhere, viewers, because after the break also, we'll be taking all your stock-related queries with our experts. So stay tuned in.
And then go home.
Welcome back to Your Stocks on CNBC TV18. We still have our experts with us, Asta Jain as well as Ashish Gyal, to answer all your stock-related queries. Let's move on to the next query then. This one is on Masgao Dock. We have Sheetal Korean, who's writing to us from Kerala, holding 100 shares of Masgao Dock at a price of 3,800 rupees per share, wants to know the outlook of the stock, if she should continue to hold this or maybe look to sell the stock. As of now also, obviously she's making good amount of profit and we've already seen that run up. Asta, on the fundamentals, Masgao Dock, do you think we still have the run up left? You know, given that this play is something that could continue to see some bit of a growth, the defense side, the shipbuilding side, what is your thought on this one?
I think we will continue to see strong run up in the counter. The reason being is that, first of all, the strong order book of around 39,872 crores. Secondly, it is the only shipyard company in the India who has got Navratna status, and they are building strong, destroyers as well as other submarines also. So I think this company, on the back of a strong order book as well as a zero debt status, is looking strong to us in the longer term, as well as we are seeing now how the government orders have started floating in again. So that company will also be a beneficiary to this, I think, and hence we are positive on this counter, recommending a buy also along with the hold strategy. So we are recommending both buy as well as hold for this counter. Initial price target which we are giving to this counter is around 5,200 to 5,500 in the longer term.
5,200 to 5,500 in the longer term. That's on Masgao Dock on the fundamental side as well. But on the technicals, Ashish, everything seems right for the company, whether fundamentally, right now Asta was highlighting as well. But charts, when you look at it, just last year, suppose it was just 2,100 rupees. Now it's 4,900 and almost that 5,000 mark. What would your suggestion be? Should the viewer maybe book out some bit of a profit, or your strategy is also maybe to add some bit more and you're quite bullish on this one?
If you look at it, the stock indeed went from 2,000. It actually went to the high of around 5,700 levels on the upside. From 5,700, we have already seen a correction back towards that 3,900 mark. So the correction did happen. And from there, we are again seeing a move on the upside. So the overall tone is still bullish. I am going to hold on to the stock. I'll recommend to hold on to the stock because we saw the correction, decent enough correction, which is around 30.2% retracement of the rise, and now again it's breaking out. So continue to hold on. We can expect it to reach back towards the previous peak high, which is 5,700, 5,800 levels. That can be the target where one can look forward to do partial profit booking. And on the downside, one can maintain a stop loss of around 4720 area, which is the gap area, which is a minor gap on the daily chart. So 4720 is the stop loss and 5,780 is the target. Risk reward looks appealing even now.
Okay, the next query is on Bharti Airtel now. We have Shreya who's writing to us from Mumbai. She's holding 1,500 shares of Bharti Airtel at a price of 950 rupees per share. Long-term investor and wants to know whether she should continue to hold or look to sell this one. Asta, what is your view on this one? What should the viewer be doing? She's making profit at it, I believe, right now. So what should the viewer do?
If there is no hurry to book the profit, then definitely it is a good long-term bet. First of all, want to give the initial price target. It is 1,770 at the initial level, but I think in the longer term, and I keeping my fingers crossed while saying this, it can reach to the level of 2,000 also. This is what we are believing. Now, what are the bases of those beliefs? First of all, they have taken certain price hike or the tariff hike, and now this will reflect in their upcoming results also. Which can be reflected in which ratio? ARPUs, first of all. Secondly, so we are expecting strong ARPUs. Secondly, they have a strong customer base of around 563 million. And in fact, they have established 5,000 towers, 15.2 thousand broad-based mobile stations. So I think now the kind of infra this company is setting up, definitely that will going to yield strong results in the future as well. So we are recommending a hold as well as a buy on this counter. Initial price target can be set at around 1,770, but in the longer term, we can see the price level till 2,000 also.
Okay. That was the last query for today. So thank you so much, Asta, as well as Ashish, for joining in with us on the show and always solving all our viewers' stock-related doubts. But thank you so much for tuning in. Now, as we wrap on this edition of Your Stocks on CNBC TV18, here's some good news coming in your way, viewers. Now, India's business news leader is now a click away, and we are introducing the CNBC TV18 new app that is there, and that will get instant access to breaking the news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store as well as the Google Play Store, so you can stay updated with all the news flows.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our silver jubilee year, our 25th year, and we want
Taiwan index that's holding on to gains of 0.6%. On the flip side, we've seen Hang Seng that is a bit subdued in trade.
Support first, it comes in around the 24,400 levels on the downside.
Now the pharma companies, we're Aurobindo Pharma, we're expecting some bit of a green move here.
Absolutely flat, but blinking red and green, 24,765.
Look at the growth momentum in India is clearly slowing.
Nifty is at the day's low right now. It's down around 114 points.
Deposit growth, however, continues to outpace the credit growth for last 3 fortnights in a row.
He's arrived in Chennai and getting the grand welcome that he totally deserves, Vivek.
Bajaj Auto is gearing up for a series of electric vehicle launches.
The GST Council's Fitment Committee has proposed increasing the tax on old and used EVs.
No, mid-cap and small-cap have built onto the gains. The Nifty Bank has spared some of the losses that it saw earlier during the day.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Hello and welcome to Closing Bell. That was the day so far. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. I'll be shortly joined by my co-anchors, that's Prashant as well as Reema. But for the day, in fact, the Nifty has traded in the red. So we are down close to under 100 points. But I don't think it's at any kind of bother as of now. This is par for the course, the fall that we are seeing. The Nifty Bank is more or less flattish. And still, even with the markets down 100 points, you have the breadth of the market that's firmly in favor of the number of stocks that are advancing. So the crisscross lines should come up for you on the screen. A few stocks that are moving very, very well, particularly in the last few minutes. You have HCC that spiked up to the high point of the day. So let's get that one up for you. Swiggy is another one that's moving well. In fact, let's pull up just Swiggy as well as Zomato. Swiggy again is outperforming what Zomato is doing in today's trading session. But it seems like in a longer term, the street is more comfortable with Zomato than Swiggy. Though Swiggy trades at a big discount. So both of them moving higher. And also Samvardhana Motherson, I recall a couple of sessions ago, we had made this point that there was some delivery-based buying being seen out there. There was, a good amount of long build-up as well. So that stock, midway through the trading session, it's seen a good recovery. And Paytm, who would have thought? Now, 1,000 rupees stock is what Paytm is. So a good move is what we're seeing on that front. From the frontliners, just want to pull up a couple of names. Eicher Motors, that's kick-started its engine. I recall just around an hour or so ago, the stock was down 0.5%. Now that's seen a good recovery in the last few minutes. Hey guys, good afternoon. Monday afternoon, not too bad.
I mean, not too bad. And I think the indices, the frontline indices don't tell the whole picture, as you said, Nigel, because broader markets are doing just fine. Reema, hi, afternoon.
Hi, afternoon.
It's looking actually, the broader market breadth is better. Mid-cap index is up 0.5%. The small-cap index, I think, is even better, a little bit more. So, yeah, I mean, enough single stock action out there, which I think are keeping everyone quite busy. So, I think in terms of sectors, if you want to take a look at what is doing well and what is doing badly, you basically have metals, IT and energy, which are seeing a little bit of profit booking. And I think with IT specifically, since it's first off the block with results, etc., some chatter in the market that is again going to be a pretty sort of, the indications are not good, at least from 2-3 sort of companies. But this is all chatter. We'll have to wait for the actual numbers, which of course was only going to be by the 6th or 7th of January. Real estate, I mean, that's this index which is doing well. Actually, that's the only index which is meaningfully higher with a 3% pop. And we'll get to that in terms of specific stocks, coverage, upgrades, etc. on names like Oberoi. But that's just in a bit from now. Reema.
Well, on Swiggy, I think there is an Axis initiating coverage, and they've put the target price at 600. So, every few weeks or every few days, you've got a new brokerage putting a higher target price on Swiggy. and now it's 600 is what I read. So it's 800 and 8.5% higher on Swiggy, 577. But IT has taken a back foot today. The Nifty IT index is down close to about 1%. There are two sectoral indices which are weak in trade. One is metals and the other one is IT. Metal index is down close to about 1% and IT is nearly down 1%. And TCS, that's the one which is taking the hardest knock. That's down 1.5%. Infosys is down nearly 1%. And Bharti Airtel retraces some of Friday's 4.5% gain. Bharti Airtel is under pressure. But let's find out how you should position yourself in the last hour of trade. Mitesh is now with us for a few closing strategies. Mitesh.
So, early in the day, I was talking about the fact that the Nifty will face a lot of supply around 24,800. And today also, post the opening, 24,780 being the high, we've kind of come off. I still believe that, there will be more time required for the index to gain strength and get past 24,800. So I believe that we are back to this range of 24,500, 800 zone. And buying should be done closer to about 24,550, 540 levels. So that's the way we are approaching on the index. So haven't got a trade till yet. But on stock specific basis, I think a lot of stocks are showing good momentum, good promise, and good chart patterns on the upside. So trading with the long bias, because we believe that eventually the index will also break on the upside. So that's the way we are positioned on the market. On the stock side, Hoodco is a buy with a stop below levels of 252 for targets of roughly around 270. The stock has been showing uptrend and now is showing signs of continuation as it managed to get past the previous high. So look at a target of 270 to about 275 over the course of next few days. And the other stock which I like is JK Cement, which I would recommend buying with a stop at 4,700 for targets of 4,900.
Okay, Hoodco and JK Cements are two names from Mitesh, which he's recommending at this point in time. Well, let's talk about the big sector, right? I mean, banking, and this is fortnightly data which is come through, and this is data, I think, for the month of November as well. Abhishek is here. I think the numbers are a bit sobering. Abhishek, good afternoon.
Good afternoon, Prashant. So to begin with, whenever or any fiscal, the November end data does reflect the FI data as well, or the fiscal year end data as well. I've checked that for last 3 years in a row, that's been reflecting, and business momentum is softening for the banking sector. Deposit growth is at 10.75% year on year. This is one of the lowest growth that you are seeing in last 9 fortnights. Advances growth is at 10.6% year on year, which is one of the lowest that you are seeing in last 68 fortnights. Deposit growth continues to outpace loan growth for 3 fortnights in a row. The credit deposit ratio remains elevated at 79.5% for the system as a whole, and this is one of the highest that you are seeing in last 5 fortnights. The M3 growth, or the money supply 3 growth, that on a year-on-year basis is at 11 fortnight low of just 10% growth on a year-on-year basis. So deposit to M3 ratio is at 83.25% versus 83.1% that it had come out in the last fortnight data. Now, X of SDFC Limited numbers, the deposit growth is at 11.1% YOY and about 0.76% on a fortnight basis. So it is at a 9 fortnight low with respect to this growth rate. Advances growth is at 11.8% year on year and about 0.9% on a fortnight basis. This is one of the lowest growth rate that you are seeing in last 37 fortnights or even more. The calculation shows that credit deposit ratio might have inched up a bit to 77.7% from 77.6% that it was there in the previous fortnight data. Back to you. Okay, all right, Abhishek, thanks a lot for that. Well, let's welcome Deepan Mehta, Director, Elixir Equities, who joins us on the show. Deepan, what are you making of a bit of a slowdown in credit growth, and what do you like from the banking space?
Yeah, Nigel, good afternoon, and thank you for having me on your show. I think that gradually, the problems for the banking industry are slowly but steadily mounting. And first of all, I've always said that now it's a bit of a red ocean with so many banks lending in the market and also jostling for CASA. So that's getting difficult for the entire banking sector. And then there's a slowdown in credit offtake, and some of the very highly profitable segments like credit card and microfinance, there the NPAs are really causing a lot of trouble, and even RBI wants the sector to go a bit slow. So I would say that banks would like to be a bit neutral to negative on it. And within the banking portfolio, I think the best risk-return profile coming from the PSU banks, where the growth rates and a lot of the other qualitative and quantitative parameters are fast narrowing the gap with the large private sector banks, where valuations are still at a considerable discount. So as a sector as a whole, we want to be slightly underweight to neutral weight, definitely not overweight. And within the sector, because it's a large component, better to be with the PSU banks.
I stand corrected. By the way, Swiggy's target price set by Axis Capital is 640, not 600. They're saying it's second place, but still very much in the race. So they're initiating coverage with a buy. 640 is the target price. They're saying the food delivery Q-commerce business remains underpenetrated. There's a long runway for growth. The company has ambitious store expansion targets in Q-commerce. That should help its gross order value. Cost control is moving, and food delivery is a stable duopoly. Dipan, Swiggy, buy these levels?
Well, we have already got Zomato in our portfolio, so no point having both companies. But yes, if you missed out on Zomato, then definitely you could look at Swiggy. I think the discount between the two is gradually narrowing. But look, quick commerce and food delivery are one of the highest growth sectors within the economy. And where so many sectors are kind of slowing down, you will see a lot of money being funneled into these businesses. There is, of course, the big, the big elephant in the room is Amazon, and how their offering, that is Stays, how that is going to shape up and what competitive intensity it will create. That needs to be watched, but there's no denying the fact that these companies are changing habits for which markets will pay a huge premium and create a lot of value for these companies and their shareholders.
All right, Dipan, I wanted to know if you're tracking Page Industries. In October 2022, the stock went, I think, to around 54,000 rupees. And from there, it saw a very, very sharp correction. But now it appears it's gradually pulling back. The stock's at a fresh 52-week high, though it's still around 7-8% away from the highs that we saw 2 years ago. Any view on this name?
Yeah, see, Nigel, I think that again, a lot of competition emerged within the sector, and at the same time, there was a mild slowdown also. So therefore, we saw this kind of volatility in their earnings, and overall growth rates also had slowed down, but we are seeing a mild pickup over there. I would say that it's a company definitely worth watching. We're very positive on specialty retail plays like, say, Page Industries, or Metro Shoes, or Campus Activewear, Ethos. It's a great space to be in because they have a lot of strength and they have scope to expand the distribution network and scale up the business. So I would just say maybe a quarter or two, if the earnings are coming in a decent way and growth rates are back to that kind of mid-teens level, then it may justify these valuations and you can look at the stock in new light at that point of time. So I would say right now put Page Industries on your watch list and just wait and watch and see how the next couple of quarters play out for this company.
Okay, got it. Dipan, the next one is Wockhardt. We're going to just talk about, right? I mean, what a mover it has been in 2024. Let's get the latest out. What's the reason for today's move? Vinny is here with that detail. Vinny, good afternoon.
Good afternoon. So yes, Wockhardt has seen a very good move in the last couple of years, and especially in the last year. And this is coming in only after they've spoken about the cancer drug that they've been getting into. Now, obviously, they are in those phase studies going on. They are nearing the completion of this phase study drug. And the positive news today is that they've seen some successful use of this drug, Zynic, which they're talking about, which is the cancer drug. And this is in the US. Now, till now, they have worked on, in the phase trial, 45 patients is what they have tried this on. And they benefited under this compassionate use of the drug, and as of now, positive outflow coming in from this one. So that means we could expect a positive news coming in the phase 3 trial, which is nearing its completion because it's expected in 2025 February. This is expected to get completed. So that is why Wockhardt is in focus today and buzzing on the back of the news flow.
All riding on that one drug for Wockhardt, isn't it? Dipan, any thoughts? Wockhardt?
No, it's an option whose value keeps on increasing every time there is some positive news flow on the new chemical entity. But look, you can't bet big on Wockhardt. Its business model is clearly dependent, or rather value is clearly dependent upon how successful the new chemical entity is. We've been disappointed with the traditional pharma business, be it the domestic or the exports. Their track record with meeting FDA regulation has not been the best. So, I mean, and its stock has run up also considerably. And it's anybody's guess whether they will be able to launch the molecule and, how successful it does become. And from that point of view, you can make a small investment in Wockhardt and hold for the long term and hope something positive comes out on the new chemical entity. But other than that, I think there are better plays within the pharma space, especially a company like Sun Pharma, which have a proven track record for specialty products, and that journey is going on very well for them. And then I think even Lupin has come around pretty well, and some of the other Dr. Reddy's Cipla also, I think, are good defensive plays in markets like this, in economies which are slowing down as well.
Okay, all right. Deepan, I wanted your view on Stovecraft. Where we have the management of TTK Prestige, Mr. Jagannathan, he joins us quite often, and he's been saying that, there are some pressure signs, but he's optimistic about growth. Now, you have Stovecraft that comes in from the similar space, and they have been ranked underperformers if you look at it from the time of the IPO. They promised a lot, and then they disappointed, so the stock had half from the top. But as we speak, the stock has moved to the high point of the day, and it'll be on a lower base. So it appears they have some headroom in terms of growth, and the management has sound confident that operating leverage will come through once once we see growth. Your view on the stock at around 850 rupees?
Nigel, the same thing, what we saw in Page Industries and some of the other urban consumption stories, that right now that entire segment is under stress. We've seen Stovecraft also, they had very good numbers maybe about a year ago or so, good quarterly growth rates. But then I think growth started to flatten out and stagnate. But it's an underpenetrated sector, and with more and more nucleus families, more urbanization, the long-term prospects are phenomenal for companies like Stovecraft, even TTK Prestige, which manufacture household appliances and kitchen equipment. So keep them on the watch. The best time to buy would be once you're sure that the company has gone back onto its growth rate. And that will be evident only when the quarterly earnings growth start to move to that mid-teens type of level. Once it reaches over there, that's a good time to perhaps enter companies like Stovecraft. But for the time being, I think unless we're not sure of the revival, I would not make any fresh investment in Stovecraft.
Okay, could not put more money into Stovecraft. Just two other names, and these are all kind of not special situations exactly. Deepan, one is Religare, right? I think finally that Burman takeover looks like it's moving on. There's an open offer pending, and stocks. So it's got that support in that sense. Stocks now finally crossed 300 rupees. The other is ITT Cementation. Here the Adani offer is there, and that support I think is about 517, 520 or so is where the open offer will kick in. Any thoughts at all if you own these or track these, Deepan?
Prashant, Religare, I don't know anything about what is happening over there, and that company just fell off the radar because of all its past problems and the new owners. Let's see how it plays out. But there are a lot of other better players in the fintech and financial services play. ITT Cementation, a company in which we and our clients are invested in, and in fact quite pleased that Adani Group is taking over the company. They will have the benefit a lot of captive business as well, and especially Adani's track record in getting business from the governments is phenomenal. So from that point of view, ITT Cementation also will benefit. There's another company, PSP Projects also, where Adani is taking a strategic stake. That's also a company to watch because infrastructure construction is something which, if it's driven by aggressive management like Adani, then certainly it can scale up very well. And ITT Cementation has got a fantastic track record. They are pre-qualified or able to bid for many interesting and large projects. And I think that the prospects for ITT are quite decent. Valuation is reasonable. But as I said, we have an investment in it, so our views could be a bit prejudiced.
Thank you very much for joining in, Deepan. As we slip into a break, it's time for Growth Code, an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. This week, CNBC-TV18's Nigel sat down with Vishal Mehta, founder of Market Scanner, to understand the importance of a well-defined strategy for our edge.
Why is it crucial for traders to have a well-defined strategy? Also, what are the risks one should consider before entering into the market?
A lot of people think that to get into a trading, you just need a demat account and money in your account, right? When it comes to business or even if professions, right? If you want to become a doctor, you spend about 15 years to study and master it. Engineer, the most important thing in like any business is you have to have a strategy and you have to have a capital. We as a retail trader are playing against some of the largest corporates who are with the best of the minds, best of the execution capabilities. So what is at our end is the strategy, because without a strategy you are in the jungle and ready to be killed.
Best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m. Invest.
Welcome back. We've got the market, which is down about 100 points on the index, but broader markets is where all the action really has been, and that continues to do very, very well. You know, single stocks, and we highlighted so many over the last 30 minutes or so, buzzing around, and market breadth consequently is positive as well. Not by a huge margin, but there is more stuff which is up rather than down. Some stocks at the bottom of the screen, which of course we are highlighting. Paytm back in 4 digits at a 3-year high, you know, one-way kind of move from 350 levels. and remained uninterrupted even when the market fell from the highs of September. I mean, the Paytm stock barely budged and is done very, very well for those who bought. Aditya Sood is with us, fund manager at Incred Asset Management. Aditya, good to have you with us here. Good afternoon. Thank you very much for your time. It is, I'm assuming, your kind of market because you're a very bottom-up, purely value investor. And the market is hungry for ideas. So as we wrap up this year, 24, Aditya, what are 2 or 3 ideas you want to lay out, and we can sort of dive deeper into those as we head into 25?
Sure, Prashant. Thanks for having me on the show. Essentially, I think so rather than, ideas, this market, we believe, is in the middle of a reset. So if you step back and think about it, possibly we have had 12% CAGR of, earnings growth for last 10 years. Obviously, COVID being an aberration, and, post-COVID, obviously, we saw a decline in earnings growth of 25% in terms of, the EPS cut. And subsequent to that, we have seen a 25% CAGR in earnings getting delivered over last 4 odd years. Now, in that environment, obviously, a lot of stocks did well. As you are aware that, we are getting into a phase wherein, earnings have disappointed. So our focus in this market is that, if you can identify companies which are at least growing, 2x of the index earnings growth, which is more like, 22% CAGR, it should be a very, very constructive point because, market is going to be earnings growth starved for the near term, at least, next 6 to 9 months. Obviously, this kind of environment creates opportunity for bottom-up stock picking because what we have also seen is that there are certain sectors which were very, very, which had gone through, euphoric valuations, possibly, defense sector being one of them. And now we have seen normalization of these opportunities because we have seen, 30, 40, 50% correction in many names. So in a way, it is very similar. This decline is very similar to what we experienced from 2021 to 23 in the markets. Purely from a bottom-up basis, the way we are looking at this opportunity is that we are trying to identify stocks within sectors that we like, but these stocks should be trading at a, sort of a reasonable valuation. And that is fair. For example, hospital as a space we have always liked, we own a couple of hospital names. But within that, I think so what we are trying to see is that, is there a price to value gap in a very fast growing sector, obviously wherein, margins have improved over a period of time. Because, we have seen, re-rating of margins, for example, Max, we have seen, 88% odd margins moving to, 30% plus EBITDA margins over a period of time. So what we are trying to do is that, we are trying to resort to this framework of value hunting within that sector. But I must confess that there are opportunities wherein if you are investing into very high capability companies, these companies are expanding their total addressable market and earnings are also, growing exponentially. Obviously, some of these areas are, telecom equipment manufacturing in India or the manufacturing ecosystem, be it, EMS companies. So we are very, very focused towards the earning growth in this environment.
All right. Hi, Aditya. Good afternoon and good to see you. I think those 2 calls, Indraprastha Medical Corporation and even Healthcare Global, both of them worked quite well for you. But I think you're indicating that there is further upside.
Even Tejas Networks. Aditya has been
that.
very bullish on Tejas Networks. So when he talks about the telecom equipment, I think it's Tejas.
Very good. Aditya, we're almost at the end of 2024. Some of these names have done well. We were just, talking about Stovecraft with Deepan earlier, and that's another one that you'll have in your portfolio. Give us top 2 themes for 2025 that you're looking at, stocks that can do well.
So theme number 1 is that, when we see a headline or when we see a headline in a sector, and Stovecraft being a perfect example, our focus typically is to focus on companies whether they can gain market share in a declining market. As long as companies can demonstrate that, and this is what we precisely saw in the case of Stovecraft as a case in point, 385 rupees was the IPO price. 4 years back, the stock rallied to 1100. Again, the stock declined to, from 1100 to 400, which was a very, very sharp decline. But what we saw was that, they were consistently gaining market share. Now, if you look at, Stovecraft as a play, our belief is that, export is going to emerge as a very, very big opportunity for them. They already have, for example, they already have both Walmart and Asda, which is a, Walmart subsidiary in US as customers. I think so they potentially can, half of their revenue, what is today, could be, coming from, in terms of incremental growth, can come from exports. They have heavily invested into gross block. So we like companies wherein, they are past the capex phase, and then, you would see a ROC improvement going forward. As far as Indraprastha Medical is concerned, I think so, when a growth stock becomes a value stock, essentially over a period of time, what we have seen is that, virtually growth was missing for this company. 755 bed capacity they had for the longest period of time. I think so now they are getting into this capex zone. But the key that needs to be noted there is that it is one of the highest ROC hospital possibly in the world. 35% return on capital employed with 18% on margins. We believe that the margins will trend towards, more like 20%. And then over a 5-year period, they can easily expand to, 755 beds can go to 2000 beds. Now, what it essentially means is that, this 180 crore profitability that they are reporting could be easily a 400-500 crore number over 4-5-year period. Valuations are reasonable. The stock is trading at 23 times earnings. If you look at the PE multiple of the sector, hospital sector, as you are aware that, most of the hospitals are trading at 40 to 50 times trailing multiple. So we believe that, this is a very constructive value play. On Tejas Networks, it is a story of capability, and that is what I have always believed. I have not stumbled upon a small cap in my career, wherein you have got 450 patents to its name. So it is a very highly intellectual property guarded company. That leads me to also believe is that, for example, 6 months back, nobody would have thought that Tejas would have any role to play in Railway Kavach. So first, if you logically think about this, is that, this was a fiber to home wireline company. Obviously, BharatNet is something that, is very widely spoken about. But wireless is something that Tejas had never implemented in their, they had done $10 million project for a Malaysian telecom in the past, and now they've successfully implemented the BSNL 4G, 5G implementation, and that is the reason why we are seeing, so much of subscriber addition. Nobody could have forecasted that, they would have a role to play in BharatNet. I think so. The total addressable market in the case of Tejas is expanding at a very, very rapid pace. It takes a lot of time for, most of these companies to build capabilities. Today, possibly, Tejas is a 28-year-old company. So first 25 years, they were busy, in terms of having, closely guarded intellectual property. So I think so most of these names have a long way to go from here on.
Aditi, you spoke about healthcare, hospitals in particular. There have been many recent IPOs in the allied healthcare space. So there was IKS, Suraksha, a diagnostic company focused particularly in West Bengal. Then you had Sai Life Sciences, and then many others like a MobiKwik, Vishal Megamart, not in healthcare, but recent IPOs. Anything which you all are interested in, where you see value?
So one of our frameworks says that, possibly the best stock that you own is already in the portfolio. So if I have to compare, Sai Life Sciences to Newland in terms of, valuations or in terms of capability, I think so, we already own Newland, I think so that is a stock wherein we are fairly constructive on. Versus a Suraksha, we own Thyrocare in the portfolio. We believe that, Thyrocare over the next 2-3 years could be the fastest growing, sort of play on the diagnostic side. The problem with IPOs generally is that, is that you don't know the character of management when the companies are coming for an IPO. Very limited history of, management teams, how they react to, public listing is unknown. Second thing is that, most of the IPOs are bought based on, obviously projection. And our view is that, IPOs only happen when business is doing well and the market is doing well, which is typically a boom phase in the market. So we would like to, do wait and watch. We study these companies well, but we are not really, too much inclined towards, IPO investing.
Aditya, what is Tejas? So if you had to put fresh money, if you did not own the position in Tejas you do now, and you to buy it now, would you do it again at this price?
So two rules that we use, Prashant, religiously is that, how is the risk to reward incrementally? Because PMS as a product, as you're aware that, we have to think about, incremental deployment. So that is point number one. How is the risk to reward incrementally? Second thing is that, whether we can incrementally make a 20-25% IRR on, the money which is freshly deployed. I think so clearly, Tejas qualifies. When Tata's took over Tejas, the open offer was made at 280 rupees. One of the things that we have to be mindful about is that when a corporate change event happens in a life cycle of a company, anybody who's stepping in as a new promoter is not buying the company to make a 3-5x. Possibly it is making, it is investing to, get into the company and make a 30-50x over a period of time. Now, time horizons could be different, but my view is that, Tejas is going to be the best manufacturing play that comes out of India for the next decade.
Wow, that's good to hear. Aditya, you also briefly mentioned EMS and stocks are jumping. The Keynes is higher. There is that OSAT excitement around it. CG, of course, is not doing very much, but Dixon, I think, of course, that tie-up, another tie-up there. PG Electroplast is sharply up. What do you own in that space? And again, I was looking at numbers. Maybe numbers are going to be rapidly revised, but Keynes is now, I looked at, I think, Spark Avendus estimates, about 110 times earnings, FY26 earnings. Just any thoughts here, Aditya?
So we are, very, very conscious about, the valuation that we, buy into the companies, So there is a company known as Centum Electronics that is there, a part of the portfolio. So if you look at, if you do the first point in EMS is that, what is the real capability of a EMS play? And for that, essentially, you have to look at the certifications that, a lot of these EMS players have over a period of time. Now, you will be surprised that, very few companies would have a NADCAP approval, for example, as a case in point. And Centum happens to be one of them. The second thing is that, which is the sectors wherein, these companies have an exposure. Why we saw a very large rally possibly over the last 1 month in Centum is essentially because, they've got exposure towards defense as a play. So we like companies wherein, aerospace and defense could be a real EMS play over a period of time, but because, we are focusing more towards, IP protection and scalability over a period of time. But again, one has to read between, there are between circles, and one has to focus on, capability and when that product life cycle coincides with, revenue generation. Another aspect of EMS, evaluating EMS plays is obviously, the inventory cycle, because a lot of these companies, and for example, anybody who's working in aerospace and defense would have a MOQ, and that leads to a bloated inventory cycle. But once you see these products getting commercialized, obviously the margins are very, very high. And as a result, it has a very significant impact on return on capital employed over a period of time.
What approval was that, Aditya, you mentioned? That most companies... What is that?
So that is a approval that you need to have if you have to, for example, supply to a Boeing or a Airbus.
Okay, which Centum has and many others don't. Got it. And Centum, by the way, I think about 14-15 months the stock did not do anything, and December has been very eventful. I think it's up 35-40% so far this month. So you got in recently, or you've been holding it for a while?
So we have been holding it for like 6 to 9 months. So one of the frameworks that we have is that, a sector which is very, very hot and valuations are very, very elevated, we'll try to see a differentiated play, but valuation is something that we won't typically end up, compromising on.
All right. Great chat, Aditya. Thank you very much for explaining all of that and your thought process, your ideas. And, if you don't speak again, have a good end of the year, if you're taking a break, appreciate it, and we'll speak again soon. I think 100 points lower on the Nifty still, 24,650. That's not changed, although broader markets moving around quite a bit. Now, sources tell CNBC-TV18 that the GST Council is set to offer relief to auto companies on their SUV portfolio. It is also likely to propose rate cuts on gene therapy, fly ash bricks, and fortified rice. Timsy is here with details. Timsy.
That's right, there's a lot on the plate of GST Council when it meets on 21st of December in Jaisalmer. Top will be a clarity that is likely to give relief to auto companies. Here the relief is that 22% cess which was levied on utility vehicles having a specification of 1500 cc, 400 mm of length and 170 mm of ground clearance. Over there, the clarity had emerged in 50th Council meeting that 22% cess to be levied. And this, now the council is going to re-clarify that this levy will be only on or after 26th of July 2023, and any claims that have been raised for the past, if approved, then this clarity will put them to rest, because it is learned that many state and central GST authorities have issued claims notices to auto companies for past dues, and once cleared, this will put to rest all those notices and claims. Apart from that, the council-nominated fitment committee has made certain proposals, which includes reducing rate on fortified rice kernels from 18% to 5%, to reduce GST on gene therapy from 12% to nil to give affordable medical treatment. Also, the council is going to discuss on the GOM on revenue analysis, where it says that it is likely to seek a closure of this GOM, which has been in existence since 2019. The council-nominated GOM on compensation cess is likely to submit a status report seeking a 3-month extension. Apart from this, other items include fast-tracking the appellate tribunals by giving clarity of rules and procedures, clarity for online services sector, registration categories could be proposed in the upcoming council in terms of a concept note, where they could say that allowing ITC based on risk profile should be considered. A concept note will be prepared and shared. Also, mandatory signature on e-invoice is likely to be proposed. Let's see what all gets approved. Back to you.
Thank you very much, Timsy, for that. We'll get into a break. We'll come back with a few technical calls. PTSD calls coming through.
Welcome back. Well, from the broader markets, a few stocks have really taken off. Just take a look at Swiggy now. Now it's up close to around 11%. Blockbuster move is what we're seeing on that one. So good up move for Enviro Infra as well. If I'm not mistaken, from the time it's listed, the stock has doubled from the IPO price. There could be an element of free float as well out here, but that stock clearly is moving very, very well currently at the high point of the day. Let's get in Mitesh back with us. Mitesh, what are your trades you have for us at around 3:15?
So, Nigel, after a long time, an FMCG stock, Marico, I think, is closing near the day's high. So, keep a stop at 640, look for a target of 655 here. Showing signs of reversal after, going through a severe correction. So, the good chance that this stock will work well. The other one is from BTST on MFSL with a stop at about 1142 and a target of around 1165.
Okay, those were some BTST calls. Let's get you a CNBC TV18 exclusive now. Parikshit is joining in now with details on Bajaj Auto's EV game plan. Parikshit?
Well, Bajaj Auto is targeting selling 500,000 electric vehicles in FY26 and more than that as well. Rajiv Bajaj, in fact, told CNBC TV18 exclusively that the company is likely to exit FY25 with a capacity and sales run rate of 40,000 cumulative electric vehicles per month. The company has new electric three-wheeler launches, including an e-rickshaw on the anvil in the coming months, and these will significantly bolster sales volume. We will, in fact, see a lot of action starting this December and in the next quarter as well. Sources tell CNBC TV18 that the e-rickshaw will be launched in Q1 of FY26. In fact, Bajaj Auto is likely to launch a new brand for electric three-wheelers. All new electric three-wheelers will have the new brand identity. Sources also add that the company will launch 5 new electric Chetak scooters and 5 electric three-wheeler passenger and cargo vehicles in the coming months. A new Chetak scooter is being launched on the 20th of December this year, which sources say will have a bigger battery, higher range, more features and better performance than the current Chetak lineup in the market. The production capacity of Bajaj Auto is being ramped up to meet electric vehicle sales target of over 5 lakh EVs in FY26. Bajaj Auto has sold a total of over 1.7 lakh electric vehicles across 2- and 3-wheeler segments. The company has emerged as the top electric 2-wheeler maker in December, displacing Ola Electric.
Thank you very much for that. Moving on to Oberoi Realty, because that's in focus. There was a positive brokerage note from Avendus Spark. Sonal is here with more. Sonal.
Well, there's a very bullish note coming in from Avendus Spark on Oberoi Realty, and that's why that pop on the stock today. They have upgraded the stock to a buy from a sell, and there's a massive increase in the target price as well to 2,700 from 1,600 earlier. They say the stock is offering a blend of safety and growth as well at current levels, and this is supported by robust cash flows and balance sheet strength as well, which they are seeing in the real estate player. There has been underperformance over the last 3 years. That is because there were no big new launches that the company had, and also because the pre-sales they were quite steady and not seeing a lot of growth for the company overall. But now they are expected to touch levels of 10,000 crore rupees by FY27, which is currently at around 4,000 crore rupees, so more than double in next 3 financial years itself. FY25 especially is an inflection year for the company, driven by the start of its new launch cycle and multiple projects lined up as well. There's some in Thane, and they have spoken about new project launches across different geographies as well. In fact, in the annuity segment as well, there are 2 important projects which will commence operations. That will start flowing to the PNL as well, and that is something that Avendus Spark is very bullish on. They expect Oberoi now to outperform the top-tier listed peers with 3 times growth in launches and pre-sales, and that is what is making them very bullish on the stock.
Okay, all right. Sonal, thank you very much for that. Well, Anand Tandon is now with us to take some questions as far as markets go, which are still sulking, at least at an index level. But, I mean, as we've repeatedly said, the action is all as far as individual stocks and sectors are concerned. Swiggy is the top volume-led gainer now, by the way, 8%. I think from the IPO price, from the listing price, actually, it opened at $420. It's now moved up to about 600 rupees or so. That day, it fell to about 391. So that's a very, very nice catch-up. And in the same period from since Swiggy has come to the market, Zomato. Okay, I think so. Swiggy's up 13. Beg your pardon. I think I have the rate wrong here. At least on my screen, it's 606, 607. So that's a 14% move. My God, and is by far the biggest volume-led gainer that we have on our hands since listings. Zomato, of course, has been pretty much there while Swiggy is doing all the catch-up. Anand, I think we've spoken about quick commerce, etc. earlier, but this is, you can call it relative valuation catch-up or whatever. Big gains, though.
Oh, absolutely. I think, the market is actually viewing it as perhaps, taking away a large share from the regular retail and probably therefore having a very large market that they can extend to. And given the fact that the platform companies have been able to raise platform fees and various other charges, they are beginning to show signs that they will be able to make it profitable. I mean, there may be issues in terms of valuations, but right now I don't think the market's looking at that at all. So it's simply a question of can you sustain and therefore can you capture more and more of the market. And both these companies, in particular Zomato, but also now Swiggy and perhaps some of the others will also be coming in. I think the only warning sign right now is the fact that there's going to be a lot of new players who will soon get listed or who are already gearing up for quick commerce, and therefore competition may increase. But I don't think that the market is worried about that just yet.
Hi, afternoon. There's a brand refresh for Max Financial, and that stock is up close to about 2%. Is it material? How would you view this development?
Well, I mean, theoretically, there is not much that will be gained other than the fact that, as you said, there will be a new brand that may help. But, the bank was already pushing it. They had already taken a stake in it to the extent that the consumer may actually now feel that it is a bank and therefore, or a bank subsidiary, therefore they may, actually go out and be a little more positive towards it. But by and large, the sales numbers for Max have been very good. The agency has done an excellent job, network that they have. So I don't think that, there will be a major difference in terms of the client acquisition pace or the volumes that they can achieve. But overall, it does help to clarify some of the, different brands under which Axis is operating and unifies that to that extent. Perhaps to some extent, Axis's own sales force may be a little more motivated to sell it now.
That's a different perspective on the entire issue, right? I mean, actually, it's true because, when you speak to, one of the large banks which doesn't sell their own insurance subsidiaries products, I mean, it's actually a flex for them. They say, well, actually, our clients don't see us as conflicted. So yeah, I mean, that's an interesting point. But Anand, anything else in terms of single stocks, ideas popping up on your radar?
Well, I mean, we are into travel season, holiday season. So many of the travel companies are doing well, especially the newly listed platforms. Some of them like Ixigo or even TBO Tech, etc., have done reasonably well. And I would argue that perhaps more wholesale than retail. I personally prefer a TBO to the other one. But those kind of companies have perhaps, again, some way to go because, you have a lot of aggregation that you can do. It's a very fragmented market. So from that perspective, again, leave valuation aside, I think the market size can be quite large if these companies are able to expand. More importantly, some of them are now getting into slightly more higher margins than just booking tickets. And that itself is also somewhat interesting. And many other things related to travel, I think, have been doing well for a while, but are likely to continue at least for the next few months. And, other than that, there are selective stocks that you can always look at. Some of the super specialty chemicals have not been doing much, have suddenly woken up. But those are more, there's no particular theme to it. It's more a question of where the capex has been done, and perhaps their companies are now coming in production, etc.
Okay, all right. Anand, request you to stay with us. Before we slip into that short break, just want to focus on a few stocks that have bucked the trend. PG, Electroplus, the stock is moving on very, very large volumes. So yes, Dixon is up close to around, I think, 5% odd. PG, Electroplus now is up close to around 10%. So big move out there. You have AGI Greenpack. That's another stock that's really spiked up. And a stock we were discussing earlier with our guest was Stovecraft. Now the stock is up close to around 8%. So Aditya Sood had a word on it, and even Dipan, he had told us his view on the stock, currently spiking up to the high point of the day. Time to slip onto a short break. On the other side, we'll continue our market chat with Anand.
and then go home.
पढ़ें।
Welcome back. Well, you have a couple of these stocks that are lower in trade. You have Titan and Hindalco. Both of them are a little bit lower in today's trading session. And the tech pack itself has seen some money coming off the table. Anand Tandon is with us though. Anand, you know, one of those sectors that's had a very, very miserable 2024 has been the cement space. Pricing never picked up all through the year. And demand as well was hit. But one will say that there was various one-offs. State elections, you had the general elections, you had the monsoon season as well. But some part of the street believes that spreads are improving, so 2025 will be better. What's your take?
Well, I don't think that there is any structural change that has happened as far as cement is concerned. The basic problem remains overcapacity. All the companies are expanding far faster than the incremental demand. And therefore, there is surplus in each region. And while there is the only thing that will be the saving grace for cement is the fact that there is greater consolidation within each of the cement regions. And as a consequence, the cartel has become strong enough to be able to maintain some of the prices. But you are not able to raise the prices enough to be able to get an economic return on the capital invested. I think it will take a few more years before the number of players comes down even further. And you then have a situation where each sector has only about 3 players. that's when you may be able to get some upside, especially if limestone capacity becomes exhausted. But in the near term, I don't see that happening. Most companies are operating at 70% or thereabouts. You have to be way above that to be able to make economic returns. So if you are looking at cement, you have only two plays. Either look for something that is going to be bought out, or look for something which is trading at 80% capacity utilization or higher.
Any thoughts on, have you tracked Wockhardt? All bets are on that one cancer drug, right? Phase 3 trials are on. Typically success rate, because drugs get whittled down and thinned out, phase 1, phase 2, and those that reach phase 3, hopes rise quite a bit. And could be a big blockbuster for them if, of course, it comes through and then they've got to apply it to the FDA for approval, etc. That's a 25 story. Any thoughts here, Anand? Wockhardt?
So like you said, the problem with having a few drugs in the pipeline is that you don't have enough, that if one of them goes sour, and they do, even in the last stages. We've seen, earlier you had Reddy's and Sun also doing their own research, and finally they had to either move out or license it out. Glenmark had to license it out. So most of these companies find that after a point, they are not able to grow it substantially. That is true even in the US. If you see most of the drug innovators, they are actually, the smaller ones especially, they end up giving out the licensing to somebody else and trying to just get the license fee right now rather than trying to take it to market. A couple of candidates, I don't think you can really take a bet. It will be one-off. It could be that, yes, it becomes successful, in which case there can be some significant upside. But the higher probability event is that, even if it does become successful, it is a marginal success, and it doesn't really move the needle beyond a point. So just purely taking a bet on that, I would be a little hesitant. You have to look at the overall portfolio. I haven't followed Wockhardt closely enough to be able to comment on where the valuations are for now. So I would still, if you're looking at pharma, just go with the regular theme, which is to find companies which are able to supply to the innovators in the US and continue to grow the domestic market.
Okay, all right. Anand, stay with us. Just coming back to you, the markets closed. And not very different from where we've been, at least on the Nifty for the last couple of hours, which is the Nifty down about 100 points, 120, 24,647. Nifty Bank ending down about 0.18, 53,489. But the mid and the small cap indices did well. Somehow feels like a much better session. But 1,300 up and almost 1,200 down. So it's not as if the advanced decline ratio was hugely in favor of what was higher. But you had lots of well-owned mid-caps and small caps which participated on the upside. Some of the high flyers and high-profile names like Swiggy also kind of adding to the shine in the broader market. And I think that's the reason why it just feels like a good session. Swiggy finally ending about 12% higher.
Well, you had Hutco. That was up close to about 5.5%. Nykaa was a big mover. Z Entertainment gained about 2.5% in the mid-cap pack. On the way down, Nalco under pressure, NTPC Vedanta weak in trade. In fact, the entire metal basket was down nearly 1%. The other sectoral loser was IT down 0.75 of a percentage point. On the way up, Realty did well, 3% gain on that. We're going to wrap on closing bell, but don't go anywhere because on the other side is Markets Forward.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC TV18.
From sharp insights in the
It's a weak start to the week on Dalal Street. The Sensex and Nifty and almost 0.5% lower even after some recovery in the last hour of trade. The broader markets outperform. Realty stocks surge while metals drag.
Real estate stocks see a sharp gain in today's trading session with the index up nearly 3%. UBS tells CNBC TV18 the Indian property cycle and the realty sector valuations are far from reaching their peaks. Separately, Avendus Spark upgrades Oberoi Realty to a buy from a sell, and they've raised their target price to 2,700 rupees from around 1,600 rupees earlier.
Walkout surges after the successful use of the drug Xenic that was used to treat a cancer patient in the US. Aurobindo Pharma buzzes after its subsidiary receives a nod from a European agency for a drug. Meanwhile, Dixon Tech surges. The company's formed a joint venture with Vivo India to undertake OEM business of electronic devices, including smartphones.
Hello and welcome to Markets Forward, your go-to show where we get you up to date with regard to today's trading action, and we'll gear you up for tomorrow's session as well. I'm Nigel and with me is Rima. Hey Rima, good trading session actually.
A very good trading session. We'll be with our viewers for the next 20 minutes with all the big news, the corporate voices, what to watch. But it's when you look at the frontline indices, it's actually down close to about 0.4, 0.5%, but it's still a good day because of the way the broader markets perform.
Well, I'll tell you what, a lot of viewers who didn't track the markets during the day, they'll be saying, what are these guys talking about?
It's not a good day, right?
The Nifty was down 100 points. But the reason we're saying it's a good trading session is because the mid-cap index, that did a relative outperformance. On the day the Nifty was down 100 points, the mid-cap index, in fact, was up close to around 0.5%. In the near term, it appears the Nifty is in a bit of a range, 24,400 to around 25,000 odd. But there's plenty of action in the broader markets, and they are extremely buoyant. There are sectors, there are stocks that are moving around. Let's start off with what didn't do well, though, today. The IT index has seen a good run, but now getting into the Q3 numbers, it appears there is some money being taken off the table because the street is clearly factoring in better times for the tech index. But in case there is any kind of disappointment, it seems that index is coming for profit taking. The metal index as well. Now that's done pretty very well on hopes that China is going to recover. But however, some data points that are coming in, they're still suggesting softness on ground. And that's why that index was the biggest loser, down close to 100%. Let's get to better times then. The realty index, that was very, very well. The UBS view is that there will be better times for the real estate sector, at least for the next 3 years or so. And a couple of brokerage reports that came in, namely Avendus Spark as well, who are quite bullish on Oberoi Realty. And look at the top gainers here. Oberoi, Prestige, Macrotech, all of them did well. The other pocket of strength was the EMS players. Dixon Technologies, they've got a new agreement going. So that, stock was up and about. But it had a good rub-off effect because it wasn't just Dixon. You had Keynes that did pretty well. PG Electroplast as well that was up and about. And these stocks moved on rather large volumes. A couple of other gainers. Swiggy is swigging it away. Well, limited float could be playing out here. A couple of brokerages quite positive on the stock, but Swiggy was the top mover from the broader markets and woke out as well. Some positive news flow. So a good trading session, Rima, though the headline index was down 100 points.
In fact, the entire new age tech companies did well. So Zomato was up close to about 2%. You had gains in Nykaa, Paytm. Share prices also hit a 3-year high. But as promised, let's tell you what we have for you on our show today. First, the top movers and shakers of the day with Vivek. The sector of the day was realty. And the stocks in focus include Wockhardt, Aurobindo Pharma, Dixon. We'll tell you the key reasons why these stocks were buzzing today. And then finally, we'll end the show with the big events to watch tomorrow. But it's over to Vivek now. He's at the big wall with the top stock movers of the day.
Well, thank you so much for that. Like you mentioned, it was the broader end of the markets that did quite well. So actually, the market breadth was quite in favor of the bulls. Now, talking about the sectors, I'm going to be repeating myself given the fact that it was the realty pack that did very well. And just have a look at some of the stocks on the screen. Oberoi Realty, Suntech, Prestige, Macrotech, even names like DLF, etc. did very well in the session. Clearly, the sector of the day was the realty pack. One stock as far as the EMS space was concerned was Dixon. Went ahead and announced a JV with Vivo, stock high by almost 5%. This particular stock well above the 18,800 mark. The other stock on the radar was Spark or Sun Pharma Advanced. The company has announced an analyst meet later this particular week, and they're going to be having a call. Behind that, there has been almost an 8% up move, but it'll be important to see what exactly is the data that the management is sharing with the analyst community. Avanti Feeds, remember, the entire shrimp pack today was doing quite well. Avanti Feeds, as far as the NSE 500 was concerned, one of the top gainers. And lastly, Vocard, again, some positive news flow, some positive data coming in from one of the key drugs. That particular stock up almost 10% in the session today. On the other hand, what was it that actually lagged? The entire metal pack today, saw quite a bit of weakness. A lot of the names like Nalco down almost 10-12% in the last 4-5 trading sessions, JSPL, etc. All of these names did see some weakness. Titan, top laggard as far as the Nifty was concerned. And along with that, like you mentioned at the start of the show, the entire IT pack today didn't see too much of selling pressure, but the entire pack did see some profit booking emerge. So to top off some of the laggards, the IT pack was the one that did see some weakness today.
Thanks, Vivek, for that neat wrap. Well, let's welcome our guests. We have Anand Tandon, the market expert who's helping us with the fundamentals. And also we have Jay Tucker, Head of Derivative and Quant Research at ICICI Securities. Hi, gentlemen. Thanks a lot for joining in. Well, Jay, you tell us, it appears the headline index in a bit of a consolidatory mode. But would you lean to a upward bias? Maybe we'll have a bit of a melt up towards the end of the year. If yes, what are the levels you're looking at on the Nifty?
Hi, good afternoon to you, Nigel and Reema. Well, as far as, I would say, Nigel, the implied volatility or the India VIX has gone up today. It was up by more than 10% in today's trading session. And the kind of move which we had seen in the last trading session on Friday, when the markets or Nifty was down to 24,200, and from there on it recovered and almost closed high at the highest point of this recovery. Right, so this kind of a volatility is what we are seeing, and I think that would continue at least until the budget sessions. We have a couple of events lined up this week, like FOMC meet, and thereafter in Jan we have the president-elect taking over on 20th Jan, and thereafter we have the budget as well. So these are the couple of events going forward, and then in fact probably again we will be having our MPC meeting wherein we are expecting a rate cut as well, right? So these are the events going forward which would keep the volatility higher. So I think that the traders will get the opportunity on both the sides. But as far as the Nifty is concerned, I think that on the upside, slowly and gradually, we will see Nifty inching towards the levels of 25,000 to 25,200. Hopefully, this by the end of this calendar year. But then, at least as far as this weekly expiry is concerned, then 24,800 to 25,000. That's the clear resistance for this week, at least. But on the lower side, I would say that Nigel, there has been a smart recovery from 24,200 levels as well. So that's going to be the range for this week. But going forward, we would see index slowly and gradually inching higher. There has been a good support from the Nifty IT and the BFSI segment. So I think that would also keep continuing support for the Nifty at the lower levels. And Bank Nifty once takes off 54,000. Then it's heading towards this lifetime high of 54,500 as well. So I think these are the sectors which would help the index moving higher. It's just the oil and gas sector which has weighed some pressure on the index so far, Nigel. If we see a good recovery coming back in Reliance, then I think the probability of Nifty moving higher even earlier is quite likely. So 25,200 is our technical target as well going forward.
Okay, let's get to the sector of the day, and undoubtedly it was real estate. The real estate index closed with a gain of about 3%, and across the board, you had big gains. Stocks like Puravankara, Prestige Estates, Macrotech Developers, all surging in trade. But Oberoi Realty was one of the big movers, and this is on the back of an upgrade coming through from Avendus Spark. Sonal is here for more.
Well, there's a very bullish note coming in from Avendus Spark on Oberoi Realty, and that's why that pop on the stock today. They have upgraded the stock to a buy from a sell, and there's a massive increase in the target price as well to 2,700 from 1,600 earlier. They say the stock is offering a blend of safety and growth as well at current levels, and this is supported by robust cash flows and balance sheet strength as well, which they are seeing in the real estate player. There has been underperformance over the last 3 years. That is because there were no big new launches that the company had, and also because the pre-sales were quite steady and not seeing a lot of growth for the company overall. But now they are expected to touch levels of 10,000 crore rupees by FY27, which is currently at around 4,000 crore rupees, so more than double in next 3 financial years itself. FY25 especially is an inflection year for the company, driven by the start of its new launch cycle and multiple projects lined up as well. There's some in Thane, and they have spoken about new project launches across different geographies as well. In fact, in the annuity segment as well, there are 2 important projects which will commence operations. That will start flowing to the PNL as well, and that is something that Avendus Spark is very bullish on. They expect Oberoi now to outperform the top-tier listed peers with 3 times growth in launches and pre-sales, and that is what is making them very bullish on the stock.
Thanks a lot for that, Sonal. Well, staying with the realty space itself, Gautam Chowchari of UBS Securities India believes that valuations in this sector is nowhere near peak levels, and that's why they're optimistic about the prospects. Let's hear him out.
On all the metrics, Indian property cycle is far away from reaching its peak. This is at the fundamental level. Now let's look at the stocks. Without mentioning individual stocks, even at the sector level, we are nowhere near peak in terms of where the valuations historically have gone to, or even globally where we see properties are a very deeply cyclical sector and there are accounting variances. But even then, what's the delta from bottom to an upcycle in terms of multiples? Indian property sector has a lot of legs left to go.
Anything else from the listed, sort of large listed space, lots of plays which you think?
So utilities in the renewable space, we remain positive. Then we are more cautious around autos and consumer discretionary. This is on the cautious side, which also we've been sticking to and still maintaining that view. We still haven't seen any signs of changing our view on that space.
Anand, 2 bullish views coming through on real estate. One is Avendus, where on Oberoi they're saying the company is at an inflection point, and even UBS sounding bullish. Your thoughts?
Well, the cycle is still positive. However, in my view, it is such a it's such a localized sector that you have to look at each city and each developer separately. I mean, for example, the city I stay in, I think we've pretty much hit the peak, and from here on, the prices have already started to soften. As more inventory comes through, you expect to see the prices coming down, and that will affect the economics of the business. In Bombay also, I think, you are looking at a multi-year cycle that has already been witnessed. No doubt anyone who's launching today will be able to do a reasonable amount of bookings. But by the time it is ready, you will have a bit of an issue. Today, most of Bombay, for example, is going through redevelopment. And I would imagine that over a 2-year period, the inventory supply that will be coming into the market will be very large. So while you may be buying now on the basis of a projected price hike, you have to look at where the price can be a couple of years down the road when the supply hits. Right now, there is no doubt a shortage, and therefore demand will probably be met with higher and rising prices. Similarly, for most of the markets, I would imagine that, because the capital markets have been good, that's provided a trigger for large, big ticket purchases, and that is usually the case. The good rising capital market increases the demand for property. We think we are seeing that as well. But, it's in my view, a fairly mature part of the cycle. It's not as if it's just about starting out. So you have to be a little selective about which ones you're going to be buying.
Okay, all right. Thanks a lot for that, Anand. Well, let's get to Wockhardt then. That's the stock in focus on the back of a successful use of a drug that was used to treat a cancer patient in the US. Vinny joins us to fill us in with more details. Vinny, a big mover today, Wockhardt.
Absolutely a big mover, Nigel, in terms for Wockhardt. But this drug has been an important one for Wockhardt when you look at it. Because the first time they spoke about this cancer drug, we had started seeing the stock seeing an up move. This is an important drug and solely an important drug that the company depends on. Now, the successful use of the Zynic drug, and this is as of now, they've been used on 45 patients that have benefited under the compassionate use of this drug. So big positive news coming in on this front that they've successfully used this drug is something everyone was watching out for, because this drug is under the phase 3 trial as of now for marketing authorization as well as global registration. So this move indicates a positive sign coming in on that front, and that is why Wockhardt was passing in trade.
And Aurobindo Pharma too, Vinny, that was higher today after its subsidiary received a nod from the European agency over a drug. Give us more details about this drug and what it means for the company.
So absolutely, this was a smaller drug, but it's a positive news. Why? Because it is on the biosimilar front for Aurobindo Pharma. So its arm, that was Curatech, has gotten this European body's nod for this biosimilar drug. Now they've received a positive opinion from the CHMP of the European Medicines Agency, and this is for the drug Zephyllity, which is a biosimilar drug. They have 2 more drugs also which are under review and will receive hopefully a positive opinion coming in on that front from the EMA as well. So that is what they are hoping for. Now Goldman Sachs also highlighted that this is a positive development for the company because it is indicating that the company's ability to monetize on the biosimilar drugs front and on the biosimilar portfolio, where they've been investing a lot in the last couple of years, almost $400 million in terms of investments they made in the last few years. So will be interesting to watch out for, and that is why a positive up move there.
Jay, the chart, what does it tell you about Aurobindo Pharma and Wockhardt?
Sure, Rima. See, as far as Wockhardt is concerned, that's a non-F&O stock. So I would just like to comment there that, the overall trend has been positive so far, and the kind of breakout which we have seen, it can help the stock to inch towards 1650 initially in the short term and thereafter 1950. However, I would say that we don't have a recommendation on this as of now. But the trend is positive, hence 1650, 1950 looks likely going forward. But as far as Aurobindo Pharma is concerned, yes, that's into the F&O category. And interestingly, the data out here is quite interesting, Rima. What we have seen is, we saw a rally on this stock right from 1000 levels until, say, 15 to 1600, wherein there was clear long liquidation. So, prior to that, there was multiple, long positions formed there. But thereafter, there was a clear long liquidation. So we saw, because of which the correction in the stock coming from 1500 to 1200 again. In that, we have seen short build-up as well in this stock. Now, with the last trading sessions recovery, the kind of hammer candlestick pattern has been formed, which is a bullish reversal pattern. I'm expecting some short covering happening out here, which can help the stock to bounce back at least in the short term until the levels of 1350 to 1400. So the risk reward is favorable for the short-term trading bounce from the short covering angle. 1200 should be the stop loss until those levels are held. 1350 to 1400 levels can be seen going forward.
Okay, all right, got that. Thanks for that, Jay. Well, I'm going to come across to Anand and ask him what he likes either from the EMS or from the pharma space. And we're talking about EMS because Dixon Technology searched and trade after entering into a binding term sheet for proposed JV to undertake OEM business with, which will enhance their smartphone business. Upasna joins in to fill us in with more on that. Upasna?
While Dixon Technology, the stock remained in focus today as Dixon and Vivo India entered into a binding term sheet for a proposed joint venture to undertake OEM business of electronic devices, including smartphones. Now, the company has indicated that Dixon will hold 51% of the share capital, while Vivo India will hold around 49% in the proposed joint venture entity. The facility will undertake part of Vivo India's OEM orders of smartphones in India and will also engage in OEM business of other brands across various electronic products. Now, company has started manufacturing of mobile phones in 2016 and established a strong market presence when it comes to Dixon. In recent quarters, the company has added significant clients to its mobile books such as Nokia, Xiaomi, Samsung, Oppo, Motorola and various others. Now, let us look at the agreements entered by the company earlier this month. Now, mind you that in the start of the month, Dixon had also announced that it has launched mass production of Google Pixel smartphones, and company's wholly owned subsidiary, that is Paget Electronics, had entered into a contract manufacturing agreement with Compal for manufacturing of mobile phones, and the commercial production for the same has been started at the company's Noida unit. Now, lastly, let us look at the management commentary and the guidance given by the company. Now, company expects its margins to improve by 100 and 120 basis points over next 24 to 28 months, driven mainly by the mobile component manufacturing. And it is also targeting a revenue of around 35,000 to 40,000 crore for FY25, and it expects the mobile segment contribution to the business to reduce to 60 to 65% from 70% currently by 2025-2026. So all in all, we are seeing Dixon in focus today on the back of this news flow, and it's venturing into further the mobile segment of the company.
Got it. Thanks for that, Upasana. Anand, wanted your closing comments. Anything you like from pharma or EMS?
So 2 quick comments. One is Wockhardt has not made a cancer drug. It has made an antibiotic which goes after superbugs. And therefore, it's an interesting development because superbugs have no treatment as of today. And they have right now 6 candidates in the pipeline, which is quite interesting. The more usual business for business as usual would be on Aurobindo, which you discussed right now, because that is more about monetizing the pipeline of drugs they already have. And they are probably one of the cheapest in the market. They have been slightly patchy in their performance, but that is the way it is. When you come to EMS, remember that mobile phones have an operating margin of less than 4%. And the subsidy that you are getting from the government is of the order of 6% in the first year, going down to about 4%. So for the next few years, till they are able to get into the components business of the mobile phones, most of the money that they will be making on mobile phones will be on account of the subsidy, which to me is a somewhat low PE business. The market, of course, doesn't care right now because they are looking at top line, but that would be a caveat that I would like to put in front.
Okay. Thank you very much for joining in, Anand as well as Jay, and Anand for clarifying and explaining in a little more detail about the pharma developments. Get into a break. On the other side, top corporate voices and the big events to watch tomorrow.
All the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV.
Welcome back. Let's take a look at the top corporate voices of the day. So Astra Micro, the stock gain closed about 2%. The management said they see potential to receive large orders, which will result in the company holding on to its order inflow guidance of 1,200 crore plus. They also said that the company's profit could scale up to 400 to 500 crore rupees in the coming years.
Well, and Chola Finance was another stock. It rallied close to around 3% by the time we wound up. However, they expect a decline in asset quality in the second half of next fiscal. The company also told us that the commercial vehicle segment may not see large growth as earlier expected. Well, before we wind down on the show, let's bring you some key market events that you need to track. Vinny joins us to help us out with that list. Vinny?
So absolutely, tomorrow what we're watching out for on the global front, there's a lot of action that one may see happening. One, in the US, you'll watch out for the retail sales. FOMC meeting, that starts tomorrow. So 17th and 18th of December, let's watch out for that. The decision will be on 18th of December. Industrial production data in the US also is something that we're keeping an eye out on. Now in the UK, jobless claims data, that's what one is watching out for, as well as the unemployment rate, an important data point from the UK. Domestic front, not much of a corporate action that we're seeing coming in, but we do have IGI, which is the IPO, will be closing tomorrow. So yes, last day to subscribe for the IPO. And also we have another news flow that the UP government will be presenting its second supplementary budget tomorrow. So keep an eye out on that.
Thanks for that, Vinny. Well, with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Thanks a lot for watching.
Make informed
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and Nifty end lower after a tepid start to the week. Mid-caps buck the trend. The rupee weakens, ending near record lows against the US dollar. India's trade deficit balloons to a record high of nearly $38 billion monthly. Imports hit a new peak of $70 billion. Gold imports rise 49% in value in the first 8 months of this financial year. Bitcoin prices hit a new record high as investors await a potential rate cut from the US Federal Reserve later this week. The cryptocurrency has rallied 50% since Donald Trump won the US presidential election. In a potential relief for auto industry, GST Council is likely to rule out retrospective imposition of the 22% additional cess on large utility vehicles, higher taxes to be applicable from July 2026-2023 or after. Sources say the council is likely to discuss hiking taxes on old vehicles at the December 21st meeting in Jaisalmer. The Delhi High Court summoned SpiceJet CEO and Chief Operating Officer in a payment dispute case, asked them to appear in person for the next hearing. However, both the CEO and the CEO posts are lying vacant as of date. Ajay Singh holds the chairman and MD's position. Bajaj Auto is all set to ramp up its EV play with a new electric three-wheeler brand. Plans to launch 5 new Chetak scooters and 5 new electric three-wheelers in the coming months. Target selling 5 lakh electric vehicles in FY26. More than 50 people, including rescue workers and a journalist working with Al Jazeera, killed in an Israeli airstrike in Gaza. The Netanyahu government announces plans to increase the number of settlers in Syria's Golan Heights. This applies to the land portion that Israel had annexed in 1967. BJP and Congress leaders spar in Parliament as they discuss 75 years of India's constitution. The finance minister alleges Congress amended the constitution only to benefit one family. Kharge demands an apology from Prime Minister Modi for allegedly twisting the words of Jawaharlal Nehru. Legendary tabla player and Padma Vibhushan Ustad Zakir Hussain dies in San Francisco at the age of 73. He was suffering from a lung disease and was hospitalized for the last 2 weeks. A multiple Grammy Award winner, Hussain elevated the tabla from an accomplishment to a solo act in the global arena. Catch our special tribute to Ustad Zakir Hussain at 5:30 p.m. today, where we discuss the rich legacy with contemporary musicians. The youngest chess world champion Gukesh returns home to a rapturous reception at the Chennai airport. Cricket legend Sachin Tendulkar praises the teenager for guiding the next generation of chess prodigies. From jaw-dropping deals in Gurugram to blockbuster sales in Mumbai, we take a look at the resurgence in the real estate sector, driven largely by the rise of super luxury living. Well, let's start with the stock market action of the day. The Sensex and the Nifty ending the day lower. This after a lackluster start to the new week. The Sensex lost over 380 points today. The Nifty was down by about 100. The mid-cap index, though, bucking the trend, up by about 450 points. That's almost 1% of a gain coming in there for the mid-caps. That is the start of our market action. On to the money markets, where the rupee weakened against the dollar, moving closer to the record low levels. The rupee had gained some strength last week, but those gains were given up in trade today. Meanwhile, as far as the bond market was concerned, India's 10-year sovereign bond prices also declined in trade today. That's the money market snapshot for you. In the cryptocurrency market, the price of Bitcoin hitting a new record high as investors await a potential rate cut from the US Federal Reserve later this week. Other cryptocurrencies, including Ether and Dogecoin, also gaining in trade. Bitcoin has rallied 50% since Donald Trump's victory in the US presidential election. Trump is also anticipated to go ahead with the strategic Bitcoin reserve, and that's taken Bitcoin to an all-time high. Now, macro data. India's trade deficit has widened to a record high of nearly $38 billion in November on an annual basis. Monthly imports have also hit a new peak of $70 billion. Exports rose by 2.1% during April to November period, while imports accelerated at a faster pace of 8.35%. Gold imports have also risen 49% in value in the first 8 months of this financial year, which is one of the leading contributors to overall imports, so big import surge coming in there. India's wholesale price index has eased to a 3-month low of 1.89% for November. The government has attributed this due to a decrease in food and vegetable prices. However, inflation in manufactured products increased to 2% from 1.5% earlier. Moving on to international news, over 50 people, including rescue workers and a journalist working with Al Jazeera, were killed in an Israeli airstrike in Gaza. The strikes also hit a UN-run school in Khan Yunis, located in southern Gaza. UNICEF officials have termed the attack appalling, with casualties involving children in the region. Attacks also continued across the northern Gaza Strip, damaging residential buildings and refugee camps. The Netanyahu government has also announced a plan to increase the number of settlers in Syria's Golan Heights. This applies to the land portion that Israel had annexed in 1967. Several countries like Qatar and Saudi Arabia, Iraq and UAE have condemned Israel's plans to increase settlements in the region. And from West Asia to Europe, Ukrainian drones have carried out strikes on an oil facility in Russia, causing a fire. This oil facility is a crucial source of fuel supplies for Russian troops. Ukraine has claimed its military has shot down 58 Russian drones. No casualties have been reported so far. Meanwhile, Russia's central bank is expected to carry out a massive rate hike next week as inflation in the country continues to soar. The consumer price index rose to 8.9% in November versus 8.5% in October. So that is biting inflation in Russia, which could prompt the central bank there to hike rates significantly. In the energy markets, oil prices have each, albeit marginally from the highest levels in weeks. This as markets remained cautious ahead of the Federal Reserve's policy meeting later this week. Now, the fall in prices was limited by fears of supply disruptions in the event of more US sanctions on major suppliers, Russia and Iran. Well, on to a CNBC-TV18 exclusive. In a potential relief for auto industry, GST Council is likely to rule out retrospective imposition of the 22% additional cess on large utility vehicles. Sources have told CNBC-TV18 that the higher taxes will be applicable from July 26, 2023. Timsy standing by with more on the GST Council's meeting scheduled for the 21st of December in Jaisalmer. Timsy.
That's right, there's a lot on the plate of GST Council when it meets on 21st of December in Jaisalmer. Top will be a clarity that is likely to give relief to auto companies. Here the relief is that 22% cess which was levied on utility vehicles having a specification of 1500cc, 400 mm of length and 170 mm of ground clearance. Over there, the clarity had emerged in 50th Council meeting that 22% cess to be levied. And this, now the council is going to re-clarify that this levy will be only on or after 26th of July 2023, and any claims that have been raised for the past, if approved, then this clarity will put them to rest, because it is learned that many state and central GST authorities have issued claims notices to auto companies for past dues, and once cleared, this will put to rest all those notices and claims. Apart from that, the council-nominated fitment committee has made certain proposals, which includes reducing rate on fortified rice kernels from 18% to 5%, to reduce GST on gene therapy from 12% to nil to give affordable medical treatment. Also, the council is going to discuss on the GOM on revenue analysis, where it says that it is likely to seek a closure of this GOM, which has been in existence since 2019. The council nominated GOM on compensation cess is likely to submit a status report seeking a 3-month extension. Apart from this, other items include fast-tracking the appellate tribunals by giving clarity of rules and procedures, clarity for online services sector, registration categories could be proposed in the upcoming council in terms of a concept note, where they could say that allowing ITC based on risk profile should be considered. A concept note will be prepared and shared. Also, mandatory signature on e-invoice is likely to be proposed. Let's see what all gets approved. Back to you.
Timsy, many thanks. And staying with the GST Council, it's likely to discuss hiking taxes on old vehicles at the December 21st meeting in Jaisalmer. Sources have said the rates on old and used EVs, smaller petrol and diesel cars may be hiked to 18% from 12%. Petrol cars over 1200cc and diesel cars over 1800cc are already taxed at 18%. Now, after emerging as the new market leader in the electric two-wheeler space, that's this month, Bajaj Auto is ramping up its EV play. The company is lining up a slew of new launches. Parikshit is standing by with the exclusive details. Parikshit.
Well, Bajaj Auto is targeting selling 500,000 electric vehicles in FY26 and more than that as well. Rajiv Bajaj, in fact, told CNBC-TV18 exclusively that the company is likely to exit FY25 with a capacity and sales run rate of 40,000 cumulative electric vehicles per month. The company has new electric three-wheeler launches, including an e-rickshaw on the anvil in the coming months, and these will significantly bolster sales volume. We will, in fact, see a lot of action starting this December and in the next quarter as well. Sources tell CNBC-TV18 that the e-rickshaw will be launched in Q1 of FY26. In fact, Bajaj Auto is likely to launch a new brand for electric three-wheelers. All new electric three-wheelers will have the new brand identity. Sources also add that the company will launch 5 new electric Chetak scooters and 5 electric three-wheeler passenger and cargo vehicles in the coming months. A new Chetak scooter is being launched on the 20th of December this year, which sources say will have a bigger battery, higher range, more features and better performance than the current Chetak lineup in the market. The production capacity of Bajaj Auto is being ramped up to meet electric vehicle sales target of over 5 lakh EVs in FY26. Bajaj Auto has sold a total of over 1.7 lakh electric vehicles across 2- and 3-wheeler segments. The company has emerged as the top electric two-wheeler maker in December, displacing Ola Electric.
Parikshit, many thanks. Now, the Delhi High Court has summoned SpiceJet CEO and Chief Operating Officer in relation to a payment dispute with lessors. The court has asked the airline's CEO and CEO to physically appear before it for the next hearing, which is scheduled for the 16th of January. Ashmit is standing by now with more details. Ashmit, many thanks. There is no CEO or COO at SpiceJet currently. So what happens from here?
Indeed, and the one hemming the ship from here has been the chairman and MD, Ajay Singh himself. So there is that bit of a question mark. Team France lawyers, however, are very clear in their view that they believe Ajay Singh will need to appear. We are yet to hear in terms of who will appear from the airline itself. But as far as the background to this is concerned, SpiceJet, the airline, has been hard at work in terms of resolving these outstanding payment dues with the various lessors. Team France is not one of them. Team France claims outstanding dues of over $24 million, saying that these dues have been pending for a very long time. In fact, they point towards a very specific order of May of 2024, which specifically had directed, with the consent of both sides, had directed SpiceJet to cough up that amount of $6 million. We're standing here now in December, the Delhi High Court expressing its frustration over non-compliance with it, with the High Court order, and with that in mind, the High Court making its frustration known by summoning physically the CEO as well as the COO of the airline to appear physically in person before the next date of hearing, before the High Court. That's on January 16th. What's interesting is that the counsels for SpiceJet had sought an exemption, saying that how about we have the CEO and the CEO appear virtually. That was expressly denied by the High Court, saying that nothing doing. We want them to appear. We want the top leadership to appear before us to answer these questions over non-payment. Now, we reached out to the airline. What they're saying is that both these positions are lying vacant. And technically speaking, Ajay Singh occupies the position of chairman and MD. So an interesting question mark for SpiceJet to answer. As far as Team France is concerned, the lessors believe Ajay Singh needs to show up on Jan 16th before the Delhi High Court.
All right, Ashmit, appreciate you joining us. That is the latest in the legal troubles for SpiceJet. Now, sticking with action from the Supreme Court, this time around, the Apex Court has ordered that all 24 pleas related to an alleged anti-competitive practices by Amazon and Flipkart must be transferred to the Karnataka High Court. The Composition of Commission of India has consented to this arrangement on the condition that proceedings before other high courts are stayed. Remember, the CCI had urged the Supreme Court to consolidate and hear the cases. The Karnataka High Court hearing, which was scheduled for tomorrow, will now be delayed temporarily. We will head into a break, but up next, from jaw-dropping deals in Gurugram to blockbuster sales in Mumbai, we take a look at the resurgence in the real estate sector. That and more when we return.
Investing.
In Parliament action, chaos erupting in the Rajya Sabha during a debate on 75 years of the Indian Constitution. Union Minister Nirmala Sitharaman claimed that the Congress brought constitutional amendments to benefit just one family. She criticised the 42nd amendment introduced by the then Prime Minister Indira Gandhi during the emergency era. Union Minister JP Nadda accused Indira Gandhi of crushing the Constitution in 1975, while the leader of the opposition, Mallikarjun Kharge, urged the BJP to draw inspiration from the late Prime Minister and help minorities in Bangladesh. She also demanded an apology from Prime Minister Modi for allegedly twisting the words of Jawaharlal Nehru. Sri Lankan President Anura Kumara Dissanke met with Prime Minister Narendra Modi in Delhi on the second day of his three-day visit to India. The two countries have signed 2 MOUs to avoid double taxation and to train Sri Lankan civil administrators in the Indian National Centre for Good Governance. The Prime Minister said the issue of Indian fishermen being arrested by the Sri Lankan authorities was also highlighted in the talks. This is the first foreign visit by the new Sri Lankan president. Legendary tabla player and Padma Vibhushan Ustad Zakir Hussain passed away in San Francisco at 73. He was suffering from a lung disease and was hospitalized for the last 2 weeks. Multiple Grammy Award winner Hussain elevated the tabla from an accompaniment to a solo act in the global arena. And tune into CNBC-TV18 at 5:30 p.m. as we celebrate the life, the times and the legacy of Ustad Zakir Hussain, the maestro who cast a rhythmic spell on music enthusiasts across the world in a marquee career of 60 years. We'll be joined by stalwarts from the world of music as they share with us their anecdotes of Ustad Zakir Hussain, the rich legacy he leaves behind and his biggest contribution to the world of music. Music composer Shankar Mahadevan and Salim Merchant, santoor player and music composer Rahul Sharma and tabla player Anand Kalyanpur will join us right here on CNBC-TV18 as well as our YouTube page. So do remember to tune in and log in to watch a special tribute to the legendary Ustad Zakir Hussain. Well, the youngest chess world champion Gukesh returned home to a rapturous reception at the Chennai airport. The 18-year-old defeated China's Ding Liren in Singapore last week to become the youngest ever world champion. Gukesh is only the second Indian after Vishwanathan Anand to claim the world title. Well, 2024 has been a record-breaking year for India's luxury real estate market. From jaw-dropping deals in Gurgaon to blockbuster sales in Mumbai, the resurgence in the sector has been driven by the rise of super luxury living. Shivani Bazar's reports that Gurgaon is now giving Mumbai and Bengaluru stiff competition when it comes to the luxury real estate category, and the trend may just be getting started.
This is DLF's Camellia project in Gurugram. And as of mid-December, it's leading the race when it comes to the sheer size of property deals. Rishi Parthi of InfoX Software Technology set the record books buzzing when he paid 190 crore rupees for a 16,000 square feet penthouse apartment in this project, which works out to a whopping 1,80,000 rupees per square foot. This has put Gurugram ahead of traditionally super luxury markets like Mumbai, because the deal dwarfs the other largest super luxury real estate deals of the year, which include Great White Global's purchase of two 8,000 square foot apartments in the Oberoi 360 West in Worli for 225 crore rupees. RR Cable's promoter Sri Gopal Kabra's purchase of two apartments totaling 13,000 square foot on the 62nd floor of the same building for 198 crore rupees. And Param Capital's Asha Mukul Agarwal buying 3 luxury flats at Lodha, Malabar for a whopping 263 crore rupees.
Gurgaon has become a parallel city to Mumbai and Delhi and has now overtaken Mumbai and Delhi and become the luxury capital of the country. And there are many reasons behind that. One is that all the successful startup entrepreneurs who are working out of Gurgaon prefer to live in Gurgaon. All the industrialists of NCR who have their places of work in Gurgaon want to be in Gurgaon and don't want to travel that 1.5 hours each way coming from Delhi. Aralias, which was launched 25 years ago at 1,800 rupees a square feet, and now today Camellia stands at roughly 1,80,000 rupees a square feet. That is a price increase of roughly 100 times in the last 25 years.
The DLF Camellia's deal is not just the most expensive one in Gurugram's property market to date. It also makes the project the most expensive high-rise condo in India, followed by Namanzana project in Mumbai's Worli and Lodha Malabar in Mumbai's Walkeshwar. Interestingly, Oberoi 360 West, which boasts 3 of the largest deals in the list this year, comes in at the 6th place in terms of costliest properties. Data suggests that this boom in super luxury and luxury real estate market is here to stay. According to Anarock, 2024 saw 25 ultra-luxury residential deals, each priced above 40 crore rupees, close across Mumbai, Hyderabad, Gurugram and Bangalore. That's a combined value of 2,443 crore rupees. In terms of sheer number of deals, Mumbai still has the lead.
Camellia is one in Gurgaon, entire Gurgaon. But, many of the projects in Worli area in the central Bombay, these are all luxury, which provides various amenities to the end consumer. So we had seen a lot of, if you look at the amount of luxury on the volume side, if you compare it with Delhi, I think Mumbai still has got the highest amount of demand coming from the celebrities or the younger entrepreneurs.
Experts add that this rise in demand for super luxury residential properties is being driven by a mix of growing wealth, the desire for opulent lifestyle, and the marquee projects that redefine luxury, and indicate that this trend is set not just to continue but grow in numbers and value. In New Delhi, this is Shivani Bajaj for CNBC-TV18.
Well, the rise of luxury real estate. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
Presented by Policy Bazaar.
CNBC-TV18, the Policy Bazaar Insurance Show.
In the recent past, time and again, we've spoken about the need to address the missing middle in India. But what is equally important is to increase the coverage of insurance on the corporate end or the employer-employee end. Today, on this episode of the Policy Bazaar Insurance Show, we put the spotlight on how the coverage of employee wellness through insurance can be expanded, how employee wellness is changing from being curative to preventive, and how corporates are responding to this changing face of employee wellness. Joining us today are Sajja Praveen Chaudhary from Policy Bazaar from Business, Mr. Nilanjan Roy, Group Business Head at Manipal Cigna Health Insurance, and Mr. Ganesan P, Senior Vice President HR and Admin at Shadi.com. Thank you, gentlemen, for speaking to us on this important topic today. To start the discussion with you, Sajja, over the years, you've been looking at the space, reading the space very closely. How has employee wellness through insurance being at the center stage evolved for you, looking at the space from outside?
Yes, basically there was a time, when there was only, when you speak about wellness or insurance, it was only about employee health insurance.
Correct.
But over the past few years, I think that definition has changed from only looking at giving employees a health insurance to also ensuring what would take care of their health and beyond that, whether it might be health wellness in terms of, mental wellness, or in terms of, healthiness, or in terms of financial wellness. So the definition has got broadened up. And the organizations have opened up to kind of ensure they include everything or whatever they can within their means to ensure that the employee wellness is taken care of, whether it's in terms of making a doctor available to them when they want to speak, not even when they want to get hospitalized. Insurance comes into picture when you want to get hospitalized. But what about when the employee has some small health issue at home, and should they go half day out the hospital and meet a doctor, or can they speak over phone or can take an online consultation? Similarly, if they want to get a, say, let's assume there's certain things in terms of having physical fitness, which is also important in today's life. Because gone are those days where the jobs are very mechanical in nature, and today a lot of people are on the chairs, right? So there's a lot of thing around, fitness kind of thing. Can they kind of curate a fitness or a gym kind of sessions along with it, which will ensure that there's employee fitness kind of thing. All of these things, whether it's in terms of, in terms of regular employee health, or in terms of fitness, or in terms of being able to provide them with some solution which can take care of their financial needs,
Correct.
or in terms of any suggestions that they would want in terms of financial coach. Or the other part, which is primarily spoken about these days, is about mental wellness, especially again, given that, the nuclear families kind of a structure from what we used to have in the past, and support structure not being there in metros, and also the kind of pressure that's there, right? Mental wellness. So there are multiple, agendas which, you look at an employee, and whatever you think, whichever category you think that the employee can, might have a need,
Correct.
the corporates have started to kind of inculcate that into entire wellness plan along with employee health insurance. That's how it has kind of got broadened up. And as we see, it's only kind of, getting more and more broadened up in order to include much more kind of whatever might go beyond insurance.
Nilanjan, to come to you, I mean, from the insurer's perspective, things are changing very rapidly, needs are increasing very rapidly. How are insurers responding to this changing face of employee wellness through insurance? What are the new things which are coming into the picture in terms of insurance also striving to give new schemes? What are the new coverages which have come into the picture in the recent past?
So Yash, the core concept of insurance remains true to all insurers, which is ensuring adaptability, affordability, and accessibility. And as per what Sajja just mentioned about employee benefits becoming more egalitarian in approach, what essentially happens is we have had to change ourselves to make our employee plans, which are basically our group health solutions, more preventive, more comprehensive, and more adaptable in the sense that you offer more flexibility to the employees to be able to kind of choose what they really want to choose and how much to pay for what they choose. So definitely what is changing at insurers' end is our insurance products are becoming more inclusive from the perspective that not only the inpatient care, which was historically always the core cover in India, but also moving to preventive health care, offering insurance inbuilt plans which kind of take care of their diagnostics, take care of all the stress that they have at the workplace, which is through mental health solutions, and of course, making it easy for them to understand insurance and be able to make the most out of what their employers are offering.
To come to you, Mr. Ganesan, you are on the other end responding to your own workforce, your own employees. How are you and organization like yours responding to these changes? And in true sense, do you really think that employee wellness, though it's through insurance, but has moved much beyond insurance in terms of being preventive as much as being curative at this point of time?
I would look at wellness holistically rather than only from an insurance perspective. I think now we can define two clear phases as far as wellness goes. One is pre-COVID and the second is post-COVID. So it's not only India but the whole world that has gone through a major change in outlook. There is a paradigm shift in terms of looking at employee wellness very, very differently. COVID taught us a lot of things. The experiences of COVID taught us a lot of things. In a lot of ways, the world has gone digital. So when it comes to work, right, it's very easy to now kind of understand and make those very clear distinctions between remote work, hybrid work, in-office work, right? We can do remote work when required, we can do hybrid work when required, and we can do in-office work when required. So in a city like Mumbai, in a city like Bangalore, in a city like Delhi, where traveling happens to be a challenge even today, so people look at multiple options.
Correct.
We've also realized that remote and hybrid work up to a particular point, in-office work helps a lot in terms of wellness, in terms of emotional well-being. So talking again digitally, we have so many opportunities to do well-being checks for your physical well-being digitally. We have emotional well-being partners who help us to do this. And plus, the kind of work approach that we eventually land up at the workplace is also very important. I think we've fairly succeeded and done very well when it comes to being flexible towards our employees. If somebody is down, some family member is down. So we've, continued the same culture as we had during the COVID times.
Correct.
Right. So the world has changed a lot, and it is about complete wholeness. It's about flexibility, and it's about how companies are realigning their thought process towards making the workplace very wellness conscious, and at the same time ensuring productivity is happening.
Come to you, Nilanjan. A lot of schemes that you do introduce on the side of employee wellness are with the feedback that you get from these employers. A large role is being played by the feedback that you get in terms of what is required by employees. Can you tell us about the suggestions that you're getting in terms of what does the modern employee need in terms of his wellness ecosystem, and how are you designing your products, keeping that at the center stage?
Sure, yes. So if you really understand that the entire insurance or insured benefit or anything that you have even on your personal side, basically forms part of the larger financial protection around your health risks, right? Yes. So one of the biggest issues that India is facing today is that the out-of-pocket expenses continues to be more than 60% of the total healthcare spend. Now, employers, of course, they have been the first ones to kind of understand this, especially around COVID. And they came back to us through consultants and they said that, well, we need to do different. And we were like, okay, we were waiting for this to be different, because if you just do the curative part, it doesn't also satisfy, our cost and our profitability perspective. So it was a large exercise around deconstructing what traditional insured products or insurance products were at our end, understanding what the employers were needing and how can we, put it inside a group plan. And group plan offers us that flexibility to design what we get, and rather that curation is much more easier in a group product. And we have been able to curate much more, wholesome, comprehensive products, primarily backed on technology. So these are all offered through technology, because at the end of the day, insurance is just a product which is, understanding the risk and pricing it. But how do you deliver it? The delivery has been a bigger concern in our head. And I think through digital enablement, we have been able to deconstruct, understand, and construct new products that are making insured benefits more, flexible and comprehensive, and of course, with a focus on prevention.
Sajjad, to speak to you, and this is a suggestion and a question put in one statement. But just a thought that I wanted to share with you and understand if this is indeed possible. We speak about the concern of the employer-employee benefits having a very limited shelf life. Once the employee transitions to another employer or leaves the formal working space, the insurance benefits that he has eventually collapses at that very moment. Is there a way we can look at it more long-term, in the sense if an employee is willing to continue to contribute premiums towards his plan, irrespective of him being with the organization, with a different organization, not being in the formal workspace also, that insurance policy continues for him till the time he wishes to do so? Is that kind of setup more ideal and possible from both employer and insurance point of view?
So, yes, Yash, I think this is one of the very valid things which few employees in the past as well raised. And today, this is pretty much possible given the portability guidelines which are there from the regulator. And today, we do this with few of the employees in some of the groups. The only difference being that, when you're in a group policy, or when you're an employer-employee policy, which is primarily a group policy, that group policy is priced basis whatever the outcomes of that group are. And that price is very different from what a retail product or any other group price would be. For example, you are working in an organization A, the price per life or per family, whatever that you're paying here might be, say, 20,000, 30,000 rupees. In other group where you go, the benefits might be different and how that group is behaving might be different, and hence it can be 15,000 or it can be 50,000 also. So one is when you move, anyways, you move into that plan of the new organization. But then there are also a lot of people who kind of today move into new startups, which might not have the similar kind of covers, or at times they might want to start on their own as well. Now, in all of those scenarios, what happens is you can, if you're covered for a particular duration in the existing plan, you can port into a retail plan of an insurance company, showcasing that you've been covered for X duration before you leave the company or when you're almost about to leave the company. And then the other company would accept that proposal and then underwrite it like the regular portability application kind of. And then obviously you can carry forward.
Is it a seamless process? Is it, can it be easily done without sort of getting involved in a lot of paperwork, a lot of rejections, keeping all of that aside?
The way it is any regular health insurance, as you would understand, Yash, right? At the end of the, or an insurance company at the end of the day, they pull in money and they pay out as claims to the people who are insured, right?
Correct.
They have to manage that money also very effectively.
Absolutely.
If you bring in knowingly, there are a lot of people who have a lot of ailments and you don't underwrite at the right premium, then you might just go burst. And then you leave a lot of people on the ground who will not be covered at all, right? So it is important that you underwrite it right, in terms of premium or conditions and all. So whenever such a portability application comes in, they see what are the ailments that are there right now. They need to look at the claims of last 3-4 years, because if you've claimed, and then basis that they decide whether they can take you at the same premium or they can take you at a higher premium in order to ensure that the pool is self-sufficient for long-term nature of the company, right? And today it's very much possible. If you say, is it very, very digital nature? Yes, I think it's going there. It's not yet fully digital in nature, I would say, because the portability guidelines also evolved over the last 3-4 years. The recent regulations also again changing in May 24. So these are evolving, and probably in the coming months or so, we should expect it to be much more digital in nature. And this today, having said that, we use it today and we actually help some of our people who are there employed with us, some of our clients, in terms of porting to retail plans.
That's a very interesting point, but we'll continue on that point and much more on this other side of a very, very short break. Keep tuned on. We'll join you on the other side of this very short break.
CNBC-TV18, the Policy Bazaar Insurance Show.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From
sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India in with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show.
CNBC TV18, the Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. Our conversation on wellness for employees through insurance continues on this side of that short break. Sajjan, I want to start again with you. Speaking about technology, Policy Bazaar, of course, as an organization, has paid a lot of focus when it comes to technology and distributing insurance through technology. As far as the employer insurance or employee wellness is concerned, what role has it played in terms of giving you the needed data about any employer, about any employee? What role has it played in the large scheme of distribution of insurance?
See, primarily, as earlier Ganeshan said, right, the world has moved in terms of looking at only wellness per se to kind of being able to give a lot more to employees in terms of whether it's a hybrid workforce and all of that. So when you look at such a structure that earlier all the employees used to be in office versus nowadays not everyone need to be in office and they can be structured across multiple offices or at times be working from home. This technology is one part which kind of helps ensure that the HR managers or the administrators of health insurance or the employee health insurance and wellness kind of do it in a much better coordinated way. Why is it so? in a regular health insurance policy of employer health insurance policy, the frequency is about anywhere between 5 to 8%. When I say 5 to 8%, in a year, about 5 to 8 out of 100 employees would take a claim. What about the rest 95 or 92 employees? How do you touch base with them? How do you engage with them, kind of? And especially when they're not in office. If they're in office, used to have this Friday fun shows or, other stuff which is around, right? But when they're not in office, how do you do that?
Correct.
Now, you have this entire, what we have today as policies of a business is a single suite which is connected, kind of, which has everything within that. Whether you speak about e-cards for insurance, whether it's in terms of claims, or whether it's in terms of employee wellness, whether in terms of, a teleconsultation that you would want to take for doctors, or a gym membership that you would want to book from there, or in terms of any kind of wellness videos or something that you would want to go through, or basic assistance, kind of mental wellness related or psycho, therapy related kind of assistance. All of these being available through technology and at the same time having your privacy at the same time, right? Because especially in mental wellness that you speak about, having privacy is very important. You cannot kind of just open, there are a lot of people who would not want to open to the world and say, I am having issues and I would want to speak. But you being able to provide them using technology, otherwise it's a bit tough kind of a thing in a regular offline world. Parental health coverage, right? That's one thing which a lot of employees ask for, because in group health insurance that organizations give, the pre-existing diseases are covered from day one, and parents are the ones who are prone to be having pre-existing disease and not getting retail policy kind of a thing. Now, parental coverage to an extent in some of the organizations who don't provide themselves and give it as a voluntary policy to the employees is the chicken and egg story. Why? The insurer would want, say, 20% people to at least take it. Again, from the risk pool perspective, we just discussed a while back.
Correct.
You take only 2% of employee parents, then your premium goes bust. So you need to have a 20% or whatever that is. Now, if you don't, on the other side of employees, how do you get the 20%?
Correct.
That's where, again, technology comes into picture in terms of, having your exact right flows being there, or you being able to communicate with employees using the app or WhatsApp or email and all of that, having seamless technology flow, which will ensure that, the seamless technology flow helps in having more and more people enrolling into it easily. And that's where some of these, even the voluntary policies come into picture, become more effective.
Mr. Ganesan, things like mental wellness, things like OPD, things like lifestyle issues, how are employees responding to these requirements in terms of the coverage that they want? And second question, are employees completely aware today or largely aware that they can sort of opt for these things out of their health insurance policy or the wellness scheme and are being able to use their policies effectively?
Sure. So I would answer second question first, right? I think it's left to the organization to communicate and drive home what we are actually offering. So a lot of communication. When I say communication, I would say on-ground communication plus your digital communication helps, because, for example, somebody has a mild fever. They really don't know that they need to go into a possible app and talk to a doctor. They don't remember. What I would possibly do is walk to the doctor next to my home. So while these facilities have greatly helped, in fact, people have become more aware. As I said, there are two zones. One is the pre-COVID era and the post-COVID era. Post-COVID, a lot of people have become aware that all these solutions are available digitally. The organization is providing them, communicating to them, and they can benefit. So it helps a lot in communicating. Today, people are aware that apart from my typical health insurance that the company provides, I also have an opportunity to pick up the phone and talk to a specialist. I can also have the opportunity to pick up the phone and speak to someone who's going to offer me emotional well-being, whatever it may be. And one of the best things that has helped us there is we've thrown it open to the families as well. It's not only about employees.
One final question as we conclude this interaction, and this is more of a confrontation between the different stakeholders that I have here in front of me. Mr. Ganesan, to start with you, what would you need out of, let's say, that one thing that you would need out of an insurance company to have this mechanism or the relationship between, of course, the organization and the insurer in favor of the employer-employee wellness scheme? If you could start with that.
Having health insurance is good. But the effectiveness is measured only by the outcomes. So even today, in spite of all the customization that an insurer does for a corporate, at the end of the day, when a guy is going to get discharged, he's still worried, what's in store for him.
Correct.
Right? At the discharge desk, before collecting a discharge summary, he's still not very sure, whether what is going to be rejected, what's going to work, what's not going to work. So that, a little better personal attention there to ensure that the exit is as seamless as the entry was. And I think it'll actually lift the case of insurers to go there and tell that, we support you, we ensure that the exit is as peaceful as it was, as the entry was.
But Nilanjan, to speak to you on the same point, one thing that you would need corporates to do more proactively for you to provide better to them.
So I think the one thing that we always look forward to our corporate clients, to do more of is, try and establish a very, very collaborative relationship with insurers. And this relationship should not be a short-term, 1 year, 2 year kind of a thing. It should have, kind of a strategy in place that, okay, 3 to 5 years, we're going to work together. And we're going to do these 4 or 5 things, which increases my employees' experience of working for me as an employer. And, health benefits being the largest spend item, for all employers, this becomes a very crucial thing. Unfortunately, that could be done much more in India today, which is not happening.
Okay.
Probably that would be my ask to all my corporate clients.
Sajja, last word to you. From corporates, from insurers, your point of view in terms of being the mediator between the two, connecting them, what would you require out of both of them? One thing.
See, I think, as Nilanjan said, one part that we see when we speak to corporates on the other side, one place where we struggle at times also is in terms of being able to look at medical inflation. So medical inflation is one large thing, especially post-COVID, and in the group health insurance, what happens is the pricing of a policy happens based on the outcome of claims of last year. When it comes to obviously the client side of it, I think the client is the king and the queen, so we wouldn't say much. But having said that, one part which we try to tell clients at times is when they say, what else can we give? What is a new thing? What is extra coverage that we're increasing? At some point, at some times with few clients, it happens in such a way they don't realize that what they're giving this year is something what they cannot pull back at some point of time. Correct. And as I said earlier, the next year pricing is going to done basis last year claims. So when you're pulling out the, removing the capping on, say, room rent or, kind of not putting in place some cappings, I think some place, where while we try to educate, I think some points where they could be more judicious around it, I think helps in terms of in a long term kind of thing, in keeping their costs in control kind of.
Well, thank you, Sajja, for concluding this so well. Thank you, Nilanjan. Thank you, Mr. Ganesan, for speaking to us on this very important topic. All eyes going forward will now be on how we can make the employer-employee insurance more comprehensive, more customizable, tailored to individual needs, and of course, increase the coverage here. There are, of course, various things which can be done, are being done. A few of those things you heard from the panel here. But with that, it's a wrap on this edition of the Policy Bazaar Insurance Show. We will return soon with a new discussion on another interesting topic. Till then, stay safe, stay insured.
CNBC-TV18, the Policy Bazaar Insurance Show.
Presented by Policy Bazaar.
Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Hello and welcome to News Center. I'm Parikshit Luthra. Switzerland has suspended the application of the most favoured nation clause from the bilateral double tax avoidance agreement with India. This will be effective from the 1st of January next year and is expected to increase tax liabilities of firms. The revocation will mean that Switzerland will levy a 10% tax on dividends payable to Indian tax residents and entities. This move comes after the Supreme Court refused to lower the withholding tax of 5% to Nestlé under the double tax avoidance agreement. In a statement, the Swiss government said that their interpretation of the most favoured nation is not shared by the Indian government and cited the absence of reciprocity. Remember, Swiss FMCG giant Nestlé has claimed a lower rate of 5% on dividends and royalties are being paid by the Indian subsidiary to the Swiss parent. To take this discussion forward, I'm now joined by Jayant Dasgupta, former Indian ambassador to the WTO, Mukesh Bhutani, managing partner at BMR Legal Advocates, Prabhash Ranjan, professor and vice dean at Jindal Global Law School. Mukesh Bhutani, if I can ask you first, what kind of impact is this going to have on Indian entities working in Switzerland? Those who have bank accounts there, companies which have business in Switzerland, and also what about those hundreds of Swiss companies which are working in India? How does this immediately impact their functioning and tax liabilities?
Well, I think the genesis of this development has got to do with India's Supreme Court ruling, which for right or wrong reasons took a view that the most favored nation treatment, which is the dividend withholding tax of 5%, is not applicable to Swiss multinationals working in India. What was happening was that when this was going into the dispute, the Swiss authorities issued what they call it as a unilateral direction as to what is their interpretation of the treaty. This was in 2021. And they took a view that the 5% withholding tax is available because the Swiss government was granting the concessional rate of tax to Indian companies repatriating dividends from Switzerland to India. Now, that interpretation has been reversed in a way. Now, what the Swiss government is saying is that whereas we continue to hold that position, which is the unilateral interpretation, but because India's Supreme Court has gone ahead and interpreted the law in this manner, from January 1, 2025, we are going to revert back to India's position, which is levy tax of 10% on withholding tax declared by Indian multinationals operating in Switzerland. That's the issue over here, limited issue. Now, none of the people who have bank accounts in Switzerland are really getting impacted. This concerns only those Indian companies who are operating from Switzerland and they're repatriating their profits into India. Now, while the Swiss has taken this view, the Swiss still holds on to its view that their unilateral interpretation on availability of most favored nation treatment to Swiss multinationals in India is indeed the correct view. Now, whereas they are saying that India is entitled to this view, but this is our view. And hence, that's the reason they are saying that if you read the last sentence, that between 2008 and 2024, we will continue to maintain that Swiss multinationals should be held for withholding tax only at 5%. Now, so in a way, you can say that there is an impasse for those years. And the only way for it to be resolved is the government intervention. And the government will have to be very careful because it cannot go against the law laid down by the Supreme Court, but nothing stops them from getting into a diplomatic agreement on how they should be looking at interpreting this clause.
Right. Prabhash Ranjan, the MEA was asked this question and the spokesperson said that because of the EFTA agreement, the double tax avoidance treaty with Switzerland will now have to be renegotiated. Is there a way out? One of the points that the Supreme Court had made that DTA cannot be enforced until notified under the IT Act. Can the government make certain amendments to the IT Act now to make sure that we are not hit by an increased tax liability? Is there any way out of the Supreme Court judgment and to resolve this matter with Switzerland?
Yes, there is a way out. As you rightly said, that
The reason why Supreme Court interpreted the law the way it did is because India has not made a notification under Section 90 of the Income Tax Act. So basically, the Supreme Court took a dualist position, which is that international law is not binding or applicable within India unless or until it is transformed into a domestic legislation. Now, I have a disagreement with this opinion because there are several other Supreme Court cases like Vishakha, etc., where the Supreme Court has said that even if an international treaty has not been transformed into domestic law, it can still be read as part of the Indian legal system. So following that logic, the Supreme Court, in my opinion, should have upheld the Delhi High Court decision. But be that as it may, a remedy is still possible if India decides to issue a notification. I mean, the government decides to issue a notification under Section 91 and implement the MFN provision that we have in the double taxation avoidance agreement. But that would also mean lowering down the tax rates, not just for Swiss companies, but also for other countries who are not OECD members then, right? So whether India is willing to do that, we'll have to wait and see.
Right, that's an important point. Mukesh Bhutani, do you also believe that if a notification is made by the IT department granting the same MFN status to Switzerland in the IT Act, can matters be resolved there?
Well, first of all, let's try and step back as to why this has become such a controversial issue. For all these years, the way courts interpret it, and when I use the word courts, I mean the tribunal and the High Court, was that you do not need a notification to confer the benefit of most favored nation clause. This was the principle that was established by the court. In fact, the Union of India didn't even appeal to the Supreme Court. This question has come up only after the Supreme Court has reversed the Delhi High Court judgment. So now what multinationals are saying, particularly those who are entitled to the most favored nation treatment, which are really multinationals from Switzerland, Netherlands, and France, are that this decision of the Supreme Court does not augur well. It goes against our interests and it goes against the grain of what we call it as a good faith principle interpretation of the treaty under the Vienna Convention. That's the first point. Now that the Supreme Court has taken this view, until and though, as Dr. Ranjan pointed out, though it's circumspect whether that's the correct view or not, because there is friction being caused with a larger bench of the Supreme Court decision, but be it the way it is, now that the Supreme Court has taken that view, the lawmakers have an opportunity to intervene. They can intervene, one, by saying, Supreme Court wants us that the MFN clause gets kicked in only after a notification. Here is the notification. It ends the controversy. The second is that you actually look into it and exercise the discretion of the parliament, because the parliament is more supreme than the judiciary. That's the other way of looking at it. That's the legislative process. The third is an offer that has been made by Switzerland, where in the last sentence, they have indicated their desire to renegotiate tax treaty with India. Now, when you renegotiate a tax treaty, it always has a prospective application. Nothing stops two sovereign governments from saying that the Supreme Court may have perhaps misread, and hence it should apply retrospectively, because that will completely end the controversy. So there are various options now available with the lawmakers to be able to resolve this impasse.
Right. Mr. Jayan Dasgupta, do you also worry that the Supreme Court's judgment in the Nestle case and Switzerland's action revoking the MFN status for India and saying that the concessional 5% tax rate won't be applicable, you will be facing the 10% tax rate? Now, other countries with whom India has a similar agreement could follow the Switzerland example?
Well, I would just like to say a few words about how this came about. In the 2000 protocol, following the 1994 DTAA with Switzerland, there is an Article 11, which is the MFN clause. Now, that says that any agreement signed after February 2000 with any other country, which is already a member of the OECD, if that rate for withholding tax, that is the implication, is lower then it will automatically be available to the India-Switzerland DTAA. And in terms of the India-Lithuania agreement and the India-Colombia DTAA, which were signed respectively in 2011, and also, the Lithuanian one came into force in 2013, the other one came into force in 2014. Now, these two agreements offer the withholding tax at 5%. And Lithuania acceded to the OECD only in 2018 and Colombia in 2020. So, in a way, I don't really blame the Supreme Court for having said what it said, because I think the OECD, the interpretation of the protocol also can lead to this conclusion which the Supreme Court has arrived at. The other point is very valid, Mr. Bhutani has mentioned and Dr. Prabhash Ranjan has also mentioned. It is not something which is insurmountable. Section 90 notification can be made, but Section 90 only gives effect to the terms of an agreement. So the terms of the agreement can obviously be negotiated again, and a clarification or a proviso can be put in. So that is not the problem. I think the major problem is that if we reduce for Switzerland the withholding tax to 5%, what implications will it have in respect of the DTAs with other countries, where maybe there is an MFN clause, maybe there isn't an MFN clause, because everybody would then like to renegotiate and bring it down to 5%.
Right, that's an important point. Professor Ranjan, do you believe that some way India may have to take the legislative route to pass a law to remove any kind of confusion, anomaly in future agreements or also in existing agreements?
Yeah, just a quick reflection on what Mr. Dasgupta said. I think it's important to recognize that treaty terms are not frozen in time. The very rationale why countries include MFN provision in their bilateral treaties especially is to ensure that if any benefit in the future arises, that benefit would come to them. Otherwise, the MFN provision will lose its relevance. So even if a country was not an OECD member at that time, but became a member later, it is arguable whether you can argue that MFN will not be applicable or the benefits will not be extended to that country. Now, I also want to raise a larger point, because this, I think, is not just about tax treaties, but this we also witness in investment treaties. India has been looking at the MFN provision in bilateral treaties from a very host state perspective. It looks at these provisions only from the point of view of benefits that would bring to the host state. It forgets or kind of ignores the impact that this would have on Indian investments abroad. I think it's important to recognize that this episode is a grim reminder that MFN is a two-way street. If you do not give or if you do not promise non-discrimination domestically, then be prepared to face discrimination overseas for your own investors.
Right. That indeed is an important point and a grim reality for the Indian government, as you're pointing out. Thank you very much, Ambassador Dasgupta, Mr. Bhutani and Prabhash Ranjan for joining us with that very important perspective. Let's wait and see what happens in the days to come. But we are told that the government, that is the Ministry of Finance and Ministry of External Affairs, are thinking of a way out of this entire problem right now. We're taking a short break, but coming up on the other side, the youngest chess world champion Gukesh returns home to a rapturous reception at the Chennai airport. A special discussion when we return.
and then go home.
Welcome back. You're watching News Center. D. Gukesh has become the youngest chess world champion after beating reigning champion Ding Liren. Gukesh defeated Liren in the 14th and last game of the World Chess Championship 2024, which was held in Singapore. Now, the Grandmaster won the final game with the black pieces after Ding blundered in what was considered to be a comfortable position. The 18-year-old is 4 years younger than Garry Kasparov, who had been the youngest world champion from 1985 when he beat Anatoly Karpov. Gukesh is only the second Indian after Vishwanathan Anand to claim the world title. All right, we've got a special guest with us this evening. We're now joined by Dibyendu Barua, India's second chess grandmaster after Vishwanathan Anand. Mr. Barua, thank you very much for joining us on the phone on News Center. You were all of 12 when you became the youngest participant at the Indian Chess Championship. Any similarities that you've seen with Gukesh's journey?
No, not. Yeah, of course. I mean, he's far, far ahead. And the young generation now, it is completely different. Yeah, what I started playing in 70s, and I qualified for the nationals in 78. But this is far beyond. So it is something different. Yeah, it's completely different.
It's something different. We saw Gukesh breaking into tears loudly after winning that match. Give us a sense of the kind of pressure one goes through while playing at that level, while competing at that level.
Yeah, of course, there are too much pressure because he was playing a one versus one world championship match, and this was his first appearance in the match, and as a youngest challenger, and there are 14 games as we all saw. The first game he lost, then he came back on the third game. Then there were a series of draws. Then he won on the 11th game with white. Then again he lost on the 12th game. 13th game was drawn. He was having a better position. Somehow he missed it. And then the final game, 14th game, actually the moment where he won, I mean, Ding blundered. we never expected that such kind of blunder mistake from a world champion. Even I'm sure that Gukesh was also not expected to win, but he was kept on playing just to make him, tired. And Gukesh is young. Gukesh has got so much young blood, so too much of energy, and he always takes risk. So the moment Ding made the mistake on 55th move, Rook F2 on the 14th game of this match, and I think he also could not expect. He was surprised. Everyone was surprised. Everyone was shocked. And then he realized that he's winning. So it is something different feeling,
Yeah, absolutely. Mr. Barwa, what I'd also like to ask you, the likes of Magnus Carlsen had some criticism. They said this game looked like a second round or third round match of an open tournament. There were other players also, some notable names, who questioned how the Chinese counterpart, the defending champion, had almost given away the game. What do you feel about such kind of criticism on statements being made about the quality of the match?
Yeah, okay, it is individual comment, so I don't see anything wrong, but it is their individual wish. But okay, obviously that everyone, even we also shocked after seeing the Rook F2 move on the final game. But I think it was due to the pressure. It was due to pressure. Ding was not at all form for the last few months, whereas Gukesh was in very, very good form for the last 6 to 8 months. He won the candidates. He led the Indian team in the Olympiad, we won both medals in the men and women. He also got the individual gold medal. And so Gukesh was absolutely, he was far, far above than performance-wise. And that's why I think made lots of pressure on Ding. And when he saw that person was absolutely draw, so he could have played any move. But I think he wanted to finish the game immediately by playing Rook F2, so that he thought draw, and then they will proceed to the tie-breaking matches, games. So somehow I think under the pressure he made that mistake.
Okay, you feel that the Chinese counterpart made the mistake under pressure. I'd like to ask you about the cost of competing at this level. Mental pressure. Mr. Baru, I'd like to ask you about the cost of competing at this level, the training, the practice that one has to go through. You, of course, have to have the right coaches, the right experience. You had your own set of challenges when you were an aspiring chess player, when you were rising up through the ranks. I'm sure Gukesh has had his. Could you give us a sense of the financial challenges a player has to go through and the entire cost exercise involved now in today's day and age?
Yeah. In today's days, it is required absolutely when you are competing in the national or even competing in the international level. Definitely, you need to have lots of sponsorship. Otherwise, it's not possible. And that too in the high voltage match like in the World Championship. In our generation, there were no concept of having seconds. Now the World Championship match, even other tournament also. In the candidates and other important tournaments, players, they hire seconds. Seconds means that the coaches who are working behind. So there is lots of costs involved, and you need to have a good sponsor. Otherwise, it's not possible. It's a huge money, because if you have seen after the match is over, Gukesh revealed the seconds who were working on for him, and you could see that I think 8 or 9. People were there, including Viswanathan Anand and including that Upton, the Australian guy. So it was obviously. So maybe he must have spent few maybe crore, or maybe somewhere around 50 to 60 lakhs, or maybe more. So it is a huge amount involved, and definitely you need.
Mr. Baruma, final question. We're running out of time, but do you believe this is now a breakout moment for Indian chess and those aspiring to rise on the world stage?
Of course, India is going to rule as everyone was expected. Carlsen said few years back that India is going to rule, and we had the world champion Viswanathan Anand, our first icon, because of Anand, now these young generations, they have come up. And now, Gukesh is the new idol, new icon for the young generation. And definitely this will give the next level. Chess will go to the next level. And all the youngsters will now be motivated, be more inspired by this result. And of course, the parents also would now put their child in chess, definitely.
Okay. All right. Thank you very much, Mr. Barua, for joining us. So let's hope Gukesh's victory inspires many more Indians to do well on the world stage in chess. That's all we have time for. Goodbye.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
His tabla virtuosity cast a rhythmic spell on music enthusiasts across the globe. A colossus in the world of music, his humility left an indelible mark on those he met, just as the fluttering of his fingers mesmerized the audience for over 6 decades. India's musical ambassador to the global stage, he exalted the tabla from an accompaniment to a solo act. And even as his heart stopped beating at 4 p.m. San Francisco time, bringing an end of a 2-week battle against a lung infection, Ustad Zakir Husain's tabla beats and his rich legacy would continue to inspire generations and generations of music. Today, we celebrate the life and times of Zakir Hussain on our special broadcast, Wah Ustad. A lot of lives he touched personally and professionally, millions of people who were listening to music, and more importantly, a lot of people who came in touch with him as audience members and as musicians as well. We have a bunch of people joining us on the show today. We have composer Shankar Mahadevan joining us on the program, music composer Salim Merchant as well. We have the Santoor exponent Rahul Sharma, incidentally with whom Zakir ji did his last tour. Sitar player Purbayan Chatterjee also joins in. And we also have with us tabla player Aditya Kalyanpur. Aditya Kalyanpur, a tabla virtuoso in his own right, but also one of them who is has the rare distinction of being a Ganda Bandh disciple to both Ustad Allah Rakha and Ustad Zakir Hussain as well. A person known as the little boy who was there in the Wah Ustad ad as well, the Wah Taj ad as well. Let's go across to Shankar Mahadevan first. Shankarji, I know you've been watching Zakir Bhai as a child, and thereafter you idolized Shakti and all the concerts that you went for. From that period to the time when you actually met him, played with him, was a part of Shakti. All of this over a period of almost 3 decades. What was the one everlasting, overarching quality of Zakir Hussain? We know of him as a great musician, but very few know of him as the kind of person that he was. If you could throw some light on that.
Well, we've been playing and touring for the last 25 years. And if you ask me, one quality that he had is every night, he never failed to surprise me.
Wow.
And every night that the feeling of awe, what an artist, that was there every night, even though we played like 30 concerts in 40 days. Second quality is his humble nature, his compassion towards other musicians. Sometimes he used to just take a step back and just be an accompanist, providing you the platform to showcase your art form, So that shows the maturity of a musician. And just the sound of his tabla, it's never ever going to come back again. So really, really sad. I don't have any words to speak.
We can totally echo that sentiment. Just the sound of that tabla. I personally remember, there was a concert that you had done with him at Shanmukhanand, and you just asked the audience, hey, Lavani, should we play that? And the audience was enthusiastic. Zakir Bhai just strung one beat on the tabla, and everyone was suddenly transported to the Lavani. But what's also interesting is that the personal connection that you had with him, you had the joy of playing cricket with him, a lot of meals that you would share, you all would share as well. And another person on the panel is Salim Merchant. What's interesting is that all three of you all celebrated your birthdays in the first week of March. You and Salim shared the birthdays as well. Salim, I'd like you to come in on some of those memories that you've had with Zakir Hussain.
Well, yeah, there are so many of them. I mean, one thing I definitely echo this thing about Zakir Bhai, that he made everyone feel like a friend. I mean, this father figure, the guru that he is, he'd make you feel like, that you were just very, very special. And not just you, I mean, anyone and everyone. He may be, he or she may be just an intern or somebody working at the studio or something. He'd make everyone feel so special and so loved. That was a very incredible quality about him. And, when it came to food, he was, he always had the best places to go to. He always had the best cuisine that he'd recommend. And I mean, there's one memory of him while I was touring with him during Tabla Beat Science, which was this band, very special band with Bill Laswell and Karsh Kale. I remember we went go-karting and he beat everybody. I mean, he was just an amazing rider, and after that, I remember asking him that, Zakir Bhai, how do you manage so many concerts living in America? And then each time he has to travel anywhere, he has to secure a visa because, it's difficult to, you have to get a visa. But then he said, and I asked him, like, at that time, the Indian card had just come out, that one could get a card, just a Indian origin living, somebody who lives outside of India, but of Indian origin. And I asked him, like, why don't you opt for that? And he just told me something that I'll never, ever forget. He said that I can't give away my Indian passport. It's too difficult for him to submit his Indian passport back to the government.
Wow.
And that really shook me. I mean, imagine each time he has to go to Europe, each time he has to go to the UK, he has to travel to LA, go to the embassy, secure a visa. And he's willing to do that all his life. But he never ever give up his Indian passport.
One of India's greatest sons.
I have so many episodes like that, so many memories of him, telling me so many amazing things. His knowledge about music, in general, about classical music, about Western classical music. I mean, so much to talk about. He has such an incredible, so much knowledge about Western classical music and, about orchestras and about musicians. It was incredible to just be around him.
Right. The thing that you spoke about him not wanting to give up his Indian passport tells you how great a son he was to the nation. Shankarji, coming back to you as well, are there any episodes that you specifically remember, things that, before that episode and post that episode, your life moved into a different direction just because of a simple line that he said? Because that's usually the hallmark of great people. They'll just suddenly say something and you suddenly realize, oh, this was a very, very big thing that they said.
Mangalam, for me, my association with Zakir Bhai has been so close, and we literally lived together, traveled together, ate together, performed together, joked together, backstage, rehearsals. We spent so much time. So every moment that we spend with each other, it's inspiring just to see that how he just comes down to your level and jokes with you. Suddenly he becomes absolutely a funny, comical person. I mean, you just cannot believe this. The same person is a Padma Vibhushan and he's national treasure. You tend to forget that for a couple of minutes, He just jokes around, dances around, sometimes, suggests, as Salim was saying, we have a huge discussion about which restaurant to go, what to eat, and, all kinds of stuff. So every minute that I spent with him is an education for me. And also to remember that however, pinnacles of success you reach, how to remain grounded, how to be a better human being and care for other musicians, and the gift of the instrument that he had. It used to be one person playing one groove, but it was equal to like 100 drummers, You didn't need anything. You didn't need any support. No high perks, no bass, no kick, nothing. It was one groove that he used to play. So just looking at him used to be just fascinating.
From his musical genius that, the world has recognized, decorated, is there anything that you took away personally in your musical journey? Was there something that you, picked and got inspired by from Zakir Husain's music? If you could point out something in your compositions, etc., that's for you, Shankarji. Yes.
Yeah, I mean, all the rhythmic variations that I get in my compositions. And see, he's been an inspiration for me at every stage in my life. So if you see, I try to use interesting rhythmic breaks and stuff like that. all that is education from the maestro himself.
Right. We also have Rahul Sharma joining in. Rahul, thank you so much for taking the time out. I know you're traveling, but there is a circle of life. Zakir ji's first major concert was with Pandit Shiv Kumar Sharma, and as fate would have it, his last concert tour was with you in the US as well. That circle of life, what you saw Zakir Hussain as while he played with your father, to the time when you played with him, and till the last concert that you played with him. If you could give us that experience, what you learned from him, and just celebrate the life of the maestro.
Apart from, of course, having my own father as my guru, there are so many other great artists one learns from. And, Zakir Bhai was one of them. And each performance, I think, playing on stage with him was something you'd take back. You'd wonder how this person, who is so talented, who has seen everything in life, has seen all the success, would be so attentive when he is accompanying an artist on stage. It's not about him, it's about the artist. And the little detail, he may have done it millions of times accompanying various different musicians, but he was so attentive. He was not all over the hall. His mind was not anywhere else, although he has a million things on his mind. But each, if you're playing a particular tal, what we're playing, he's listening to the alap when the tabla is not being played. These were qualities which were completely, of a different level altogether. And his observation level, anything and everything was observed so well. In fact, I remember in concerts, after concerts, there was no talk about music. It was just about everything else under the sun except music. An amazing conversationalist and amazing person to just sit and imbibe from, So many memories right from my childhood when he used to come to my house. He used to host some amazing home parties on my father's birthday, which was 13 January. So I remember Nusrat Fateh Ali Khan Sahab, and so many other great artists coming, and Zakir Bhai would host the entire evening. From that time, when I was about 7 or 8, to this time now, having seen my father on stage with him, and recently, just a month ago, performing with him, it's just a cycle, which is kind of, I have no words. It's pretty amazing to see this an artist of his qualities. It's very hard to come by.
Very hard to come by indeed. In fact, you give me a train of thought here. Shankarji, if you could tell us a little about how Zakir Bhai prepared, because you've spent so much time with him, could you give us a sense into the brain of that genius? Because we know, what was on stage, but before that, how his preparation was and what his thoughts were there. If you could take us through that journey.
Okay, now, here is a man who has been playing for years and years and years, and he need not prepare actually, because it's all there. But before every concert, so that he doesn't disturb the other artists, he used to put a piece of cloth on his baya and chati, and we are all doing our sound checks, and we're creating a ruckus over there on stage. This wire is not working, that in here. He used to be just sitting there, and he used to be doing his riyaz, continuously. Now you asked about his brain. What differentiates a Zakir Hussain from any tabla player in the world? I'll tell you what it is. I've analyzed this. See, there's a lot of learning that you do, talim, as you say. Every tabla player, every instrumentalist, he learns a lot, and there's a lot of information in one's database. Okay, so Gyani, bahut log hain. You got a lot of information, a lot of education as far as your core instrument is concerned. The difference between other players and Ustad Ji was, at that spur of the moment, from that database, which is that information that he needs to draw and present it. And it happens in a split second. So that was his mastery. The spur of the moment, that improvisation, that analysis of what you're singing, and removing that information from his database and putting it out there, that nobody can do. That's why I'm saying tabla will never sound the same again. on this planet.
For our audience, would you be able to give us a more relatable example out here? Like, you were doing a certain thing in the concert and this is exactly what Zakir Bhai did and that floored you on the stage itself.
No, I mean, you tend to take some, complicated variation in your rhythmic improvisation. He catches on to it after the first beat. He knows and he's in sync with you. And you always wonder, how is this man reading you like this? It's almost like mind reading.
Well,
I'm sure that when Rahul also plays, some of the times while he's playing and suddenly he pauses, you see that Guruji has also paused in the same place as if they've been rehearsing for 10 years. I'm so sure, Purban, you agree with me. And you just wonder, how is he read you like this? So he had a different kind of brain and interpretation of what he's playing. And one thing that I've learned from him is that moment, he's there with you 100%. 1 hour concert, 2 hour concert, he's there with me, or he's there with Salim, or with Rahul, or Purban, or Aditya. He's there 100%. After that concert is over, maybe he's completely erases it and goes forward to the next one. But that minute, he's with you, whether he's conversing with you, whether he's playing with you, or whether he's just eating with you or just being with you. He's there 100% with you.
100% present for his co-artists and more importantly for his audience as well. I remember there would be a lot of technical difficulties when a concert is happening, say the mic falls or anything. He would just make a joke of it and continue because he was there with the audience. A lot of time feedback sounds would come, etc. He would just converse with 10,000 people in the audience, with all of them feeling like he's speaking only to them. Speaking only to them, Aditya, you've had the distinction of learning under him, learning under his father. And also, one might not recognize Aditya right now in his current form, but go back a couple of years, maybe a couple of decades, you would remember the Va Taj ad. The little boy who, did play the tabla and accompany Zakir Hussain in front of the Taj Mahal was Aditya Kalyanpur. Aditya, tell us, one, about that experience, and secondly, as a guru, how was Zakir Hussain?
Well, Mangalam, first of all, thank you for having me be a part of this. It's been a very difficult time for me to process, all this in the last 24 hours. And also my pranam to all my fellow senior musicians on the panel here today. And I think he was not only a guru, but also a father figure for me, and an association that goes beyond almost 40 years, So it's been... I know, knowing him, he would want us to celebrate his life. He would want the show to go on. He would want us to cherish all the great, wonderful memories that each one of us have had with him over the last several decades. And he's immortal, and Guru, he was not just for tabla, but he was also for a way of life. A life, that he epitomized humility, as all the others said. His musicality, of course, everybody knows about, and I think just being in his presence for all of us was a learning experience, and it still continues to be. And he has inspired generations just through his charisma, his personality, his very being, his groundedness, as Shankar Bhai said. And I think we are all deeply, deeply going to miss his physical presence, though I think eternally we know he lives on forever. And not a day will ever go by where I can't think of Ustad Allah Rakha, my guru, and Zakir Bhai, because they were truly my gurus in every way of my life. I think they shaped my entire, since my childhood. And I cannot even imagine looking at the tabla and not thinking of them, So he always remains a guru to me in every way of my life. He's always been a father figure. Right. And whatever little I am today is all his blessings and Abbaji's blessings.
Right.
So I am...
You had the distinction of learning from them, but I don't think anyone would, look at the tabla and not remember Zakir Hussain himself as well. But while we're here to, give a tribute to his passing, we're also here to celebrate the life that he was. So let's talk about some of the happy memories that we've had with Zakir Hussain, and I'm sure a lot of people have had a lot of them. Shankar, you did speak about some of the jokes that he would crack. You want to talk about that and maybe, lighten the mood a little bit? We celebrate his life as well, because that's how he would like it too.
I mean, humor was his very strong point, and all of these people in the panel, I know that they've all experienced how much we have laughed. We are only half the time only laughing. You
want to share some of those instances?
Yeah, I mean, so many of them actually. I invited Zakir Bhai and John G to come, and I wanted to get my doctorate in their hands. So I invited them to Birmingham. They came over there, and then I still remember that they wore the robe along with me. Three of us, we wore that robe, and once the robe was worn, we were doing this funny dance by raising the legs, and like almost like a Celtic dance we were doing, and we're just cracking up there, and hundreds of such instances. So I mean, it's been a memory that really enriched me as a person and as a musician.
All right, Purbayan, you've had a lot of experience with him as well, playing on the stage with him. One thing I remember, people would say when they were bowling to Sachin Tendulkar that you're not only bowling to get him out, but you're also bowling to impress him. That's exactly what happens when you played with Zakir Hussain as well. You're not only, playing the music to present to the audience, but you're also playing to impress Zakir Hussain. How did he, change the way you played on stage, playing with Zakir Hussain versus playing with others? If you could talk about that and maybe, speak about some of the things that celebrated, that Zakir Hussain celebrated the most.
Well, I go back to a memory from the year 2007. And that was my first time on stage with him in Kolkata back in the day when I used to live there. And I was just in the wings and facing the usual jitters. I mean, I kind of telling myself that, in a few minutes I will be on stage with this larger than life, this person who we have looked up to and idolized so much. And he comes quietly from behind, gives my kurta sleeve a little tug, pulls me aside, whispers into my ear, says, "Look, my kurtas are a little more expensive and a little better ironed, but at the end of the day, I'm just a tabla player." And just little moments like this, there's humor in it, but there is also, I have seen him as such a spiritual guide, and of course the great artist that he is. I don't think I'm even qualified to talk about that in the presence of all these great masters of music, but just how deep he was, and he was one of those people. Look, there are great artists, and then there are leaders. There are people who believe in things. There are people who can carry you forward into the next century or the next millennium or whatever. And I feel Zakir Bhai was one of them. So for me personally, and I think for a lot of us, it's a deep sense of personal loss, like losing a father or a spiritual guru. It's somebody who gave you a sense of tethering, a sense of belonging, a sense of belief, a sense of faith even. I mean, he told me, I remember one of the instances which were a little deep, and it took me a little while to comprehend what he was saying, is he just asked me once, just off the cuff, he said, "Why do you think Ustad Vilayat Khan Sahab or Pandit Ravi Shankar ji or Ustad Ali Akbar Khan Sahab or Pandit Nikhil Banerjee are what they are? Why do you think?" And of course, I knew better, than to give a reply, kept quiet. And I let him answer, and he said, "It's not because of what they play, it's not because of how they play, it's just because of how much conviction they have in whatever statement they're trying to make." And that takes me to what Shankarji said, is that, there's one thing that Zakir Bhai taught the world of music. It was to be in the moment. It was to live the moment, in the words of Steve Jobs, as if it were your last. And when then he could move on to the next moment and live that moment as if, that was a complete separate, entity unto itself. There's so many little things. There was humor. I have not seen a more well-rounded individual in my life. I can safely say that. And there is, it is incredible how many of us feel like he was a guru or a mentor. You may be a musician. You may even not be a musician. You may be from some other walk of life, but he was still a guru for you.
He was always a guru. Salim, coming back to you, I mean, if there was a musical tribute that you would like to give to Zakir Hussain that would, celebrate his life, what would that be?
Wow, that's a very tough question, Mangalam. He was such a complete musician. His knowledge about cinema, about film music, about classical music, fusion, jazz, whatever. It would be a very, very difficult piece to write. But yes, one thing for sure that he definitely enjoyed all sorts and all forms of music. I remember that there were, we had such amazing talk about the incredible Mickey Hart, who he really, had a great time with as well, and all his collaborations with Bella Fleck and Chris Lloyd and so many incredible international jazz artists. That is something which is another facet of him. So yeah, a tribute definitely would take probably a year of to really maximize his persona. But adding to the stuff that I must say about Zakir Bhai, that he was a big fan of cricket as well. If there was a very important match that was going on, he would barely look at you while talking to you. He'd be looking at the TV screen of what's going on and who's playing and what's the score. And his, even though he's between airports, he's trying to figure out, how did India play and, what was the latest score and all that stuff. So, his love for sports, especially cricket, was really amazing. And that's how his friendship with Sachin Tendulkar was pretty incredible. And his one thing he would ever, whenever he walked into the room, it's not like there was a ball of energy that suddenly walked in, his humor, he'd make everyone feel comfortable, but at the same time, he'd also make everyone not a little, but quite in awe of him. You cannot miss his aura, his love, but at the same time, his simplicity of being an amazing human being. We all know him as a great ustad, a fantastic musician, composer.
Right.
But what an amazing human being he was. I've learned so much from him.
No two ways about how great a human being he was. I have to tell you this. You spoke about cricket. He would say that, his father never scolded him when it came to music. The one time he went out to play cricket on the beach with his friends, when he was a young boy, his father came and gave him one tight slap. He was very, very scared. He's like, what exactly happened? And that is when his father told him that, you have to be a responsible child. You cannot let anything happen to your fingers. And that is what told you, geniuses are made out of sacrifices. It's not about what you do. It's also about what you don't do. Shankarji, I have to ask you this. Which of your songs did he like the most, he enjoyed the most? And if you were to, give him that vocal tribute, if you would.
Oh my God. We used to travel a lot by bus because we used to have long bus journeys, 8 hours, 10 hours, 12 hours. So that was one opportunity where I used to play my mixes or, something that is recently released, some film song or some, non-film song, some piece of music. And he used to listen to it and, appreciate every single, thing that piece of music that I played for him and give me his blessings. See, I don't want to sing something from what I've composed for him or anything like that. All I would like to sing is Guru Brahma, Guru Vishnu, Guru Devo Maheshwara, Guru Sakshat Parabrahma, Tasmai Shri Gurave Namaha.
Om Shanti is what we can say to Zakir Hussain. We celebrate his life on that. And one of the most amazing anecdotes that he speaks about his life is he, got up early in the morning, heard, the namaz being recited. Thereafter, he went to a school which was a Christian school where he learnt all the carols, etc. And then thereafter, he prayed to Saraswati as well. He was what India was. Salim, we've done Guru Brahma, Guru Vishnu. I would like for Zakir Hussain to be present on this earth. I would like you to, thank Lord, if you could, hum a line of Shukran Allah, because that's exactly what one has to say when they think of Zakir Hussain.
Sure, it's a difficult time right now. And speaking of Shukran Allah, I must say, this song had just released, and I walked in late at Shanmukhananda Hall at one of his concerts, and he was playing a solo, and he just jumped into playing Shukran Allah on his baya, which was, which was just,
yes.
But we thank the Almighty that we have learned. Every single person on this panel and in the music world has a little bit of Ustad Zakir Hussain, because we've learned so much from him. And on that note, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah, Shukran Allah walhamdulillah.
Thank you so much. The heavens are blessed with a new, with a star. Purbayanji, if you could give us a musical tribute of a rag that you could just give some notes of.
Well, I would like to mention that I was incredibly lucky, and even now, Shankarji is also one of my mentors and gurus, and I was incredibly lucky to be able to do this one song during the times of the pandemic, which was called Shiva Shankara. And I remember I had asked Shankarji, and of course he very kindly agreed, and he said, yes, I will do this. And then we were kind of talking about who else we could have on it, and just on a whim I thought I would talk to Zakir Bhai and ask him if he would. So I texted him and he called me back, and I said, Zakir Bhai, here's this song that Shankarji very kindly agreed to do with me, so can we have you do something on it? And in his characteristic fashion, he asked me, what is the something that you would like me to do? And I think I kind of bumbled and I said, well, play some tabla on it. And it's a song that we did, and it's been a very, very much cherished memory. I still have some of the video rushes of when we shot his video or on Zoom, actually, when he was in his studio in California. And it's a little composition which if I may, I'll just hum the first line, but it's sung by Shankarji, who the man himself is here. So it goes like this: Shiva Shankara Mahadeva, Shiva Shankara Mahadeva, Parameshwara Amrita Rupa Karunakara Dhyana Priya Shiva Shankara Mahadeva. It was something that we did during the pandemic.
Our collective prayer will give him a lot of peace, and I can't, I can't think of a better ending than Aditya reciting a couple of tabla bowls for Zakir Bhai, because Zakir Bhai did say that when he was a little child, he was brought home. The culture is to say some prayer in the ear of a newborn baby, and Ustadji Allah Rakha Khan Sahab actually gave some tabla bowl saying that this is my prayer and this is what this son should live with. Aditya, if you could give us a tabla bowl tribute to Zakir ji.
Sure. I would like to recite one of his compositions. Dha din din da din din da din din ta din din da din din did it gig it gig din krit din ag din trit da nak da da na git kat da ka dir git da din ag git da det kat da ka dir git da din ag git da kat it ta ka dir git da din ag git da din din did it gig it gig din din ag din trit da nak da na git kat da ka dir git da din ag git da din ag git da din ag git da din din did it gig it gig din krit din ag din trit da nak da na git Thank
you so much. This has been a tough last 24 hours, but I'm sure that the spirit of Zakir Hussain continues to live on. And since everyone has been giving their anecdotes, I would like to thank all of you all for joining in and celebrating the life of Zakir Hussain itself. an anecdote that I have to tell as well. This one time I got the opportunity to meet him before a concert, and he was obviously busy with his pre-concert preparations, as all these guys were talking about. He had just enough time to grab a sip of coffee. It was then that a gentleman much elder than him entered that room. Zakir Bhai was not only courteous enough to get up from his chair and escort him, he was profusely apologetic about something as simple as even consuming coffee in front of him. And I quote Zakir Hussain. He said to the elder gentleman, "Maaf kijiyega, main aapke samne coffee peene ki jurrat kar raha hu." Those were his exact words. And he did not sit till the gentleman was in the green room. That tells you about the respect that he had for the elders. We'd meet each time with the promise of an on-record interview the next time he visited. Alas, that day never came, and the regret of not doing that is something I will forever have. May you rest in rhythm, Zakir Hussain Qureshi, because that's where you find peace. Stay with us.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Have with us someone who's among the first few names when you think of music. Ustad Zakir Hussain, thank you so much for being on our channel, sir. Thank you so much.
Oh, it's a pleasure to be here.
Thank you. How are you doing, sir?
I am doing fine. I'm in India, my home. It's the month of Guru Purnima, where we celebrate and honor our teachers, our gurus. And so I just finished a tour with our group Shakti. We are celebrating our 50th year.
Right.
And our new record just came out. It's called This Moment.
This Moment.
It's
I'm
called
so sorry,
This Moment.
yes.
And so the tour was successful, and I'm home. And in spite of jet lag, it is great to be here, and looking forward to playing, celebrating Guru Purnima with my Guru brothers and sisters, and remembering my father, our Guru.
Yes, sir.
And also to doing the new piece for the new season of the Symphony Orchestra of India,
Right, sir.
here at NCPA.
Right. Coming to Symphony Orchestra of India, sir, you've been associated with them for a very long time.
Mhm.
Can you tell us what can we expect from you this time?
I have had the opportunity to compose one piece for them before. It was commissioned, and it was called Peshkar. That was out and out a rhythm-oriented orchestra piece.
Right.
But this one is much more melodic. And the reason for that is because two of the finest young instrumentalists of our country, Niladri Kumar Bhai, sitar player, and flute maestro Rakesh Chaurasia, are part of this. They've agreed to do it. I'm really very, very happy and thankful to them. And so there is much more focus on the melodic element, and therefore a much bigger challenge when it comes to working raga modes with the Western sensibility of harmony and counterpoints and so on. And so I feel that if there are any two musicians in the world of Indian classical music who can adapt to that kind of mindset, where they can interact with their Indian music sensibilities, with Western harmonies and counterpoint-oriented orchestral composition, then Rakesh Bhai and Niladri Bhai would be the two who would do that. So I'm happy that they agreed, and grateful to SOI for, offering me to do this piece again. And after we premiere it here, we're going to take it to England and play it in 3 or 4 different cities there.
Wow. Wow. So you've been playing across different platforms, different stages, different countries. At any point in your career, have you had an experience where you had, you met with a different perspective of music, a different culture, and that has stayed with you for a long time?
There are elements of every genre of music, and therefore cultural, how should I say, background of that genre of music that has appealing qualities. I mean, one of the most important forms of American music is jazz.
Right.
It's the one form that was invented in America. So, and it's world over recognized. So that coming into play with Indian music is something that is of enormous appeal to me. And one of the things that is very interesting between the two music is you can say they're cousins. And the reason being that the main core of their creative process is that they both rely on improvising. And so improvising means you have to create spontaneously. And that's one of the reasons why there is much more collaboration all over the world amongst Indian musicians and jazz musicians.
Correct.
And it happens a lot. So that's great. And so that stays with me a lot, the jazz ideas and folk music all over the world. When I hear the Bulgarian choir, or when I hear the Gregorian chants or flamenco, and how to say country blues.
Correct.
Those kind of stuff, bluegrass and stuff. This is music that comes from the earth of that region.
Correct.
And therefore it has this organic appeal to it that refined form of music has to use a bit of in order to be able to make it a much more systemized form. So therefore that is something that I look forward to, and it always stays with me. When I go to different parts of India, I love to listen to the folk music of that part of the country, whether it's Rajasthan or Punjab or Bengal or Assam or Kerala or anywhere.
Turks at 21. Only on CNBC TV 18 and CNBC-TV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
You're watching CNBC TV18. I'm Arundhati Ramnan, and here are the headlines this evening. Sensex and Nifty end lower after a tepid start to the week. Mid-caps buck the downtrend. Rupee weakens to end near record lows against the US dollar. India's trade deficit balloons to a record high of nearly $38 billion. Monthly imports also hit a new peak of $70 billion. Gold imports rise 49% in value in the first 8 months of this financial year. Bitcoin prices hit a new record high as investors await a potential rate cut from the US Federal Reserve later this week. The cryptocurrency has rallied 50% since Donald Trump won the US presidential elections. In a potential relief for auto industry, GST Council likely to rule out retrospective imposition of the 22% additional cess on large utility vehicles, higher taxes to be applicable from July 26, 2023. Sources say Council likely to discuss hiking taxes on old vehicles at the December 21st meeting in Jaisalmer. Delhi High Court summons SpiceJet CEO and Chief Operating Officer in a payment dispute case, asks them to appear in person for the next hearing. However, both the CEO and the CEO posts are lying vacant as of date. Ajay Singh holds the Chairman and Managing Director's post. Bajaj Auto all set to ramp up its EV play with a new electric three-wheeler brand. Plans to launch 5 new Chetak scooters and 5 new electric three-wheelers in the coming months. Targets selling 5 lakh electric vehicles in FY26. More than 50 people, including rescue workers and a journalist working with Al Jazeera, killed in Israeli airstrikes in Gaza. The Netanyahu government announces plans to increase the number of settlers in Syria's Golan Heights. This applies to the land portion that Israel had annexed in 1967. BJP and Congress leaders spar in Parliament as they discuss 75 years of India's constitution. Finance Minister Nirmala Sitharaman alleges Congress amended the constitution only to benefit one family. Mallikarjun Kharge demands an apology from Prime Minister Modi for allegedly twisting the words of Jawaharlal Nehru. Legendary tabla player and Padma Vibhushan Ustad Zakir Hussain dies in San Francisco at the age of 73. He was suffering from a lung disease and was hospitalized for the last 2 weeks. A multiple Grammy winner, Hussain elevated the tabla from an accompaniment to a solo act in the global arena. Catch our special tribute at 5:30 p.m. where we discuss Hussain's rich legacy with contemporary musicians. The youngest chess world champion Gukesh returns home to a rapturous reception at the Chennai airport. Cricket legend Sachin Tendulkar praises the teenager for guiding the next generation of chess prodigies. Those were the headlines that we're tracking for you this evening, but more news and updates continue right here. Stay tuned.
And then go home.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Nuvama Wealth and Investment pumps 100 crore rupees in Oyo through a secondary sale. Sources said this funding values the hospitality major at $4.6 billion. Oyo is looking to raise another 200 crore rupees via secondaries and is in talks with potential investees.
Deal volume picks up on Startup Street. Over $630 million come in the first 13 days of December. Investors have pumped almost $11 billion in 2024 so far, as per data from Venture Intelligence. Interestingly, family offices poured in over $1.4 billion.
The stage is set for over 25 startups to head to the Lal Street next year. The big ones include Zetwork, Meesho, Urban Company, Bluestone, Pine Labs, Aether and many more. 2024 saw 12 IPOs from the startup world.
Bitcoin prices hit a new record high as investors await a potential rate cut from the US Federal Reserve later this week. The cryptocurrency has rallied 50% since Donald Trump won the US presidential election.
Supreme Court orders that all 24 pleas related to alleged anti-competitive practices by Amazon and Flipkart be transferred to the Karnataka High Court. The Competition Commission of India consents to this arrangement on the condition that proceedings before other high courts are also stayed.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, Nuvama Wealth and Investment pumps in 100 crore rupees into Oyo through a secondary sale. Sources tell CNBC-TV18 the funding values the hospitality major at $4.6 billion. Oyo is looking to raise another 200 crore rupees via secondaries and is in talks with potential investees. Aishwarya Anand is here with more. Aishwarya, what are your sources telling you?
Nuvama Wealth and Investment Limited, formerly known as Edelweiss Securities, has acquired shares worth 100 crore in Oyo's parent company, Oracle Stays Limited, at 53 rupees a piece in a secondary market deal. Sources have told CNBC-TV18. The funding values the hospitality major at $4.6 billion, and Oyo is now looking to raise another 200 crore rupees via secondaries at market prices between 53 and 60 rupees per share, and is in talks with potential investees, including Incred. Now, as per sources, these shares are being offered by Oyo's early investors, presenting an opportunity for partial exits while potentially introducing new strategic investors to the company's cap table. It's important to note, however, that even if the valuation has been rising, it is still far lower than the $10 billion that Oyo was valued at during its peak. We had earlier reported that founder and CEO Ritesh Agarwal is also set to invest 550 crore rupees to increase his shareholding in Oyo via his affiliate entity, Red Spring Innovation Partners. Sources had then told CNBC-TV18 that Agarwal is slated to buy another $60 million worth of shares from the company at 42.60 rupees per share, a 45% premium to his last purchase in August 2024. This additional funding will help in financing Oyo's recent acquisition of the US-based hospitality chain Motel 6 and Studio 6. Oyo turned a profit of about 132 crore rupees in the first quarter of FY25.
Thank you, Aishwarya, for those details. Appreciate you joining us. Also on what's brewing, Mumbai-based home solar startup Solar Square has raised $40 million in its Series B funding round. The venture claims the funding marks the largest venture capital raise in the Indian solar sector. The round was led by Lightspeed with participation from Lightrock, existing investors Elevation Capital, Chris Sarka's Lower Carbon, Nitin Kamat's Rain Matter and Gruha's PropTech also invested in the round. To talk to us about the road ahead, joining me now is Shreya Mishra, the co-founder of Solar Square. Shreya, welcome to Startup Street. Now, Solar Square is a full-stack residential solar brand that eliminates middlemen and does solar installations. Take us through your offerings. Also, how are you making it easy for families to make the switch to solar?
Absolutely. Thank you so much for having me here, Shruti. Like you said, we're a full stack brand, and solar is a very unique category, which unlike consumer durables is not a plug and play product like your television or a refrigerator. It's a full solution that goes to a customer's home. And so, being a full stack brand is very, very important so that we control the entire value chain. This includes, procuring over 70 components that go in a solar system, then designing it custom to each home, and each roof is unique in India. And then, taking care of all the government government permits, taking care of high quality and safe installations, and then also helping consumers get financing or easy loans to go solar. And last but not the least, also taking care of the after sales for solar. So because solar is a new category, the solar revolution is just unfolding before our eyes. Every family being a first time buyer has a lot of buyer's anxiety because like I said, it's not a plug and play. So that's why being a full stack brand allows us to control the full value chain and give reliable solution to the consumer. I would say that there are three main things people look for. Number one is hassle-free, solar journey. It can take up to 2 months for you to get solar start to finish. Secondly, reliable after sales and reliable performance. And last but not the least, safety standards.
Sure.
So we've innovated on everything in the value chain.
All right. You've also acquired over 20,000 homes and 200 plus cooperative housing societies as customers across India. Shreya, talk to us about your post-sale solar maintenance service that you were talking about. What kind of feedback have you got so far? And also elaborate on your tech edge.
Sure. So like I said, after sales is extremely important in solar because India is a very dusty country. And when the dust settles on the solar panels, it impacts performance up to 30-40% in just 6 months. Solar Square has a natural edge in after sales service where, as the brand, we've actually introduced the concept of after sales in the residential solar market. This is a very fragmented industry where all the mom and pop installers were in the business of, install and then the consumer takes care of the after sales. But as a brand, we take responsibility of that after sales. We do monthly maintenance for the customer and their rooftop solar. Very much like your car and air conditioner requires regular maintenance. Solar requires a lot more in terms of panel deep cleaning, mechanical checks, electrical checks. So we take care of all of that, Shruti. And today we are the largest operators of distributed solar assets in India with, tens of thousands of homes and housing societies that are powered by Solar Square. So we have dense after sales network, and we've also built an asset monitoring tech stack, which allows us to get real-time data on how much power is being produced on every single home and also diagnose issues and, solve problems when they occur.
Correct. Let's now quickly get to the fundraise, Shreya. You plan to use the $40 million raise to expand operations to over 50 cities from the current footprint of 20 cities. You also plan to invest heavily in technology, talent and brand building. If you could elaborate on each of these plans.
Absolutely. So unlike, your Swiggy, Zomato or quick commerce, which are top 20, 30 city businesses, solar is actually a grassroots revolution. Every home in every tier 1, tier 2, tier 3 city, even rural India will want to go solar. So as Solar Square, we are still in just 20 cities across India. So barely scratching the surface of, just the market size that exists. And through these 20 cities, Shruti, we've already in the last 3.5, 4 years become the #1 residential solar brand in India. And we have disproportionate market share in every single city where we operate in. However, when you look at our market share in India, it's just a sliver. So the first thing we want to do is get into the top 50 cities of India. All the major cities we first want to get to. And of course, this is, like I said, it's a full stack solution, requires a lot of technology and operations excellence. So we're going to be investing in our, technology stack for installation, after sales, quality, all of that. And, as we expand, we also want to invest in branding. We have so far grown with very minimal investments in marketing and branding, but we do want to, we feel ready as a company to start branding and get our brands to more cities and more consumers.
Okay, you also plan to build a state-of-the-art asset management tech stack. I think you touched upon it for remote monitoring and diagnostics of residential solar systems. Tell us what kind of an impact will this have in terms of operational efficiency?
Absolutely. So Shruti, we are the only company in India which has launched a savings guarantee with solar. So we are not just giving a hassle-free installation experience to the customer, we're also taking responsibility of performance of solar thereafter. So we give a 5-year savings guarantee to the consumer. We're the only company in India to guarantee that, which means if there is any deficit in power production, Shruti, we actually pay back the customer. So in a way, it's like you're not just selling a car, you're giving guaranteed mileage. So we're not just selling solar, we're giving guaranteed savings. This is a first in India, and it is because of our asset monitoring tech stack and our dense customer network and dense after sales network that we're able to provide the right maintenance and have the right technology that allows us to deliver this. Without the technology, the cost of giving a savings guarantee can be very high. The liabilities of underperformance of the company can be very high.
Absolutely.
So this is, where we will, our asset monitoring tech stack will come in handy.
All right. One final question, if you would quickly answer that. Take us to your current business growth numbers. What is the current top line and the road to profitability looking like?
Sure. So I had come on this show exactly 2 years back during my Series A. We had 5,000 homes solarized at that time, and now exactly 2 years later, we have 20,000 homes, that are now Solar Square customers. We are currently run rating over 400 crores, and our aspiration, as we expand into more cities and we invest in our growth with this round of funding, is to get to 10 times that size in 4 years or maybe 5. To your question of profitability, we're very close to profitability, Shruti.
Okay.
So, however, in the couple of months, we should hit our first, PBT, neutral mark we should reach. However, as we've raised this funding, we're going to be investing again in growth. But with this round of funding, definitely the ambition is to get profitable in the next, 1.5 to 2 years.
All right. On that note, it's time for us to wrap up this conversation. Shreya, many thanks for joining us on Startup Street today, and keep transforming one rooftop at a time. Thank you so much.
Thank you so much.
On the hot seat today, healthcare startup CureBay has seen a growth of 8 times in gross merchandising value in the first half of FY25 versus the same period last year. Now, the firm's annual recurring revenue came in at 128 crore rupees and is on track to achieve 200 crore rupees by March of 2025. Joining us now to decode their growth numbers and talk to us about their future plans is Priyadarshi Mahapatra, the founder and CEO of CureBay. Priyadarshi, thank you so much for taking time out and being here with us on Startup Street. You are a hybrid healthcare platform transforming the last mile accessibility to high quality healthcare in underserved areas of India, right? You've recorded this 8 times growth in GMV during the first half of FY25 versus the same period last year. If you could sort of quickly take us through what led to this growth and where did you see the demand come from?
Thank you so much for having me on the show. The first thing that we tried to do was to see the full stack this country, not sell healthcare by part. So we tried to go deep into the market using a very innovative hybrid model, which allowed healthcare service providers to connect with us, leveraging our tech platform. And on the demand side, we created a network of clinics, which were all manned by trained and certified healthcare workers, nurses and pharmacists who brought the human touch. In addition to this, what we did, we created a community connect by creating a network of what we call Swasthya Mitras, who were credible people from the local communities who extended our healthcare services to the doorstep of people. I think the secret sauce in our model was how do you leverage technology to get the supply side to participate to bring high quality healthcare services to the last mile? And how do you ensure that you connect with the local community so that you move healthcare in remote areas from just being a clinical service to a community-based healthcare service? I think that has been the cornerstone for driving this full stack healthcare journey for us.
That's your secret sauce, as you said. But you've reached this ARR of 128 crore rupees and you're eyeing 200 crore rupees by March of 2025, right? Are you on track to achieve this? What will drive this growth and what about profitability?
Absolutely. I think, there was a myth that rural people don't pay. And we were absolutely clear that we're going to prove this is an urban myth. Rural has the capacity to pay if you bring them the right quality services and you make it accessible and affordable for them. So we have demonstrated that a model which is based on dignity of care and brings the right services at the right price, people are willing to pay for it. We are completely on track. We believe we will be hitting the 200 crore annualized revenue targets by March. More importantly, you spoke about profitability. That's a topic very, very close to my heart. We operate in a concept called Circle. Circle is a cluster of 50 clinics, and our oldest circle, which we operate in Orissa, is actually hit operating EBITDA positivity in September. And as a company level, if we don't invest into more circles, we will be operating EBITDA positive by March.
That's great. So by March, operating profitability is what you'll get if you don't invest in other markets. But India's rural healthcare market is a $45 billion opportunity, right? So you've taken us through the gaps that you've addressed, but what's the kind of impact you've created for India's rural healthcare delivery? And how affordable are you, considering rural India, like you said, is willing to pay for the right services?
Absolutely. I think today, if you look at close to 400,000 plus patients have received our services. More importantly, almost 70,000 have actually got into a subscription model with us. That means we are slowly moving the needle, not just attending to people who are either in the acute or chronic condition, but encouraging rural India to move towards a preventive journey. a journey which we haven't even seen in healthcare happen in urban markets. So this behavior change, along with the value systems that we're bringing into play, has clearly been driving our growth. And today, the impact that we've created on the ground can be clearly seen, because in our subscription base, almost 65% of them are coming back to us as, recurring as their revenue, as their subscriptions are completing a year. So very, very strong traction we are seeing with the customers in the market.
So strong traction there for the customers in the market. But, if you could sort of give us a sense of your presence. You started, early on, you said Odisha, Chhattisgarh and Jharkhand, right, is where you're present in currently. How many states do you hope to be in by the end of, FY25? And are you looking to raise more funds?
So we are present in Orissa and Chhattisgarh now, and in fact, we're just planning to enter into Jharkhand. We believe we will be raising one more round. We're actually in advanced stages of conversation to close our Series B. Post that, we will be entering 3 more circles, which definitely Jharkhand is going to be one of those markets. Our plan is in the next 4 to 5 years to at least enter 6 states that we have identified and build a network of 800 plus clinics in 16 circles.
Right, so looking to enter a lot more states there from the 2 that you are currently in. All right, Priyadarshi, thank you so much for taking time out and being here with us. And we wish you all the best on these plans going forward.
Absolutely. Thank you. It's my pleasure.
Well, with that, it's time for us to head into a short break. But coming up, B2B and deep tech-focused venture capital firm GrowX Ventures has launched its Fund 2 with a target corpus of 400 crore rupees. Details on the other side.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about
Welcome back. You're still with us on Startup Street. Now, GrowX Ventures has launched a new fund. Ritu Singh is here with us. Ritu, you have Manish Gupta, the general partner at the firm. Tell us more about the new fund.
Well, B2B and deep tech-focused venture capital firm GrowX Ventures has launched its Fund 2 with a target corpus of 400 crore rupees. It plans to write checks of up to 10 crores in seed rounds and up to 30 crores in Series B rounds. It hopes to back about 20 to 24 startups across sectors like semiconductors, defense tech, space tech, alternate materials and advanced manufacturing. For more on the investment thesis, I have with me Manish Gupta, who is the general partner at GrowX Ventures. Manish, thanks very much for your time here on Startup Street. Start by telling us about the investment thesis of this new fund and how soon will you achieve its close and the investors you're raising this money from?
Yeah, thank you for the question. So the thesis is very simple. We are investing in early stage deep tech startups as well as growth stage B2B enterprise tech startups, right? Backing 10 to 12 pretty early stage deep tech, cutting edge, almost first in the world kind of companies and technologies at early stage, as well as going after the more mature growth stage companies that have, bypassed the journey, of building and pivoting and, iterating and have reached a more, a stable state. So that's, the thesis of the fund, 10 to 12 companies at early stage, 10 to 12 companies at, mid growth stage. We are on the path of achieving our first close. Should be able to start investing, from the next quarter. And investors are mostly individuals, family offices, a lot of people from professional backgrounds, consulting firms, global tech firms, Indian conglomerates across the board.
All right. Manish, this fund too has adopted a stage diversified strategy for a change from seed to Series B startups. Tell us about the idea behind this and the sectors or the themes that you're primarily going to focus on.
Sure. At early stage, we are going to focus more on, like I said, seed stage, pre-seed stage, pre-revenue, pre-product, pre-technology sort of, stage companies. We have a decade plus, a playbook there. We have access to the best of the startups. We know how to invest. We have to know how to source. We know how to, exit these companies. At Series B, like I said, I mentioned earlier, we feel, we want to invest when the companies are past that, the value of death, so to speak. There is a gap in Indian market of Series B as an investment, as an investor class. A lot of Series B investing is happening by global funds coming in India and investing, or, a little bit of Indian private equity funds are coming into tech and doing a little bit of fintech, a little bit of SaaS. But, very few people in India are looking at Series B as an asset class, and and very few people have a tech DNA. So we feel there is a bit of a gap area which we want to fill up with that strategy. Now we are sector agnostic across stages, but our focus is we don't do consumer at early stage. It's, like I said, pure emerging tech, hardware first companies. Whereas at later stages we are broadly open to more B2B, more enterprise tech startups. Sector agnostic, but yeah.
Okay, in that case, how soon will you start deploying the money after you achieve the close? And is there anything that is already in the pipeline in visibility? And also, number two, what are your return expectations from this fund?
We're looking to deliver 30 to 35% net IRR to our investors. Something similar to what we have done in the first fund one. In terms of deployment, we are in advanced stages, stage of discussions with technical DD with a few startups in, defense tech, biotech, space tech, and we should be able to finalize at least one or two of deals in the next quarter.
All right. Since 2012, we believe GrowX has made about 46 investments. Give us a sense of the kind of exits you have lined up from this portfolio, if any of your companies are looking to go public anytime soon.
Yes, some of the companies have public listing plans. They should be going public in the next 2 to 3 years. I think 4 to 5 companies should be doing that. As well as we have had multiple exits from the previous funds. We have close to 8 exits from the previous deployments, and we are probably looking at some more exits in the coming quarter.
And any names to share from these companies, Manish?
No, we would like to share this later at a later point.
All right. Before we let you go, since we're nearing the end of the year, what are the trends that you're most excited about, and you're going to be watching out for as the new year starts?
No, so we are excited about cutting edge technology being built by Indian founders, and we are very bottom up. So we react to what the founders are building. When we invested back in AI in 2014, or drones in 2016, or space tech in 2018, we always reacted to great founders building great technology from bottom up. It's very hard for us to do that prediction, because by definition, deep tech is something that has not been done before.
All right. We're all up on time, so we're going to leave it at that. Manish, thank you very much for joining us here today on Startup Street, and we wish you a very happy new year.
With that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Into their businesses from top Indian honchos before putting your money on the line. How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Hello and welcome to this special broadcast. Amazon Web Services recently concluded its flagship summit, reInvent, in Las Vegas. The focus was squarely on Gen AI, with big-ticket announcements from large language models to next-gen in-house chips to ultra servers, all geared towards Gen AI. So what does this mean for AWS? What does this mean for its competitors, the likes of Microsoft and Google? What does it mean for India? I pose these questions to Swami Sivasubramanian, VP for AI Plus Data at AWS. Let me begin by asking you a tricky question, and I'll borrow from some of the mentions that you made in the keynote about Formula One.
Yeah.
So let me begin by asking you, which is your favorite Formula One team?
Oh, wow. Well, my brother will hate me for saying it, but I'm a big Ferrari fan.
Wonderful.
So, because I think he is big into McLaren. So.
Well, that's wonderful. In fact, just a couple of months back, I had the benefit of a conversation with Werner. I asked him the same question.
Yeah.
He said, through and through, loyal to Scuderia Ferrari.
See, Werner and I are on the same page, of course, because we actually, I mean, as you know, I don't know if you know, he hired me into Amazon as an intern. So, and we had built some amazing things together. So, I'm glad to hear.
I'm a Max Verstappen fan, so.
Oh, okay.
But yes, of course, Ferrari being one of the most successful Formula One teams. You mentioned in the keynote as well that Formula One is using the technologies with AWS to, in fact, process the vast amounts of data for seeing what goes faster. And speaking of processing, speaking of technology, let's dive straight into Gen AI. I think that's been one of the key talking points for a better part of the last 24 months. Everyone has been talking about it. So let me ask you this. If I were to ask a LLM, a Gen AI model, on what the biggest takeaways are of reInvent 2024, what to your mind would be the answer?
In fact, actually, I posted, I'm literally posting something every day on LinkedIn and others on what are the big takeaways every day. But I would say the biggest thing, if I were to summarize it, is we live in a very, very crucial inflection point in technology. If you see 10 years ago, AWS pioneered cloud computing. I should say probably more than 10 years ago, maybe like 18 years ago. And we changed how software is done. And how IT industry completely changed because of that. Now, with where we are with AI is, while there is a lot of excitement around like LLMs and models, but what it takes to actually build a highly successful and popular enterprise application and make it actually really useful is way beyond actually putting a single model together. Customers are running into all kinds of roadblocks like how do I deploy this at scale and make it affordable? How do I connect to all my data, not just actually text data, like data sitting in my databases or multimodal data? Or how do I actually now make sure it doesn't hallucinate? How do I build agents? So we have actually worked towards addressing all of these problems today with actually all the innovations we had done in Bedrock. And of course, the other big, I'd call out is, there are a lot of excitement around assistants for coding and for actually like productivity tools. The reality is, just take an example of like coding assistants. Everybody worries about, like talks only about code generation. Well, this is where we have Amazon Q, and Q is the best assistant in the world right now for code generation. But to me, that's not the exciting part. The real developers, where they end up spending is they spend only less than 20 to 30% of time on coding. They end up spending other time on things like testing, documentation, software patching, security analysis, operations, and so forth. So an assistant that only solves the 20% of problem is useless. You actually are basically solving the easy part of the problem. The harder part is the other one. So on Q is the end-to-end software development lifecycle. And we launched for the entire lifecycle. And that is like a game changer for developer. And we have done the same for business user on not just dashboard visualization, but scenario analysis and everything else. And also workflow automation. You can upload a video of what you do on a workflow, and then we will automatically build an agent to do so.
I also want to ask you a question on the big announcement that we had Andy come in on.
Yeah.
I think that's something that took a lot of people by surprise, him being there in person. I, for one, thought it'll be a virtual message, but he was there in person. And he unveiled the Nova family of language models. I just want to get a sense as to what inspired Nova. We already have a very large volume of models which were there on Bedrock.
Yeah.
What inspired this? Was this a move towards a demand that's coming from within the industry, from your customers? Was it a message being sent out to your competitors, the Googles, the Microsofts of the world?
I mean, if you know about Amazon, we don't worry about our competitors. We only obsess over our customers. Our inspiration for Nova is pretty simple. We think the Gen AI space is actually super early, and we have huge amount of experience and expertise in not just building these LLMs. I mean, we have built many of them that even powers the likes of Alexa even long before. The part as we built actually like our Roofer shopping assistant, or our customer service assistant, or sellers and ad assistant, we actually increasingly found more and more on what it takes to, what do I need from these models in terms of price performance, and what modalities do they need to support, what latency do they want. And we had so much learnings on what are these customer requirements, let alone various Bedrock customers we have learned. So this kind of actually informed us on what are the right set of model capabilities you need to actually launch like a very, very compelling foundational model. That led to Nova. And if you see the launch, and Andy actually showed in benchmarks, we are the best in class in latency and best in class in accuracy for many of our models. And this is an area where we are going to continue to double down, because this space is too important for us to actually not innovate.
Let's get a word in from India. I think that's one question that a lot of our viewers will be keen to hear on. You're working with a wide range of customers across various bandwidths, different market caps, different inspirations and motivations. Just give us a sense that when you look at India and you look at the AI aspirations that the country has, what to your mind will this journey look like? What to your mind are some of the challenges? What to your mind are perhaps certain strengths that you believe India has?
I'd say, first of all, I mean, whenever I visit India, I'm blown away by the pace of innovation when it comes to from the Indian startups and Indian ecosystem. I think in terms of actually what, take an example of like what Freshworks was able to do. They are like an amazing company, and what they have done with actually by partnering, they partnered with us, and they were able to build thousands of deep learning models, and they were able to move from what used to take like 2 months to even like few days with SageMaker. And they are able to build their Freddy assistant so faster and so forth. But I have like countless other examples on how companies are innovating with SageMaker and Bedrock, let alone actually we have many customers now leveraging Q to be able to actually move faster in the business. And even in like a remote like education technology sector in the nonprofit world, like what Rocket Learning is doing as an example, that to empower like the 3 million students that I talked about, now they are using AI tools. And again, we are talking about like nonprofit and other companies. They are leveraging AI to further improve the education for actually students in rural areas. And that is like amazing innovation, and I'm very inspired by that.
Any challenges that you see on this journey? One question that often comes to mind is the compute power. India is on a mission to create for AI what it did with the UPI for payments. It wants to create this foundational technology and then provide access to various startup, the innovation ecosystem through that compute power that they're looking to generate. Any challenges that you see in terms of perhaps not having enough compute power, or maybe not having enough talent, AI-enabled talent?
I think when it comes to India, it would be foolish to think we don't have enough talent in India. I actually think especially for a guy coming from Chennai, I would, let alone you've seen so much innovation coming from this space on this front. But I actually think there is an issue of these models are increasingly becoming more and more compute hungry. So you could make the case saying like, how much are we going to invest in compute for in every country and so forth. This is where I actually think there is a transformation and shift where especially we are starting to see many startups, even from India, actually working on fine-tuning these open source models across Llama and Mistral between SageMaker and Bedrock, and they are able to actually build innovative solutions faster. So not all of them need to build everything from scratch, which is a very compute-intensive exercise, and they can actually embrace the open source ecosystem. If you see the history of even many Indian startups, they embraced open source with Linux and they were able to move faster. And I can see that being a real path, but in all fairness, there are also other startups which are building from scratch and they are innovating on AWS, on our GPU and Trainium instances to move faster too. I actually think innovation is going to be unbounded in every layer of the stack.
I began this interaction with a tricky question. I'll end this with another one. And this is a tricky question for you. And also, let me ask you this from the lens of, let's say if we were to ask a Gen AI model that is Chennai Sambar better or Bangalore Sambar better? Which one do you think he would pick? Or which one would you pick?
You know, my wife is from Bangalore, so she is going
That's an interesting
first
one.
time, actually, you made me actually quarrel with my brother. This time, I might get into trouble with my wife, but I'd say, of course, Chennai Sambar is better because I think when it comes to Sambar, Chennai
Well, I
is
did agree
always
with
the
you
answer.
in the first answer, but I definitely agree with you with the last answer. This has been an exciting conversation. There's so much going on at reInvent 2024. We hope to build on this, and we hope to continue to be in touch with you. Hello and welcome back to our special broadcast on the big takeaways from Amazon Web Services flagship summit reInvent 2024 in Las Vegas. With Gen AI clearly in focus, what does the application of this technology look like? I asked some of the biggest AWS leaders in Las Vegas on issues ranging from cybercrime to digital adoption to RBI's concerns on digital readiness of banks to availability of AI-ready talent. I'm referring to cybersecurity, issues of bank fraud, issues of introduction of malware into devices, and that is severely having an impact. Everyone in the Indian government, if I speak, is talking about it in terms of addressing these issues. Are these conversations coming up more frequently now when enterprises, CTOs, CXOs talk to you about wanting to address this issue? Is this subject coming up more often now?
Yeah, so I would say that from an AWS perspective, from day one, we have always said and maintained that security is our top priority. And that has remained unchanged since the AWS first came in the picture to now. And we are actually very glad that because of AI, and especially the importance of the data that enterprises have, they realize now that their data is their differentiator, right? Sure. That data is going to help them stand out when they apply AI from their competition. And this is why they are a lot more leaning into protecting that data and asking us the questions about security. How can they actually learn from what we have seen with other customers? How do we actually embed the culture of security into AWS and how we think about and build it so that they can actually benefit from that as well? So yes, these conversations are coming up a lot more, and I think we are all better for that because security is a team sport, and all of us actually leaning into it, customers, partners, AWS is going to actually help our end customers be a lot more secure.
Fair enough. We are at reInvent 2024, so let's talk about some of the big announcements. Andy Jassy, a big surprise. I think everybody was taken aback a little bit, and he again made big announcement in terms of unveiling the Nova family of Gen AI models, embedding it in Amazon Bedrock. The question I want to ask you is, what inspired this move? The reason I ask you this is because Bedrock already had a vast suite of models which were already there. The question I want to ask you is that, is this geared more towards perhaps addressing industry watchers and market sentiments? Because that is something that the markets were watching for in terms of where Amazon stands vis-a-vis the competition, the likes of Google, Microsofts of the world. Or is it geared more towards perhaps the developer community, towards more enterprises?
Well, look, it was great to have Andy back. As I was telling you earlier, this is my 12th reInvent. I attended first 6 as a customer, and having Andy back again was fantastic. This is the announcement about new models is driven by what we are hearing from customers. Majority of the customers who are building on Bedrock and generative AI applications are actually using more than one model, because we have firmly believed, and we have said that from day one, that one model will not rule them all. Because based on the use case, based on the problem you're trying to solve, based on the parameter out of this triangle of accuracy, performance, and cost that you're trying to optimize, you might want to use a different model. And customers want to have choices. And this is why we were being asked by our customers to provide more choices in terms of our own models, while also making other models available in Bedrock. So this is really in response to what customers are asking us to do. And we believe that we have some amazing models in Amazon Nova family where